right. Hey, good morning, everybody. Welcome to another edition of the MetaStock Traders Summit. We are so excited to have everybody here today and have our presenters who are here today with us as well. My name is Kelly Clement. I'm your YouTube host. I'll be doing all the work here in the background, while Jeff Gibby is our MetaStock host and will be helping introduce our presenters today, talking to you about what's going on throughout the summit. So welcome to everybody again. As we get started, let me introduce who MetaStock is. MetaStock, we are purveyors of technical analysis and charting software, but on top of that, we also love to provide education. And that's what we are here to do today, is to provide some education about the market, talk to you about what's going on out there in the market, and also teach you about some great trading techniques that you can apply in today's market. So as we get started, one thing I'd like to do before we get started is just showing you a quick video introducing you to MetaStock, who we are and what we do, and then after that we will be very close to getting started with today's summit. So let's start there.
Stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, well, there is a brief introduction to MetaStock, who we are, what we do. Now, what I'd like to do is just quickly show you our lineup for today's speakers. So let me just show you that screen here. Okay, so here is the Trader Summit page. If you want to go to MetaStock.com, click on the banner on the top of the homepage. This will actually show you a list of everybody who's speaking today, what they're speaking about, so you can learn a little bit more about each presenter. We'll be starting with Barry Burns here this morning. He'll be our first speaker. We'll have Rick Sadler, Fausto Pugliese, Guy Cohen, Ed Downs, our own Jeff Gibby, Larry McMillan, and Hema Reddy. So these are our speakers for the day. It is going to be a great lineup. One of the things each of these presenters do is they actually give away a bonus item for attending. Now what you need to do is, if you want one of these bonus items, you actually need to go to metastock.com, click on that banner on the home page, and then register for the event. You can still watch it here on YouTube, but that will give you access to these bonus items. So that is something that you'll want to take advantage of as soon as possible. Okay, so we are about 2 minutes away from starting. Again, my name is Kelly Clement. I am your YouTube host. This morning we'll have Jeff Gibby being your summit host today, I guess is what we would say. Our first speaker will be Barry Burns. I'm actually going to go check with them, make sure that everything is up and running and ready to go for our start here in about 2 minutes. And I'll be right back with you before we get started. Well, we're not starting in 59 minutes. I'll turn that off. I apologize. We'll be getting started in about 1 minute. We're just working through one quick issue with Barry Burns, our first presenter today, and then we'll be getting started. So I am going to turn off that timer clock. Well, it doesn't want to turn off, so let's see if we can turn that off. But we'll be getting started in just 1 more minute here, so ignore the clock at the bottom, and I will be right back. Okay, it looks like Barry is just about ready to get going, so I apologize for the delay, so just one more minute here, and we will be getting started. Yeah, I agree on my side too. Oh, well, Jeff. Well, no. Let me go ahead and start it on the YouTube side. We're not there yet. Give me 2 seconds, and then I'll jump right back. Okay, sorry about all that delay. We are ready to get started, so let me go ahead and get everything started on here, and we will be right on with the Trader Summit.
Needed, but hey, we're transparent here at least, right? So in any case, we're ready to go. Welcome, everybody. Hope you're doing well. Thanks for coming. I appreciate it. I hope you're enjoying the summer. I hope you're having good trades. Hope you're enjoying the the bullish market that we're having. And I just love summer. I hope you're enjoying it as well. If you're watching this on GoToWebinar, welcome. It's good to have you. If you're watching on YouTube, it's good to have you here too as well. One thing we would ask you to do is like and subscribe. It helps a lot, and we appreciate it, and I understand it's worth karma. So in any case, today I'm going to start with a legal disclaimer, just get that out of the way, and then we'll get straight to the action. Today's demonstration is designed to instruct you on using MetaStock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So because because we started just a little bit late, I'm going to go a little bit quick here. I do want to thank our sponsor, Stocks and Commodities, straight out of the gate for supporting us, for being a sponsor of the Online Trader Summit for like the 8 years we've actually been running Online Trader Summit. I can't believe it's been 8 years now, but they've been a great sponsor. They're when you registered for the summit, if you did on GoToWebinar, it gave you an option to get a free magazine. I'd recommend you take that. If you're watching us on YouTube right now and you go to metastock.com/traders-summit, you can actually fill out a registration form. There's a lot of really good freebies, including a free magazine. You can go ahead and get a free 1-month subscription to Stocks and Commodities magazine. And even Barry, our first presenter, has some bonus, like the rubber band trading course. So go ahead and go up there, get registered, get your freebies. There's a lot of really good stuff up there. And thank you for Stocks and Commodities for supporting the event. We here are MetaStock, yeah. We do software. We've been building software for, well, since the 80s. It's been rated #1 27 years in a row. We do have an offer where you can subscribe to a month of MetaStock and get the second and third month for free. We're going to talk about MetaStock all day long. Most of the charts are going to be in MetaStock. All the presenters are using MetaStock, but it's a great software program. I wouldn't trade without it. And that's who we are. In any case, our first presenter today is Mr. Barry Burns. Barry has been, I consider Barry a friend. The feeling may not be reciprocal, but he does have a very, very interesting way of looking at trade setups. He likes to talk about kind of the method that he uses as a going to court type of a methodology. He does a really, really good job. And he's been a longtime friend and partner of MetaStock. So, Barry, that's the introduction I'm going to give to you today. Hope it was all right. Let's go ahead and I'm going to turn the presentation over to you. So let me just make you the presenter here. How are you doing this morning?
All right, Jeff. Thank you very much. I'm doing great. And you are always great. And I just love working with you and with MetaStock. It is Let's see, I'm just trying to talk and bring up my slides here at the same time, which is difficult for someone of my limited abilities, but let's see. Yeah, it's not wanting to do what I want to do. That's okay. I'll just show my whole monitor over there.
We see it.
You see it?
It's coming through. Looking good. Yeah.
Rock and roll. And by the way, the feelings are mutual. So, yep, you have been a great friend and just amazing. Our relationship has spanned the years. I don't even know how many years it's been. But even before we were with MetaStock, I was with MetaStock as a user, and it was the very first software that I ever used, and I still use it to this day. So I want to thank you for that. That's part of the reason that I'm come on board to do these. And also I want to say Stocks and Commodities Magazine. I've also been a subscriber with them for more years than I can even remember, and look very forward every month to getting the magazine. It is
muted,
and I thoroughly enjoy it. In fact, I think at one time I had like 3 subscriptions to it because I keep subscribing and forgot that I subscribed for like 3 years, so I do it every year. But I love it. All right, so we are here live. This is exciting. Let's see who we got. By the way, if you want to type in any questions during the presentation, I am here. I can see your questions both in GoToWebinar and on the YouTubes. This is so cool. I've never done one on YouTube like this before where I could actually see the comments live and in person. Uh-oh, Mike can't hear. Oh, he left. Okay, so he'll probably come back here. So let's see who we got here. Let's just check in, and we got Vincenzo. Oh, that's my my stepson's name, Vincenzo. Is that you, Vinny? I don't think so. Different Vinny. Greg Komorebe. Boy, I apologize for mispronouncing names. I hate that. If you would just type in that you can hear me. Okay, let's do that, because we had a little problem with my camera, my webcam, so we did have some technical difficulties. Mike's back. Awesome. Mike, can you hear me now? This is Barry Burns now. I'm the first presenter. Just want to make sure that you can hear me and that I'm not just talking to myself. And just type in yes. Somebody type in yes in the YouTubes, wherever. There we go. Okay. Yay. Good. Very important. We make sure that you guys can actually hear me. So Mike, Michael, Gary, Brandon, excellent. Okay, that's what we needed. Thank you, Mark. Appreciate it. All right. So let's get this party started. I have limited time here because we've got a lot of good presenters, and I make sure that we give everybody their time. So thank you, Frank. Thank you, John. Love it. Jacksonville, Florida. Yep. All right, Neil. Excellent. So a little bit about me. There's my ugly mug. I wrote the book Trend Trading for Dummies. I've received Reader's Choice Awards from Stocks and Commodities Magazine for my website as well as my courses. I've helped other authors with their books, trading books, work obviously with MetaStock. I've done seminars for the CME group. I've done seminars for the Eurex Exchange as well. High profit candlestick patterns. So, and I'm going to put this up here. Jeff, I noticed a lot of people have come in since Jeff read the legal disclaimer. I'm not going to read this word for word because he already did a great job of that. But just a little quick reminder that these legal disclaimers are not just legalese. I know that a lot of traders don't look at this stuff because you see it so much, and you tend to dismiss it as just being legal jargon. This is really where your education begins. Even if you've been trading for a while, I really encourage you to go back and read the legal disclaimers because they are the anti-hype of trading. And so go in there and find out what the regulators have found about what trading really is about and what does not work. And just, again, really, really, really important. So let's talk about y'all first here real quick. And then since I'm here live, what I like to do is to integrate some of your personal issues with trading, what unique challenges you're having, because each audience is a little different people having some different problems, and integrate it into my presentation today so that I'm very useful for you. Obviously, I have a pre-rendered presentation, but rather than just going through that generically, I'd like to know what some of your struggles are so that I can then remember those and bring those up during the presentation and be as helpful for you as possible. So first of all, just a general question. What are your most common trading problems, struggles, or frustrations? Go ahead and type those in. And let's see what struggles you're having. Okay, so yeah, no, that's a real question. We're here live and in person. I love this on YouTube. I've never done this on YouTube before. So go ahead, I'm waiting for you. I'm waiting. That's right, you got to actually interact here today. Can't just sit back and watch this with one eye and watch TikTok videos with the other eye. Oh no, we're actually going to make you work a little bit here. The more you participate, the more you'll gain from the presentation. There we go. I think there's probably a little delay here. I'm just teasing you guys. So Thomas says 90 equals 90% people blow 90% of their accounts within 90 days. Okay, well, totally know what you mean. And unfortunately, that's, that idea is all too realistic and all too prevalent. So, yep. Michael, misinterpret distribution and accumulation. Okay, well, that's a very important thing. Frank, buying a stock that crashes. Oh, that's interesting. All right, we got to solve that problem. Victor, when to sell. Alistar, a strong trading plan. Very important. Mark, you buy not the good stocks. Okay. Ken, trading in a manner that works with my lifestyle. Ooh, I like that. That's a very perceptive insight, right? You can adjust trading styles to your lifestyle. Very good. Lori, exit strategy, when to get out. Brandon, I would like to request guidance on parameter for a timely exit from the stock. So a lot of people about exits. Mike, traded for 25 years. Wow. Looking for some changes despite happy results. So first of all, congratulations, Mike. In fact, I'd like everybody to say congratulations to Mike here for being a successful trader. I think a lot of us assume that everybody's losing money. Not everybody's losing money. Most people, yeah, they don't make money in trading. But some people do. Mike's one of them who is. So throw in a little congratulations for Mike. So good job. And so Mike is just looking for some changes despite happy results. We've always got, and I love that because that's also an acknowledgement that markets continue to evolve, right? When I started trading, we traded stocks. There were fractions, not decimals. We barely had computers. We didn't have, super high fast internet connections. And now we've got algos, high frequency traders, dark pools, quants. I had to evolve as all of these things came into the markets, because I started trading when I was 8 years old, and I'm 62. That's a long time ago. Okay, so markets now move very differently than back then, and I had to evolve with the markets. So I respect that, Mike. Jen says emotions. Naveen says, where can I see comments from participants? I don't know the answer to that question. I don't handle the technology here, but there you go. So the organizer came in on that one. Brandon, there you go. I love it. Good job, Brandon. Lori, what is happening? Things are silent. Okay, maybe again, administrator can help with that. I'm not sure. Let's see over here in the YouTubes. Harpit says hit stop loss more. Ramesh also stop loss. Oh, okay. Okay, so let me do this. By the way, thank you so much for participating, everybody. Really appreciate that. Now, this is an exercise because what I want to share with you is something else. I did a survey a few years ago, and I asked this question, and this survey went out to over 10,000 people. That's a big sample. And I want to share with you what the most common responses I received. So here they are. Number one, people said, and these were in order of priority. Now I kind of grouped some of the questions together, or the answers together, around common themes. Number one, people said, well, I enter the market. So in other words, let's say they buy. And as soon as they buy, then the market turned against them and they get stopped out, like really fast. And then after they got stopped out, it seemed like right after that, then the market would turn around and go back in the original direction of their trade. And, this is interesting because, first of all, type in yes if any of you have had that experience consistently. You get in, you get stopped out right away, and then after you get stopped out, then the market goes back in the original direction of your trade. My mentor at the Chicago Mercantile Exchange once told me, he says, Barry, retailers are often right, but at the wrong time. And that's what he was talking about. That is an issue of timing. And we're going to address that today. I'm going to show you the tool that I use to solve this problem so that you get in at the right time. Okay, here's a second one. People say, well, I get out of big moves too soon. These are now people who are making some money in the markets, like Mike and a few others, and they're making money, but maybe they're not making as much as they could. So they want to improve. And exits, by the way, that's also exits. Getting stopped out too often was number 3. A lot of you mentioned getting stopped out. Not knowing the best place to exit, that maybe was the most common one. Not knowing where to get out of the market with the ultimate profit. And then trading a trend that doesn't follow through, where you see a trend going up and up and up. And it's like you could sit there and watch that trend. As long as you're watching it, it'll keep going up until you get in. And it just seems like when you get in, well, gall darn it, that's exactly when the trend ends. Almost like the market makers, the specialists, the big whales, they're just watching and waiting for your trade. They're just sitting there and waiting for, okay, when is Mike going to get in? When's Naveen going to join? When is Brandon going to take an order? When is Harpit going to get in? When is Mo Seven Sin going to take a trade? Okay, let's press the red button to the exchange and let's reverse all of this around and take out their stops. Almost like somebody's looking over your shoulder and watching your trades. So my first point here in this little exercise is that if you're having any of these challenges, you are not alone. I want you to make sure you do not feel like you're a uniquely bad trader. There's nothing wrong with you. These are common experiences that almost every trader who's ever entered this journey has had. So first, realize that. Second, realize there are answers to every single one of these challenges. And all of us who are successful at trading, we've gone through these same challenges. We've come out the other side successfully. And I want to share some of those things with you today. The ultimate answer on how to solve all these problems is not just one statement, one sentence, or even just one thing. Successful trading is putting together a methodology. And when I talked about a methodology, or you might want to call it a system, it's not just about one indicator or one candlestick pattern or one moving average or what's the best time frame or what's the best market. None of those questions hold the answer. They're important questions, but what makes you successful in trading is to put together a number of variables that measure supply demand, and those variables should be uncorrelated to each other. They are measuring what I call the energies in the market. Now, what do I mean by energies? The energy of supply demand, the energy of money flow. So I use 5 energies of money flow in the market. And here they are. I'll just mention them real quick. So, and I do them in this order. My trading method is literally a 5-step checklist. Number 1, what's the trend? We start there because we want to know, should we go long or short? Okay, then after that, we go to number 2. Is there momentum in that trend? Momentum is the strength of the movement of that money flow, of that supply demand. Market could be going up on weakness. Could be going up on just a few little retail orders. Okay, there's not going to be any follow through on that most likely, and therefore we're going to get stopped out real quickly. So we want that trend to have strength. And strength means big money coming into the market that's going to accumulate. As somebody mentioned here, I like to give credit where credit is due. Somebody mentioned accumulation distribution, and that's the key. I like that you put that in. That was really good. There you go, Michael. Michael said misinterpret distribution and accumulation. So that was a very smart thing to say, because that's what you want. You want to get in an accumulation where money keeps coming in, accumulating. It's not just coming in for 1 moment or 2 moments or a minute. No, it keeps coming in because the big whales are sizing into a position. That's what causes the market to continue to go up. So that's number 2. The third energy now is timing. And here's where we get to what my mentor said. Retailers are often right, but at the wrong time. So I use a cycle indicator. I'm going to share that cycle indicator with you today. It's a modification of a common indicator, by the way. It's not a proprietary indicator, but I'll show you how to set it up and how to use it. And this is how we time the final swing low to enter, or time the final swing high to go short. Then that's energy number 3. After we do that, then we go on to energy number 4. That's support resistance. That's a blockage of energy. Okay, and then number 5 is the fractals. This simply means that I'm looking at the next higher time frame as well. I never trade using just one time frame. So now we use instruments for measuring these energies. So for trend, again, I don't use any proprietary indicators. I just use a moving average for trend. For momentum, I use a momentum indicator that mathematically measures momentum. Remember, that's what indicators are. They're math functions. Sometimes people put down indicators, and I don't know why. Well, if you understand indicators correctly, they're math functions. They're math functions. The math, well, it's never actually wrong. Math's pretty accurate most of the time, 99.9% of the time, unless your calculator battery is low. Does anybody actually use calculators? I don't know. But anyway, so we use a momentum indicator for that. For cycles, we use an oscillator. I'll share with you in a minute. Support resistance. We use the usual suspects, previous swing highs and lows, wave highs and lows, Fibonacci, floor trader pivots. And for fractal energy, this is really important. I like to keep the ratio between the short-term and the long-term chart 3 to 1 or 1 to 3. Any more distance than that, like if you use a daily and a weekly chart, that'd be a 1 to 5 ratio, and your weekly chart is going to give you really late confirmation signals, too late to make accurate, precise trades. So 1 to 3 to me is the ultimate. So how do we actually make money trading? Well, there's no certainties in trading. In fact, one of my friends who's a trading psychologist, that is his profession. He is a actual psychologist, certified, got his doctorate and everything, now specializes in the area of trading. And he defines trading this way: managing uncertainty. Managing uncertainty. And I like that because that's really what we're doing. We don't know what's going to happen in the future. We're not trading saying, I know what's going to happen. We're trading probabilities that are always uncertain. And so we create a statistical model. That's what our methodology is. It's a statistical model that over a large sample of data puts the probabilities on your side. But any one trade, well, we don't know what's going to happen on that one. And that's why your money management and risk management is paramount. All right, so how do we create a probability scenario? Well, here's how I do it in my system. At each entry point, I ask how many of those 5 energies are aligned. And remember, these 5 energies are each uncorrelated to each other. This is really key. You can't put 5 trend indicators on your chart and expect to have a high probability methodology. Can't put 5 momentums on your chart and expect to have a high probability methodology. They're all correlated. So no, we've got to look at the energy of money flow, the buy and supply, the buy and sell, the supply demand, the accumulation distribution from 5 different perspectives. And when all those align, okay, that's when we got the go button. So I give each setup a score of 1 to 5, depending on how many of those energies are aligned. And the higher the score, the higher the probability. I personally require a score of 4 or more, not 3. You might think, well, 3 out of 5 is better than 50-50. Mathematically, it sounds like it is, but in trading, it's not. And that's because you have slippage and you got your commissions and all that kind of stuff. So by the time you add your expenses in, it comes back down to close to 50-50. So I need at least 4 out of 5. I liken this to taking the trade to court. I need 5 independent witnesses to establish a preponderance of the evidence. So let's look at a chart here so you can see what it looks like now that you understand the principle. And I'll bring up my little laser pointer here. So here we got Starbucks never heard of this company. I don't know, maybe it's a penny stock or something. Maybe some of you have heard of Starbucks. Well, I don't know what that is. Anyway, so here's the 5 energies. Number 1, we're starting a new trend. Now, first of all, that's another detail in trend. The dollars are in the details in trading. So you've heard probably the slogan that the trend is your friend until the end. Now let's deep dive into that. Let's dissect that a little bit. What does that mean? That really means, if you think about it, that again, back to probability dynamics and scenarios, the longer a trend continues, the less likely or less probable it is to continue. Therefore, what do we want to do? We want to enter as early into a new trend as possible. That's when our high probability trades are going to be. I determine that by using wave counts. Now, these are not Elliott wave counts. These are, for lack of a better term, Berry waves. So Elliott wave is fine. I've got a friend who trades Elliott wave. He makes money. I've traded with him, and I learned how to make money with the Elliott waves, and it worked out okay. Personally, it's a little too subjective for me. So for my personal trading, I created my own wave counts that are very objective. And, it's perfectly mathematical. There's no guessing. There's no recounting waves ever. So we use the wave counts, the Berry waves, because that tells us how early or late we are in the trend. So 1, 2, that's your first retrace in a trend. That's the first impulse move up in a trend. That's the first retrace in an uptrend. So this is early in a new trend. Now, based on Berry waves, 5 waves is an average wave count. So it kind of correlates with Elliott wave in that way with the number 5. The difference is with Elliott waves, they impose a 5-wave count on the market. So if it goes beyond the initial count of 5, then they change the count. In top dog trading, we don't change the count. So that means that you could get 7 waves. You could get 9, you could get 11, you could get 25. And we keep whatever number's there. We just let the market tell us what the wave count is, because we're using it to help us to establish how early or late we are in that trend. So not only do you only want to trade early in the new trend, but energy number 1 has another subcomponent to it, and that is trade in the direction of the trend early in a new trend. The earlier, the better, the higher the probability. So first retrace on the trend, that's early. That's number 1. Number 2, there's our momentum indicator, top dog trading momentum. It's angling back up. So we've got a score of 1, we got a score of 2, cycle indicator. This is our cycle indicator. This little pattern here, I'm going to show you this pattern. That's called a mini divergence. That's really key to finding the final swing low. We'll get into that here in a moment. Okay, and then support of the 50 MA, that's your support level. And then 5, we go to the next higher time frame. Notice 10-minute and 30-minute, 1-to-3 ratio. And momentum on the longer term time frame is what we want. Some people say trade the direction of the trend on the long-term time frame. That's okay, I guess, but I would rather trade in the direction of the strength of the market, not just the direction, because that can change at any time. But strength, momentum, accumulation, money flow, demand, overpowering supply, that's what momentum is. So I want to trade in the direction of momentum on both the short term and the long term, have those aligned, and then I take the trade. So that's a 5 out of 5 trade right there. 1, 2, 3, 4, 5. So that's what it looks like on a chart, just to give you a quick idea. Now, let's deep dive into the cycle indicator. All right, and what this is going to do is help us pinpoint swing highs and lows for entries. All right, so I'm going to give this to you. Take notes, write this down. You can use this when we're done. So I'm a little behind here, so let me just go through a few of these real quick here. Just get it all up here rather than doing all of the sliding, importing, swirling stuff. So for what I call my cycle indicator, I actually just use the good old-fashioned stochastic indicator. All right, so every trading platform I've ever seen has the stochastic indicator. Common indicator, one of the most common that there is. Now, what we're going to do is we're going to change the parameters, because George Lane, when he created this, he didn't design it to be a cycle indicator or a timing indicator. He designed it to be a momentum indicator. But for our purposes, we're not going to use it for that. We're going to use it to time our entries with precision. So to do that, the key is to change the inputs. So here you can see what they are. K, change that to 5. It's often defaulted to 14, by the way, on many charting platforms. Slowing, we change that to 2. That's a 2-period moving average of K. And then %D or period D, we change that to 3. If you have the option to change what type of moving average, just keep it at simple. Colors, totally up to you. All right, so you can take a screen capture of that or write it down or whatever. But 5, 2, and 3, just remember, again, your labels here might be different if you're not using MetaStock. So I just want to give you a sense of what that is. Period K or %K will be 5. Smoothing or slowing, I'm trying to think of the different terms they use for this on different charting platforms. Smoothing, slowing, those are the only ones I can think of, 2. And then %D or period D, sometimes they call it period D instead of %D, make that 3. Okay, very important that you make those changes before we use it the way I'm going to show you to use it. Then the other thing we want to do is we want to put some horizontal lines on this puppy. And the horizontal lines are going to very simply be 20, 50, and 80. Okay, these are also very important. 20, 50, and 80. All right, now, how do we trade this puppy? Now that you get the right inputs, again, by itself, very important, even though I've said this already several times, in these seminars, I find that people still get locked in on one thing and they think, oh, this is it. All I need to do is trade, that one indicator. Barry spent 45 minutes on it, and I'm going to be a trading guru. Okay, not quite, but this is, again, by itself, any one indicator by itself is this word, meaningless. Any one energy in the market, however you measure it, even if you don't measure it with an indicator, you do it with price patterns or whatever, those are meaningless. No one thing in trading, no one technique or tactic or tool in trading directly makes you money. It's a piece of evidence, back to our course case example. So we only use it strategically with the other energies. What are those energies? Well, so we're going to measure cycles, timing our entries, but only in the direction of the trend, early in the trend. So we're not going to take them against the trend, or we're not going to take them late in a trend. Number 2, we're only going to buy cycle lows or sell cycle highs that have momentum behind them, long-term momentum. We're only going to trade these cycle highs and lows when momentum on the next higher time frame is aligned. You got to put them all together to have a high probability trade. All right, and here's a new one. Now I'm going to introduce what I call second chance indicator patterns. You got to have these patterns on the %K line. So what are these second chance indicator patterns? Well, what they tell you is, again, remember, indicators are mathematical formulas. So it's mathematically telling you that there's a momentum shift at the very tippy top or the very bottomy bottom of the cycle. Remember, George Lane originally created the stochastic indicator to measure momentum. So it's still measuring momentum when we made these changes. It's just over a different period of time. Instead of over 14 bars, it's measuring it over 5 bars. So that we can have precision for our entries. So I'm going to teach you today the cycle pattern called mini divergence. This is how you nail lows and highs. Now, there are other patterns. There's a total of 6 of these second chance patterns I use for entries. But, it's already 7:36 here in the City of Angels, so I only have time for one. So let me show you, here's the problem. How to trade cycles accurately. So first of all, what's the problem? The problem, well, some of you already described it. So you'll get your stochastic oscillator up here, blah, blah, blah. Price comes up, so we're in a downtrend. And let's say you're looking for a trend retracement trade. So you look at this, comes back up, you say, ooh, that's a good short. I'm going to trade this short. And then, whoa, wait a minute. The market forgets to follow you. It's supposed to go down. It's supposed to follow you, but it doesn't. Market can be very rude that way. It's rude to me all the time. Doesn't do what I want it to do. It goes out, takes out this high. Maybe that's your stop. Boom. Again, that's where my friend in Chicago said, Barry, retailers are often right, but at the wrong time. So you're right about going short, just at the wrong time, not at this time. Well, timestamp down there, but that was the time to go short. Well, go darn it. How would you know that? How would you know that? Here's how. This is our little mini momentum shift pattern, or what I call second chance patterns. Higher low on stochastic shows a momentum shift within 5 bars for a trend continuation trade. So now here we have an uptrend, and this is what you want to wait for. You want to wait for a little lower low on price and a higher low on percent K. The blue line here is my percent K line. So it's on the percent K line, not on the percent D line. If you get it on D as well, that's fine. But we're looking for these patterns on percent K. So a little higher low, a little lower low, little mini divergence. And what that literally means is within this 5-bar period of time there, 1, 2, 3, 4, 5, momentum has mathematically shifted, is indicated by the mathematical formula. And what's filling that mathematical formula we call an indicator? Data. What's the data? The data is this stock relative to that time frame. And so no matter what indicator you put this on, no matter what stock or forex pair or commodity, and no matter what time frame you use, the indicator will automatically adapt to that because it's an empty mathematical formula filled by the data of whatever market you put on there relative to whatever time frame you set it to. So this is coming down, 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 and then we get our momentum shift of supply demand, and boom, that is the right time to enter the trade. That's why I call it my timing or my cycle indicator, but you got to trade that pattern. That's the key. Works well for trend reversals too. So we trade trend early in the trend. What happens late in a trend? The trend is your friend until the end. Well, at the end, then the trend is your enemy. So what do? Well, then the counter trend trade is your friend. So now we're looking to trade against the trend actually, but again, when? You know, it's very rare that people teach anymore about timing in the market. And I just got to say this, I'm just free flowing here a little bit, improving, but you know, when you think of time, why do more people not teach about timing your entries and your exits? You hear all kinds of stuff about price action, price with moving averages, price with, price bars, price levels, support resistance on price levels. Everything's about price, 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 price. Well, great, should be, not diminishing that at all. All I'm saying is, yeah, talk all about price, make sure you master that. But there's 2 axes on this 2-dimensional object we call a chart. That's it. 2 axes, we got them. Price, time. If you ignore time, think of that. You are ignoring 50% of the information on the chart, on that 2-dimensional object. How can you, back to probability, how can you establish a probability scenario when you're ignoring 50% of the information that's there? That, as we professional traders call, is no bueno. You've got to master timing. And I mean, W.D. Gann, the old trader, he talked about this all the time. That was his whole thing, time and price confluence. So it used to be talked about. Why it's not so much anymore, I don't know. It's really a shame. But you got to have it. Otherwise, I don't know how you can be a professional trader. Anyway, so for trend reversals, same thing. Lower low on price, a little higher low on K. That's a little momentum shift just within a few bars, 1, 2, 3, 4, 5. Boom, shifts to the upside, and away we go. So we can nail that. This would be the entry bar right there. Enter right on that bar. And by the way, look, that's where your stop goes. Your stop always goes below the cycle low. I've got a rule for you on stops. A lot of people, I said I would address some of the questions you guys wrote in. And a lot of you asked, well, I have problems with my stops being taken out. Okay, where do I place my stops? For me and my methodology, the basic rule of stops is stops go where you're wrong. Okay, that's the general principle. Now, what does that mean? That means every time we take a trade, we're taking it based on some sort of setup or chart structure. When the reason for your trade no longer exists, then your trade should no longer exist. In this example, we're trading a trend reversal. This is our cycle low and our trend reversal. If we break that cycle low, if we go below it, then the reason for our trade no longer exists. The trend is still going down. That's the line in the sand where the trend would still be going down if we break below that low. So I literally would just put my protective stop 1 penny below the low of that bar. That's it, 1 penny. And this is how I keep my losses small and let my winners run. Now in a trend reversal trade, these are the best risk reward ratio trades in the entire world because trends are long-term moves. But we're getting in even before the trend is established and before it's confirmed, I should say. And so, fantastic risk reward ratio. Let's look at another chart. Okay, this one, the market's just kind of going sideways, but we get again, higher high on price. Now look at this. This is why I call these mini divergences. See how mini that is? Most people, when they talk about divergences, they're talking about them between swing highs. So you look at your stochastic indicator, there's a swing high, there's a swing high, there's a swing high. Okay, and so there's a swing low, swing low, swing low. And most people teaching divergences are teaching divergences between swing lows. I don't do that. Okay, I do it within a single swing high or within a single swing low to know, okay, when, because look at this stochastic indicator can stay down here for a long time. Goes down, blah, blah, blah. Now, this is a good example. I just noticed this. Now here, you could say we get a little mini divergence, right? K is a little higher than there, price a little lower. Why would we not take that long? Because it's against the trend. And we're early in a new downtrend. Remember I told you, these do not work unless you've got the other 4 energies aligned with it. This has the very first energy is against that mini divergence. 5 bar, it's measuring the energy of 5 bars, very small. This is like your scalpel tool in your trading toolbox. We start with a macro. Trend is a macro energy. Early in a new trend, we're not going to trade against it. We're not going to trade against that. Okay, so boom, boom, and down she goes. Again, great risk reward ratio. Again, where's my stop? Now, in this case, my stop would be right above, right above that white bar right there. Okay, my entry is on this candle. That's my risk. That's my risk. And that's my reward. So, summary of high probability trading. We're waiting for the alignment of the 5 uncorrelated energies to put the odds on your side. And here, if you want my whole methodology in one sentence, there it is. One sentence. We're looking to get, in fact, I would maybe add early in a new trend. That's energy number 1. That is strong. That's momentum, energy number 2. At the right time, energy number 3, and we use our modified stochastic indicator with many divergences for that. With support at your back, that's your favorite support resistance levels, whatever you want to use. And then number 5, confirmatory of the bigger scale, and that is momentum, long-term momentum on the higher time frame. And I like to use 1 to 3 ratios between the time frames. Method's very robust and adaptable. You can use this for pretty much any market. I use this personally with stocks, Forex, futures, commodities, options, even cryptocurrencies. And why can I use this? I actually should add cryptocurrencies to this list now. I use it for a variety of time frames. I do day trading, I do swing trading, I do investing. And I use the exact same, I've just got a template for my charts, and I put that template on any time frame. All my charts look the same, they're very clean. In whatever time frame, whatever market, my chart structure, template, if you will, is exactly the same for every single one. Why? Because what we're doing when it comes down to it is we are mathematically measuring supply demand. And my friends, again, don't make trading more difficult than it is. Trading is all about one thing. If I can share anything with you, this is probably going to be the most helpful for some of you at least. The only thing that makes markets go up, the only thing that makes market goes down are supply-demand imbalance. Period. The end. And I don't even care if it's for logical reasons. It doesn't have to be logical reasons. It could be irrational. It could be a group of people, won't mention any names, but a group of people on social media who all get together, make a decision, and plow into the market. Okay, well, now you got tons of retail. They can even overcome hedge funds. The power of the people. But what is that? That's still dramatic demand. Overpowering supply. It could be for philosophical reasons, which some of that is. It could be for emotional reasons where people get carried away. It could be for, reasons that aren't even real. Unreal reasons like rumors, gossip. And then later on they found, oh, whoops, I thought that was real news. It's not. It's fake news. But the market will respond. And so no matter what the reason, as long as the demand overpowers the supply, it will move the market up or down. And so if you think about it, all we're doing is we're using mathematical formulas to give us very exacting measurements of what that supply-demand ratio is on any market, on any time frame. And since that's all that makes the markets move, you just need this one methodology for all of it. You have a universal trading system. Now, on MetaStock, what's really cool, is the coolest thing of all, we have in MetaStock created this incredible toolbox, really. I'm just going to show some of it here real quick, and then I'll turn it over to Jeff, and he'll share with you, some extra super cool stuff. But I just love this because this is only available on MetaStock. I just really appreciate that the people at MetaStock integrated this. So first of all, they've customized everything. So the wave counts appear automatically. Okay, so they just automatically plot. You don't have to even really learn how to do the wave counts. I encourage you to, but they'll plot automatically for you. Okay, volume, trend ribbon up or down. There's your modified stochastic indicator. You get my momentum indicator with this too, by the way, the long-term momentum indicator. But here's what I wanted to show you, the commentary. So where you see the little blue dot right there, see the blue dot? Okay, so that, if you were at that time, this commentary is what you would see along with that. So it just tells you the top dog trade setup, wave 9 reversal, short, the basic setup, wave 9, blah, blah, blah. Okay, commentary, confirmation, entry, initial stop, targets. I mean, seriously, what more do you need, right? Where do you get in? Where do you get out? That's trading. Okay, where do you get in? Where do you get out? That's trading. It's all right there. And if you want to know the details, it's all right there too. And it'll even give you the exact prices. Just, we'd have to slide this, and this is a picture. But it'll actually show you the price to get in, the price to place your stop, all that kind of cool stuff. So I'll let Jeff expand on that a little bit. But I've got a freebie for you today, and it's a big one. First of all, if you want to contact me after this, we have more speakers, so I've got to be really cognizant of the time here. I see we got 10 minutes left, and I want Jeff to be able to use that 10 minutes. But so unfortunately, I'm sorry I'm not answering all the questions coming in, by the way. I do acknowledge the questions. We'll see if we have time at the end. Probably not, but you please do. I really cherish your questions. And so feel free to reach out to me at barry@topdogtrading.com with any questions you're asking here or elsewhere. What I do want to give everybody here is one of my free trade strategies. It's called the rubber band trade, and it is a great trade. I still take this every time it sets up. This is not some old has-been trade. No, I'm giving you a trade I still use to this very day. I give you the complete rules. It's included in a little mini course, how pros trade differently than amateurs. And I'll go deeper. In fact, I've got a webinar that's pre-recorded that goes deeper into this, what I call my cycle indicator. So if you want review on that, this recording even goes deeper. All this stuff's for free. All this stuff's for free. I want you to take this trade setup, the rubber band trade, start trading on a demo account or simulator account, and prove to yourself that it works before you buy any of my courses or anything. And, take the profits you make from this and buy my course if you want to, or don't, whatever. It's your life. I don't care. It's totally up to you. So I don't like, I'm not a big sales guy. I'd rather prove myself to you, give you value in advance, say, God dang it, I'm actually making some money with this dude. I haven't even given him any money yet. And I just found people kind of like you a little bit when you do it that way. And everybody feels good. So you get it all here at topdogtrading.com/free. Pretty memorable URL, I think. So yeah, check it out, and be happy to give you all that stuff. All you do is go there, fill out the little form, and you'll instantly get an email with access to all that stuff, everything in one place. Okay, so my main man, Jeff, let me turn it over to you. And where do we go from here, brother?
Here I go. Just a second. All right. I was trying to type in the link so people can click on it. So it's www.topdogtrading.com/free. So there it is. If you're in GoToWebinar, should be in the chat box for you. If you're watching on YouTube, MetaStock or Kelly just put it up there for you. Barry, great job. I appreciate that. That was really good. And I was amazed that you were still able to stay on time with a little bit of a late start. So thank you for that.
Oh, well, I want to respect you and MetaStock and the other speakers as well. But yeah, thank you. I was watching the clock like a hawk here.
All right. Very cool. I'm going to go ahead. I'm going to talk a little bit about your add-on. Before I do that, I want to say thanks for coming in today. Really appreciate all of the years of just partnership, and you've been a great partner of MetaStock. So thank you for that.
Thank you. It's been my pleasure and continues to be my pleasure. Thank you, Jeff.
All right. Very good. And as I was saying a little bit earlier, you should be able to see the Top Dog add-on. But I do kind of want to talk, just to summarize what Barry's talking about. What we've been able to do with this is we've been able to incorporate like the 5 energy methods. So it basically looks at the trend, momentum, cycles, support and resistance, and scale. And in it, we've been able to, I've got a little bit of a chart open that I'm going to show. We've also been able to look for the patterns, like new trends, the momentum patterns, long trends, the reversion to the means and the triangle pattern trades. And we don't really have a lot of time to kind of drill real deep into this, and we could spend a lot of time on this. But I do kind of want to give you an idea of how all of this works in MetaStock and kind of how it all shows up on the chart for you and all of that kind of good stuff. So right here, I've got just a chart of a little company called Apple. You might have heard of them. And you'll notice that the Barry waves, and Barry, I did put this comment in earlier. I think you need to trademark that term. I think it's a good one. We should definitely start, if you haven't already, calling it by that. But you'll notice that we are labeling kind of the waves and identifying the wave patterns for you. And those are all kind of done automatically. We do have the mini divergences, which are also drawn automatically on the chart for you. We have all of the indicators and all of the settings, just as Barry was showing them for you. One of the things that I really, really like is if we discover any of the patterns that are built into the Top Dog toolkit, we're automatically going to show them on the chart. So not only are you seeing this, this is the waves counts identified on the chart. Here's the first wave up, second wave down, third wave up, etc. If we see any buy opportunities on there, you'll see a little bit of an arrow that kind of just shows up here on the chart. This is part of the MetaStock's expert advisor. We call it the expert advisor, but it just, anything that happens on the chart that we want you to be aware of, we're going to go ahead and tell you about. In fact, and this I just noticed, I actually didn't notice when I just opened this chart. Today on Apple, there's a triangle short position. And so if you see right here, it says triangle short. You have an entry of 145.55, an initial stop of 149.83, and some targets that, some advice on how to trade it. One of the things that we put together when we were working on this with Barry was Barry wanted to include a lot of information on what these trades actually were and how they work. So, and in fact, we actually we put so much information in there that we wanted to be able to kind of make it so that it was actually easy to find. So if you want to see full, you'll see right here, it says for full analysis of this signal, please click this link below right here. So if I just go ahead and click on this, what should happen is it's going to open up a little bit of an Explorer window or a Chrome window or whatever your default browser is. For me, it's Chrome. But if I kind of scroll into this a little bit, you can see all of the information that's provided in common as part of this add-on. So you've got the setup, you've got confirmation, so it's telling you exactly what it's looking for to find that triangle, what the confirmations are. how to get into the trade, the initial stops, the targets to use, a bunch of advice in terms of how you can increase your probability of success, and then any additional commentary that Barry wanted to provide. One of the things I would say about how Barry put this together is he really put a lot of thought into kind of creating this and making it, and it's a very, very solid add-on for MetaStock, and I really appreciate all the time he spent with our programmers to kind of make it work and make it happen. So that's part of the that's all part of the TopDog toolkit. You can, of course, go in and you can scan for any of the setups. That's very, very easy to do, and I'll show that. I'm actually running a little bit in front of schedule, so why not take a little bit more time? I can actually go in and try to show you how the scanning would work in MetaStock. And we probably won't have time to run this completely, but let's go ahead and kind of go down here. All the scans in MetaStock are going to be listed as TDT, and that just stands for Top Dog Trading. So, and right here, if I kind of come down to it, you can see confirmation of longs, confirmation short, dad trades, rubber band trades, trend trades, those triangles that we just saw on Apple, the wave 7 and 9 reversals. So if I wanted to find like a rubber band trade, for example, I can just highlight that. It's going to run that. I can run it on the specific day. And if I want to just kind of go through, and this is one of the things I absolutely love about MetaStock. For me, I'm very busy during the day. I have Kelly, who's running the webinar, has given me way too many responsibilities, more than I can handle. No, I'm just kidding. But I like the ability to go in and just scan the S&P 500 and say, show me the opportunities that exist in the marketplace. Tell me which ones have a trade, and it will. I'm just laughing about my Kelly comment earlier because he's listening. It will give me just a list of the stocks that are available just that easily. So right here, I've selected the Top Dog rubber band trades. I'm going to go down here to the indice constituents, which is a list of all the different index constituents around the world. And if I just want to go through the S&P 500 real quick, I can go ahead and select that as the list. I can go ahead and click on Start Exploration. And look how fast it's going through those. So that's connecting to the internet. It's going through. If I find any S&P 500 stocks that have an opportunity, they're going to be listed right here. Right here, you've got TJX and URI. Those are exhibiting shorts today. If I wanted to go in and open up those charts, instead of looking at 500 plus charts right now, I'm just looking at 2 that have an opportunity. So, and of course, I could do the whole optionable list. I could do all the stocks in the US. I could do all the stocks in the NYC. You can scan whatever you want. And because we get the data from Definitive, you can really scan whatever you want, whether, even if what you want is, we had a question, can't remember the name of the gentleman in Sweden, but wanted to be able to know where the charts are coming from. We do have all the Swedish stocks. We have almost over 200 stock exchanges, almost 300,000 or some insane amount of symbols that are available that you can scan for. But what I really like about MetaStock is the ability to just ignore all the stuff that doesn't have an opportunity. A lot of times, and I'm not kidding, it's like 1:45 here local time. I want to be able to see if I want to make any trades before the market closes at 2. We're in Utah, so that's about 4 o'clock Eastern time. And literally, I'm able to kind of go in, scan the whole S&P 500, and have a list within 15 minutes and look at the charts and see if there's something on a trade. It's absolutely incredible, the ability to do something like that. So, and all of those patterns are part of that scan in the Top Dog toolkit. So in any case, the Top Dog toolkit is an add-on for MetaStock. It's normally a $500 add-on. That's a one-time cost, so you pay it for it and you own it forever. Here at the Summit, we do have a special offer where we're going to do it at $399 as a Summit special price. If you don't have MetaStock, we'll include a trial, like an absolutely free trial. We'll include a money-back guarantee. So if you buy it and it helps you, great. If it doesn't, we want to provide you with what you wish you could get in the market, and that's a low-risk opportunity. So you can take advantage of that. We're going to be talking about really some great add-ons today. But if you want to talk to us, you can give us a call at 800-882-3040. You can chat with us at metastock.com/saleschat. We are, like I said, going to be talking about some really good add-ons today, and Barry is a really good add-on. Coming up next is another great one called Patterns for Profit by Rick Sadler. We actually are offering a package today that would normally cost $3,831. It includes Barry Burns' Top Dog Trader, Rick Sadler's Patterns for Profit, Guy Cohen's OVI Trader, the Fulgent Chart Pattern Engine, Learn MetaStock, and Unleash the Power of MetaStock, and also 2 years of Stocks and Commodities magazine. All of that would be about $4,000. And what I've done is kind of like a summer special. It's kind of like a Trader Summit special. Is we're gonna I don't know. I'm gonna do it. We're gonna party like it's 1999. We're gonna actually offer this as a $1,999. Most of this particular price is refundable if you're not happy, and I'm going to touch on this for more details. You can do this at metastock.com/summit deal. You can give us a call at 800-882-3040. And we've got a great team of people that can answer your questions right now if you have them at metastock.com/sales chat. So there you go. Give it a go. I love MetaStock. I wouldn't trade without it. We're going to be talking about it all day, though. So let's go ahead and kind of go back and talk to you about our sponsor. Stocks and Commodities is sponsoring the event today. We appreciate it. If you registered, hopefully you signed up for the free magazine. If you're at YouTube and you want to get that free rubbery band trading toolkit that Barry just talked about, as well as a free issue of Stocks and Commodities, as well as a whole bunch of other really good freebies, all you have to do is register. You can go to metastock.com/trader summit, and you can register for today's event. Keep watching it on YouTube. Just fill out the little registration form and just sign up for the free magazine and any of the other free offers that are offered by our awesome presenters today. So the link for that is metastock.com/trader summit. Thank you for Stocks and Commodities. What a great magazine. I'd read some of these statistics, but I'll save that for later. Metastock.com/trader summit will get you registered for today's event. If you're watching on YouTube, if you're in GoToWebinar, you already registered. So thank you for that. All right, there we go. Okay, let's talk about our next presenter. Rick Sadler is our next presenter. Rick, we've been working with for a number of years as well. If you guys use the T line in your trading, which I know a lot of you do, Rick Sadler is actually the person that created that, and we've also been working with him for a number of years. He does a great job, and let's go ahead and bring him on here. Rick, how are you doing today? And this is the point where we hope Rick starts talking. Hello, Rick.
There we go. There we go.
Okay.
It just takes me a minute. Hold on here.
Welcome.
There we go. Hello, Jeff. I'm doing great, by the way.
Good. It's a great feeling of relief to hear you.
Yes. No, thank you. I was like, oh my God, I'm panicking. What do I click on? Thank you, sir. How's it going, by the way? How are you? Good?
Good. How are you doing? I am enjoying a summer that's a little more lockdown free than last summer.
Yeah.
Yeah. How about you?
I'm doing wonderful. I'm grandbabies all over the place, and I'm as happy as can be.
All right. Well, very good. Yeah. You deserve it.
Thank you.
I'm going to jump out of your way and let you get going.
Okay. Thank you very much, Jeff. Thank you, MetaStock. Thank you for having me here. I absolutely appreciate it. For those who don't know, again, my name is Rick Sadler. I operate Hit Run Candlesticks. I work with Doug Campbell at Right Way Options as well, and just like a great big thank you to everybody. We're gonna talk about some things today, and I hope it all turns out good. I don't have a lot of charts to look at today. In fact, I have, actually I might bring over a couple of charts, okay? But what we're gonna do is with Hit Run Candlesticks, or this webinar, you get a 30-day free trial. So I promise you, I will drown you in charts and drown you with all the possible knowledge I can put out there on what we do. In basic, I'm going to be talking about the trap, mostly the 3H trap, but I am going to touch on a couple other traps. And this is something that's set up with MetaStock, where it alerts you, in that MetaStock way. Here's a chart right here, with a little diamond down there that tells you that it's ready to be traded right there. So we'll look at some of that. So why do I have this up here? And trading is it's a journey. Trading is not a get rich quick scheme. It just isn't, and it takes a while. It does. I don't think there's a speaker on here that says, "Hey, look, you're not going to be a billionaire." There's always the possibility, but I wouldn't set your heart to it. Sorry if I'm disappointing a few people, but I'm kind of a straight shooter, like it or not. And maybe, yeah, we'll just leave that there for now. But trading is a journey, and you go through some good places and some bad places. You'll have good days and bad days. You're going to have good years and bad years. And that's the way it is. That really is it. So I don't think there's any one perfect system to trade. I really don't. I think trading is extremely confusing. Now, I want to remind everybody that I hope you go click on that 30-day trial with hit run candlesticks. And by the way, it'll be with right way options as well. And that's where we're going to dig into charts. We have 40 minutes here to talk. I can't dig into charts. I'll just confuse you. That's all. 40 minutes of confusion when you start looking into charts, because everybody is frantically copying things down. Everybody's frantically writing things down. Man, I got to remember that. Oh, that's the new trick. Oh, look at that. That's cool. That's slick. Okay, that works. That doesn't cut it. You can't do it in 40 minutes. So I want to talk a little bit more about some other things. And I promise you, I will drown you in charts in 30 days. And I promise you, I promise you, you will leave less confused. If you choose to stay, great. But in that 30 days time, I promise you, you'll be a whole lot less confused about trading, and you'll have a better understanding. So I have a chart up here. Confusing. Trading can be confusing. We should take the word out, can be, those two words. Trading is confusing, doggone it. Make no mistake of that. Make no mistake at all. It is very confusing. So why don't we clean it up? Why don't you just clean it up? You'll find in my trading, I use very few indicators, like almost none. I do use moving averages, though. Probably use moving averages more than I actually share with everybody, because they're built into my scans and things like that, and we don't necessarily need them on the charts. But if you want them on the charts, that's perfectly fine. And I do have some on my charts, and I have some charts with more stuff on it, moving averages type things. Make it simple. Make trading simple. You don't need you don't need 1,000 different tools to do a job. And I know you don't have that many tools in the whole trading in your trading toolbox. I know that, but you don't need all these tradings. You really don't. And I can prove it. I can prove it to the day is long for you. In that 30 days, I will prove it to you. And whether or not you like that way to trade, again, I promise you will leave not quite as confused. That I do promise. Common sense. I've been trading now for 34 years. I have made trading confusing for myself. I have made it confusing for other people because they've told me that. And then I quite some time ago, I figured out what trading really was. It's just common sense. That's all it is. It's common sense. And when you take all the BS out of it, then it really does boil down to common sense. That's all you got to do. But you have to have a plan. A lot of people don't have a plan. A lot of people don't even know how to begin a plan. That's something in that 30 days, I promise you, I will help you with. And this is something here. Trade only what you understand. In the trading room yesterday, was it yesterday or the day before? I can't remember now. There was an individual that took a trade that we took, and it turned out to be a winning trade. And their comment to me was, wow, thanks for this trade, Rick. This was really great. Now, can you tell me how it got there? Can you tell me what is the trade setup? So I started the conversation. I will, but you're probably not going to like the ending, warning them up front. So I explained the trade to them completely. And then I said, now here's the bad part. Why in the world did you take a trade you did not understand? They instantly typed back in the chat, guilty as charged. Don't take a trade you don't understand. Don't do that. It's just uncool, and it will not work for you in the end. So don't take trades you don't understand. Understand them first. Now, I probably should go back with this, because let me stay on this one thing for a second here. Most people, they wake up one Sunday morning maybe, and they decide they want to be a stock trader, so they go learn everything they can on Sunday, and Monday morning rolls around and they hit it running. Bang! They feel like they have to make money, and they don't understand squat. Nothing. But yet they think they're going to go out and make money. So last night, we gave away a computer. This is something we do. We've done it twice now. We're going to do it here again in about December. We're going to give away a brand new computer again. And my parting words when we gave it away and the end of the webinar, my parting words, because there were some people there that were talking, because it was kind of an open forum and they were allowed to ask us anything they want, which you can ask us that anytime. And one person asked, did you ever feel like quitting trading? And oh, yes, I did. Absolutely. What happens is that person, you can only lose so much money and you want to give it up. What happens is the problem that I see is they start that Monday morning trying to make money. My very last parting words is, here's my secret I'm going to tell you, and I will talk about it much more in the trading room, is stop trying to make money. And that was the end. We shut it down from there. I hope they think about that. That is the problem. People, they wake up on a Sunday morning and wow, they download a free ebook and wow, look how much money I can make. I can drive around in jet airplanes and yachts and do all this, and I'll call BS on that. No, you can't. Monday morning, they go out there and they start spending money and they lose their money because they don't understand. So don't trade what you don't understand, okay? Please don't. Understand it first. Something that I truly believe in is to be a chartist. Everything is in the chart. Everything you need to know is in the chart. By the way, I'm just simply a swing trader. I'll hold a position overnight to 3 or 4 weeks, a month and a half sometimes. But typically, I'm pretty much a short-term swing trader. I'm looking for 10, 15, 20, 30, 40%, 50%. If it can happen in a short period of time, good for me. That's what I typically look for. I follow candlesticks. I follow price action, which you follow that with candlesticks. I've learned to recognize fear in the market and fear in myself. Once you learn to recognize fear in the market and fear with yourself, it will help you with trading. It'll also help you understand you don't have to trade every single day. Know when the water's too deep for you. Hey, look, some people shouldn't be trading on some days. Sorry, could be you. And some days it's for me. Absolutely. Not every day has to be traded. Not every day. Learn when to trade. So you've got to learn when. And see, I could talk an entire 2 hours on these two things right here. On those two things right there. I could talk 2 hours about fear, 2 hours about price action candlesticks. So there's no way I can put it all into a 40-minute talk here. So please be patient. Please jump on that 30 days. If you have troubles whatsoever, you email me directly, rick@hitandruncandlesticks.com, and we will get it squared away for you. This last one here is something I've talked about here lately, and that is don't get bullied into a trade. I've had, in my 34 years of trading and about 20 years of teaching, I guess, I've never had so many people come back to me and comment on this one statement here. And I just started talking about this about 2-3 weeks ago. And it was all from a coaching class I was doing. And what was happening is the person was being bullied into trades. And here's what I mean by that. Maybe you belong to a trading room, maybe you get emails, maybe you're into the social media trade stuff, and you see that every Tom, Dick, and Harry in town is making money on XYZ. You can't stand it anymore, so you jump into that chart just to lose money. That's being bullied into a trade, you know. Wait for the trade to come back to you. That's what we teach. We teach trending charts where price pulls back to you. We call that a PBO, pullback opportunity. So say you receive a trade via text, via email, I don't know, all the social media. You have to diagnose that trade. Is that trade your trade? And Tom and Dave and Jeff out there, Greg, Julie, you guys all have to know, is that particular trade for you? You know, all these Tom, Dick, and Harrys, they might be in this trade and they all might be making money, but that might not be your trade. So you're going to have to work with that. You're going to have to learn what is your trade, okay? One of the goals that I have, and this year I have met my goal, although I am off my highest numbers this year. I am definitely off, but I have reached my goal and I'm maintaining my goal so far. And my goal is to double my account every year. A couple years ago, I don't know, it was up like 8 times or something crazy, you know, a good year. So, you know, you can, you just simply take your account size, you divide that by 243. I use 243 because I think there's about 243 days in a year to trade. Now, you may think there's a day or two more, and you may think there's a day or two yet less. We're going to be kind of close unless you take, you know, a lot of time off. And that gives you your daily goal. Not that you have to sell at that goal or anything, and we get way more into that when we have more time. But you know what you have to make a day. Now you may have 3 losing trades in a day, but if you have 1 winning trade that covers all those plus your daily goal, well, you're on your way to doubling your account. And this is a major goal of mine. Is to do that account doubling. You simply can take that times 5, and that gets you your weekly, and then times 4, that gives you your monthly goal. If you want to see those goals, because some days I certainly don't get my goal every single day, absolutely not. But in a week's time and in a month's time, I typically get my goal. But I do want to tell everybody I am down a bit this year, but I have doubled my money. So I've not tripled it. I guess that's one way to say it. I've not tripled the money. I have doubled it, and that is my yearly goal. So I'm working just fine there. This is something very typical that we do. If you are buying something, say right here, and by the way, this is a typical chart pattern that we might use. This is a 3/8 trap in a trending chart. This right here is what we use for the trendicator, what we call the trendicator, and that's built into the MetaStock system here. And in fact, all this is built in, and it gives you those. And I'll show you a couple charts here in a minute. And it even gives you those little triangles. It tells you when you're in that setup as well. That's kind of cool. But if we buy something here and it runs up, say to here, and if my goals are reached, well, I might take half that position off the table. I might even close that position. As it moves up higher, I may take a little more off that position if I didn't close it all out. And then it's just rinse and repeat is all it is. It just simply rinse and repeat. Here's Microsoft. See how we broke out here? This, by the way, is the trendicator right there. That's the trendicator. This is the T line right here. This is the 8 exponential moving average. And as we rally up, we want those, what we call PBOs, pullback opportunities. See how we pulled back here? And well, see how we pulled back with that little doji? We got that little diamond. That doji could have been bought, and then it could have been bought as we started moving up over that doji. We rallied up, and it actually gave us another 3/8 trap buy-in here. So that's what's cool about this is about the MetaStock program is you get this you can search for this built-in trend, and then you get alerted when you might want to buy. Now, I'm not saying that, hey, it shows up here, you should absolutely buy it. In fact, absolutely not saying that. You still have to be a chartist. You still have to have some understanding of that, okay? See this big green bar down here? I love this. Now, I don't know about you guys, but years ago, even nowadays, sometimes I get carried away and rush trades. We always want to buy something cheaper. That's just in a trader's nature. But the reality is, I think if we look back at our trades, we make far more money, more consistent, if we wait till we have a bullish trend. Picking bottoms, in my years of trading, and I'm proud of the fact that I've traded for 34 years and I'm still here. I'm very proud of that. I'm very proud that I can double my money in a year. I'm extremely proud of that. And I owe it to paying attention to charts and mostly I say mostly because I still do dumb things and try to pick bottoms. But 9 out of 10 times when I do that, I regret it. And there's always that one time, you pick the bottom and yahoo, you're rock and roll. But if you go back and do an inventory of all your trades, I personally, right now, I'll say you might see this right here, that if you just simply would have waited till the trend started, then wait for that pullback, the pullback opportunity, then you would have much more success. And this thing right here, this tells you that the trend is tradable, a tradable trend. It's trending, and that really, I think that really shines with MetaStock here. So here we may move this over a little bit. So I'm a big believer in taking profits into strength. So again, if you're entering, just like this, if you were to enter here, well, you might take some profits off right here. If you enter here, you might take some profits up. If you enter here, take some profits up, and it pulls back, it's still all good. You're trending up. You're still in the money. The chart is still trending. And this is really corny, but I say it anyway. A trend is a trend till it's no longer a trend. That does sound really corny. A problem with a trend, though, is a lot of people don't know what a trend is. And You could get 10 people in a room and all 10 people could actually disagree with what a trend is, because a trend is what you want it to be. No one person has the corner on that's a trend or it's not a trend. No one person has that corner. It's you, the trader. This is something we'll show you how to determine that fits your trading style, is what kind of a trend you might want to use that makes sense to you, because you never want to trade something that just doesn't make sense. Some basic rules that I like to trade by. Admittedly, I break those rules. I'm human. Everybody else breaks rules too. They're all human. It's the way it is, you know. We're not going to change. But you have to know what some of those rules are before you even start. And here's some very simple rules that I think are easy to write down. They're easy to stick with, even though I know, you know, your partner knows, everybody knows that you're going to break those rules from time to time. Buy only in a trend. And again, a trend is what you define it as, and that's something we can help you with, is define what your trend is. Buy on PBOs. These are pullback opportunities. We don't want to buy at the high of everything. We want to wait for those pullbacks. So we might want to look at this. Maybe that's the trend we're talking about, and then the chart rallies up. Well, you don't want to buy up here. How many times have you bought up here thinking that price is going to continue, when actually what price does is it pulls back? So what do? You close it out, right, for a loss, only to have that stock turn around and go up like you thought it was going to in the beginning. Look, everybody in here should be raising your hand, okay? I know that this is a scenario. I know that this is something everybody has run into. So this is something that we share, something we show how to do that. This is one of the beauties of the program in MetaStock, that 3/8 trap setup. That really, really helps with that. Terrific program, and we can help tailor that for you a little bit too. Be able to see path to profits. This is something that's very important. You know, if you have a if you have a stock that's trending, it looks really, really nice, and then let's do it this way. You have a monster amount of resistance here, monster amount of resistance, and you see the chart pattern working. I mean, the chart's making higher lows, higher highs. You know, if you're 3, 4, 5% maybe away from that resistance there, but yet you see some buying here, do you seriously see the path to profits? Seriously? And be able to recognize that you've got some room to make some money. You know, this might not be the trade. You might see a path to profits up here, but this is going to cause you a world of problems. So why not do this? And this is something that we work with people, is, you know, wait for that breakout, set up a buy box, and now use this as support instead of resistance if you're too darn close to it. So that's something we can work with and help with. Profit into strength using goals. We've already talked about the goals, doubling. I like the idea of doubling your money. I've yet to ever run into a trader that said they didn't like that idea. Some traders have told me that's impossible, and that's just because they haven't found the trick to trading yet. We've proved it. We've got people in the trading room that do it all the time, and they share as well. So kind of cool stuff there. You can actually see it in motion happen. Use stops. My goodness sakes. If I have one negative about myself, I would venture to say this is the one right here. We all have good things that we do in trading, and we all have bad things we do. This might be my bad thing right here. Not my worst, I should say. Not my only bad, maybe my worst. Is sometimes I will stay in a trade a little too long. You know, I see the potential of trade, and the doggone thing went down. It's like, why'd you go down? There was no reason to do that. So Sometimes I do that, and that's my bad. But you have to learn to control that risk. I have a very easy way to. I get asked a lot. Well, where do you put the stop at? An easy way to think about where we start looking at a stop is when you're entering a trade. Here, let me bring this back over here. When you're entering a trade, then you enter the chart because you like the chart for whatever reason. It's your reason. So whatever reason. So once you describe to yourself why you bought that chart, why you like that chart, that actually answers the question to where you wouldn't like the chart. As an example, see, I've never done this here. Does this work? Yeah, it works. So say let's change that from let's go green. So we pull back into this 3/8 trap here. And so maybe you buy this candle somewhere in there. Maybe you buy it here. Well, take notice that, first of all, you were alerted that it was set up. And this right here, now let's make this red, I guess. Here we go. So red, that would be, or not red, my color's red. Maybe that is your stop. You like it because it was in the trap. This is actually a 817 trap, set up in here. And that's something we show as multiple types of traps. So you set your stop in here because of this candle, this low. That's why you like it. Notice you were never stopped out. Now, you certainly may have, if you're a fast trader, you might have taken profits, but notice you were never stopped out. I can't count the people that got stopped out of this and then it went up. And they just want to take a hammer and smash something. Well, using that, you like it because it's in the trap. As long as it stays in that trap, we're all good, aren't we? That's why you like it. This would have been a 3/8 trap right here. And notice that we had kind of a hangman up here, a doji. It's still 3/8 trap. We rally up. This is a candle, somebody might have sold it, but notice we're still in the 3/8 trap. That might have scared you to death. That might have gotten you out, but that would have been a bummer right there, wouldn't have? So anyway, you've got to have these rules and you've got to understand them. And that's part of taking that confusion out of trading right there. So I think it's important to stay with the trend. We've talked about that. I'm not going to talk about that too much. Trying to buy bottoms. Over the years, I've seen people use that strategy. In fact, that was the strategy I was taught years ago, and I almost quit trading because I've lost way too much money. I meet people all the time that's their strategy, and one of two things happen. They either change their strategy or they disappear. And the reason they disappear is because they can't make any money. Picking bottoms is just not the answer. Really is not. The answer is find a trend that's trending, and finding it is really, really easy to do. You just have to know what you're looking for. Once you know that, finding that trend is super, super simple. And then you just simply wait for a pullback. That's all. Follow the price action. You don't need anything else. And it's so simple. It's so simple. It makes sense. And it takes the confusion out of trading. It really does. You get too many indicators on a chart. On this chart here, we could put hundreds of indicators if we want to. And I got to promise you, I don't care how trending this chart might be, you're going to find an indicator that says, hold up there, sport. Something's wrong. And so all you're going to do is you're now going to fight yourself. You're going to have this battle. Well, do I buy this? Do I not buy this? Do I buy it? Do I not buy it? Because 32 indicators say that this is good, and as one indicator says, whoa, hold up. maybe this one indicator says no good. So you have this battle. Take all the confusion out. Take all the battles out. You hardly need anything more than a trend, okay? I know a lot of people that they do use MACD. I've got some scans with MACD on it, and it's very simple. I don't use divergence. I just want MACD trending. That's all. As long as MACD is in a bullish formation, there you go, right there. That's all you need. And I have it built in some of my scans, or I don't even have MACD on the chart. They're just built into those scans, and you can do that here as well. So let's come on. What time is it? I still have some time here, I guess. I think. Here's one of these things that over the years that I've taught to people. You'll go to a webinar. You'll spend maybe 6 months going to all the free webinars that are offered out there, and you learn all these strategies. Oh my goodness, you learn all these strategies, right? And how can you learn these going to an hour webinar? You can't. You just can't. I think it's good to go to those. I think you do learn things, but don't marry this week's strategy. You know, all you're going to do is divorce it. And you're going to marry next week's strategy. And really, you've never even made a good relationship here. So take some time and develop a relationship. You just might be surprised how happy you'll be. Focus on one at a time, one setup. I mentioned yesterday in the trading room, or was it last night, one of my biggest dreams is to find somebody that calls me up one day and says, hey, will you teach me how to trade? One of the questions I'm going to ask him is how much experience you have. And well, I don't have any experience. Zero. You never traded before? Not one time. That would be my dream come true, because I would take that person under my wing, and in 6 months, I'd have them a trader, because they don't have all this BS bad habit stuff. Not that this strategy's bad or that strategy's bad or this one's bad. It's just that we go out and we have this stuff in our brain. You can't get it out. You got to get it out. You got to wash it out of there. Try one setup at a time, be the very best at it, and recognize that there are going to be some days and some weeks where that strategy is not going to produce. And that's just a fact. So have patience, take your time. All right. Look, I know there's people here probably a little frustrated. You wanted to see some hotshot way to trade. And, you know, if you do, here it is. Find a chart in a trend. MetaStock offers it. You got a green bullish bar here, says it's in a trend. You can clearly see that it's in a trend. Watch for the pullback in the 3/8 trap. Now, I've deleted off the top trap line here. When you open it up, it comes up with it. I've deleted it to keep the chart clean, but it doesn't change the fact that MetaStock tells you that we're in a 3/8 trap here. So that you just can't make it any more easier than that. That does not mean you're going to go out and be an ace trader tomorrow after picking this package up and getting this. It doesn't mean that. I don't want to kid anybody about it. It's going to take a little time. Charting tools, you know, you've got to have a good charting package, which MetaStock fits at. A brokerage. What's your edge? Have an edge. Have an edge. My edge is keeping it simple. My edge is focusing on just a very few strategies. Very few strategies. You know, if you know, earlier on today here, I mentioned that people, they wake up Sunday morning, decide that they want to be a trader, and they hit the ground running Monday expecting to make money. Just pump the brakes on that. It's not going to happen. All right. I know everybody wants to be told, look, you're going to make tons of money, and it's possible. You can, but you're going to have to learn first. You know, there's no magic out there, none whatsoever. And If you're having less than 5% monthly success, take time out. Learn how to trade first. If you can't seem to break a 5% a month or 2% a month, or maybe you're not making any money, but if you can't break that and do better than that, take some time off. I don't mean take time off from trading. I mean take time off from trying to make money, because that's one of the problems. You can't educate and make money at the same time. It just does not work, because your psyche, your emotions, it's your money. You put $500 to some people, that's a life savings. That's your food for the next month. $1,000, $10,000, $20,000 into a position, you can't learn squat, because now you're focused on your money. So you want to up your game. Stop trading for a little bit, just a little while. It doesn't take long. Take some time to bone up, be accountable, share your trade. Something I insist in our trading room is that people share their trades. I don't want to hear it. If you come into the trading room, you made, oh man, I made 40%. Tomorrow I made 50%. The next day I made 100%. If you're never sharing your entries, I'll just ask you to leave, because that's bogus. Be accountable to people. Be accountable to, if you're in a trading room, no matter the trading room, be accountable to it. If you're not in a trading room, be accountable to your spouse or partner or whatever. Be accountable. If you don't have anybody, walk next door to your neighbor. Tell your neighbor, look, this is what I'm doing, and I would like to be accountable to you. Because if you're not accountable, you're never going to have success. You won't. You'll sweep all the bad trades under the rug. You'll ignore them, and you will only focus on that one good trade that you made 3 months ago that you made a terrific trade on. So trade only off of your watch list, okay? This is something I think is so important. Always be building a watch list, always be cultivating it, and only trade off your watch list. One thing this will do, if you get some bogus BS ticker symbol off social media because those yahoos pump it up, this will keep you from jumping into something like that. This will keep you focused on what you do. I guess you all know how I feel about the whole social media trading. Don't get caught in the FOMO game, fear of missing out. Don't get bullied into trading. Don't do it. And don't trade junk. Junk to me, charts with low volume, charts that have had 18 months with zip for volume, and then one day they have 1 million shares traded. That's junk to me. Don't trade junk. Trade quality charts. Quality leads to success. That other stuff is a lottery ticket. You'll see. You will see. Trust me on this. And don't trade drama. Just don't trade drama. I hate to use this as an example because it was sad. It really was. But for the longest time, I wouldn't trade Boeing. And it was drama. It was sad drama, but it was drama. And I wouldn't trade it. You don't want to do that. You want smooth trending charts. You want to simply just walk into those charts when your setups are delivered to you. Thank you to MetaStock. You want to place a trade, and you want to take profits off at a reasonable spot. So anyway, don't trade drama. Stay away from it. Social media is drama, by the way. I get asked often what I do for my options, and I do. I only trade options anymore. I only trade directional bulls and I only trade directional calls and puts. That's it. And my open interest, I want at least 20 times, what I'm trading. The delta around 70, and bid and ask less than 5% is fair. I'll take more if I really want the chart, but I think that's a good starting number right here. Scaling. I love scaling out of a position. I will scale into a position if it pulls back. That I will do. I rarely scale into a position when it goes up, because when it goes up, I'm interested in taking profits, not buying more. Some people might disagree with that. That's all right. We all have our way to trade. But when my goals are met, I'm always taking profits. May not be selling the whole position, but I'm taking some profits. When we're moving down, if I'm in a position and it does move down and the chart still looks like a quality chart, I will add to that. I will absolutely add to that. And then number of positions, I get asked this, how many positions do I have? For anybody that asks that, you're asking the wrong question. To start with, I can't give you an answer because I don't want you to do what I do. You only can do what you can do. So, well, I'll tell you, I'm anywhere from 1 to say 12, 13 positions most of the time, somewhere in there. And it varies on market size. I'm not married to, look, I have 9 positions on every day. That's not true. It all based on the market. And everybody is different. You can't just be in 9 positions because somebody said be in 9 positions. What if your hair starts falling out? You get so nervous if you're in more than 3. Well, listen to yourself. You're the best trader in the world for yourself. Absolutely the best. Wow, there we are. Anyway, that is a little recipe that I think can help get people to that road to wealth, to the desired numbers, perhaps. There is no one strategy for everybody. I do think it is worthwhile to listen to all the great traders that are going to present here today. But I think when the day is done, what you've got to do is think about what makes sense to you. What makes sense? And that's what's going to make you a trader. And if a little bit from here and a little bit from there and a little bit from over here, if you can put that in a package for yourself, and if that makes sense to you, that is what you should do, okay? So don't get bullied into trades. Don't get bullied into somebody else's logic. Make your own logic. But we do learn from other people, so take advantage of that. Jeff, thank you so very much for having me here. Thank you, everybody, for being here. If there's any questions, I can't see questions, so I don't know how to get to them. So maybe there are some, I don't know.
We do have some things that I would.
Okay. Yeah.
Hold on just a second.
Sure.
We've got a lot of questions coming in through YouTube, but Jimmy N1 wants to know that Rick is an excellent teacher. Thumbs up.
Wow. Thanks, Jimmy. I'll send you your check here in a little bit. No, thank you very much.
Harpreet on YouTube also gives you a little clapping emoji. So.
Oh, thank you very much. Thank you. Thank you.
Deep says.
I forgot we were on YouTube. Yeah. Okay. Cool.
Yeah. Yeah, for all of you on YouTube, make sure to hit. Deep Causey has a comment for you guys.
Sure.
It says hit the like button, guys. They are giving so much really good knowledge for free. Like, share, and subscribe. I would agree with that completely, Deep, and I appreciate the comment.
Yeah, absolutely. And the more you get that message out, the more it helps other people. So, yeah, I'm all about it.
Denzel in GoToWebinar says, this is pretty much how I trade. I look at the different indicators just to confirm a decision I made already on trend and MACD. Mm-hmm. Denzel says, I am that guy. I never traded. And then I said,
if you really never traded, call me up.
Yeah.
Email.
He said he's loving it. Also, I asked him how he was liking today's session, if it was helpful for him. because we do try to kind of appeal to like a lot of people, and sometimes we can get a little heavy with like mathematics and stuff like that. But great job today. We're having a lot of really good feedback, and he said that he's loving it. So
cool.
And it just reminded me that I had McDonald's for breakfast. So
hey, that's a good breakfast. That's a good breakfast.
That's the best way to do McDonald's. I think their breakfasts are great.
Yeah.
Unia wants to know how to recover from a huge loss, including emotional. Thank you.
How to get away from a huge loss? Well, sometimes you have to cut the cord and just take the loss. Now, so there's two ways to do this. You could be down the money and you haven't closed it out yet, or maybe you're still holding it. So I want to start with, sometimes you just have to let go. You just have to. There are ways you can buy yourself out of that. I do that sometimes. That is not something we even remotely have close to time to doing here, but it's something we can certainly talk about in the trading room. And but there are times where I will buy myself out of a trade, and I'll absolutely share how to do that. Emotionally, the way to do it is, once you take that loss, take a break, get up, go take a little walk, come back, and whatever you do, don't start trading right away. Reevaluate your rules, go look at that trade, find out what you did wrong, admit it to yourself, and say it's going to be okay, because now you've learned something. Now you've learned, turn it into something positive. Now you've learned what to do. I can almost bet there's only two scenarios that would happen. One scenario is the stock gaps down on you and you're screwed, okay? That is not necessarily your fault unless you held through earnings. And I am a big never hold through earnings. So the second possibility that could have happened is you're into a position, you put your stop in, and you don't pay attention to your stop. The stock moves down because everybody and their brother's talking about it. You got a tip from your brother-in-law, your sister-in-law, somebody that said, hey, this is a hot stock, and you keep holding it and keep holding it and keep holding it. It keeps going down and down and down. The number one problem, you simply did not obey the stop. Here's something I always like to say. When is a $100 loss good? When you finally take the $500 loss. Never be afraid to lose money, but do it early on. Yeah.
Okay, here's three really rapid fire ones, because we do have just a bit of time, but okay. I'm going to let you kind of. So Lucky wants to know, how do you cope with fear and greed? Eunice wants to know, when I start losing in the morning, I usually lose all day. Should I stop in the morning? Jimmy N wants to know, do you take your entries at the end of the day?
How do I stop fear and greed? I'm going to use this right here. The way I stop fear and greed is, I know exactly how much money it takes me to double my money every year. I just off the top of my head, if somebody has a $10,000 account and you want to double your money, that means you've got to profit at least $40 a day, $41 a day. That doesn't mean you do that every single day. But at the end of the week, you want to make sure that you've, $240 some. So as the chart moves up, whoops, that is not what I wanted there. As the chart moves up and I start reaching that $41 mark right there, if I own, say, 10 calls on this, and so 41 times 10. So if I reach that number, say if I get to $240, something like that, you can bet I'm going to start peeling off some goals. And somebody always says, well, what if the stock goes up here? Yeah, well, when's the last time that happened to you? So, let's stop dreaming and let's get real about trading. I'm sorry, what was the second one real quick?
Let's see. Oh, should I stop trading in the morning when I lose? Because I usually lose all day.
What? Yeah, you know what? I'll bet you $100 on that one. And I'm just going to use the SPY. The SPY is what I typically follow. And so what might be happening is the SPY, say we're trending up, and then all of a sudden the market itself is pulling back, and you keep trying to trade to the bullish side. I will bet $100. I'll bet you a steak dinner that that's what's happening right there. Is you start a trade and you lose money, and you're not seeing that the market is not in your favor. Make sure the market is in your favor. So if you're trading short, you want the market moving down. So watch what the market is doing. Watch what the market is doing. And the last one, sorry, I can't remember.
And you're fine. That's what I'm here to help. Do you take your trades at the end of the day?
Sometimes I do, and no, sometimes I don't.
Okay.
And sometimes I take them in the middle of the day. It really does not matter. But one thing I'm always doing is evaluating the market. Is it on my side? Does it have my back? So.
Here's another one. Sorry, I promised we were done, but let's do this one real quick. Hans wants to know, it's a bit off topic, but I would really like to know your opinion on high frequency trading. Those who buy the order flow and buy the stock before the actual trader does, do you avoid certain exchanges, or do you not care about this?
I don't really care.
Okay.
Yeah. I trade stocks. I trade the options on stocks. When I see a stock I like, I trade it.
Okay.
Yeah.
Very good. One last comment for you. Unia says, thank you very much. It's the most useful presentation out there. So what a compliment.
Thank you very, very much.
But Unia, I would caution you not to make that judgment before my presentation later today.
I love that.
All right, Rick. Thank you very much. I'm going to take a minute to kind of talk a little bit about your add-on. Great presentation. Lots of really good feedback. Appreciate your coming in and spending some time with us today.
Thanks, Jeff, and thank you, everybody.
Okay, and let's go ahead and I'm going to go ahead and just share my screen real quick. We'll talk a little bit about the add-on that we worked on with Rick called Patterns for Profit. And you should be able to see my screen now. Let's go ahead and turn this on as well. And let's just talk a little bit about the Patterns for Profit add-on that we created with Rick. So with Rick, basically there's quite a few different patterns. It's very, very simple. I'll show you a chart in just a second, but we identify the rounded bottom breakout, the T-line squeeze, the T-line bounce, the pinball setup, and the 3x8 trap, which you'll notice that's in new. We recently added this not too long ago. The 3x8 trap is a pattern that Rick called me up and he said, I absolutely love this 3x8 trap. It's the thing that I'm exclusively trading right now, and I want to add it to the add-on that we've built for MetaStock. And so we added it, of course. I mean, that's generally the whole point, is to kind of include the stuff that these experts are using. So it does include, and I have the same chart of Apple open, and I'll just show you it on the chart with the expert advisor attached. I'm going to show you the old expert too, because I think it still looks really, really good on a chart of Apple. But you'll notice right here on the chart, you've got a kind of a bearish zone and a bullish zone. And you'll only, Stephen, you like this, you'll only trade in the direction of the tailwind of the market, like you're saying, or the direction of the trend. So you'll notice that we're only going to fire off signals in the same direction of the trend. Anytime you see like a little diamond below the chart, that means that we have an active 3x8 setup trap firing. Okay, so every time you see that little diamond that appears down below the chart, that's when you're going to see the signal coming in. I've got the commentary already open, and you can see there's a little arrow here, which means it's looking at the current bar. So it's right here telling you that the reading is bullish, kind of gives you some information on the setup that you're looking at, and actually gives you kind of an idea of what a current thing would be. If I move that commentary back, it's going to tell me kind of some information about the setups that we're seeing. So all of these blue like triangles that are appearing on the chart, these are all active setups where you could have bought. If I was looking at one of these days, because maybe I scanned and I found this on a day, this is kind of the notes that it's going to give you about it. So again, it gives you a lot of information. A 3x8 trap combined with trend indicator is detected on Apple on the current bar. Traders should look, I'm just going to make it a little bit bigger, to buy Apple, while more aggressive traders could look to buy a bullish option strategy. The 3x8 trap is Rick's primary setup for trading. This is Rick's favorite trade setup. It's important for you to follow your plan. And then it goes into some more details, but it just kind of gives you some idea of what's going on. And I personally love the commentary feature of MetaStock, because Rick can tell you, okay, this is a setup and this is what it means, and we can do that in Rick's own language. And in addition to that, we talked, and I don't think we will because I need to get to Fausto, but I can also scan for this. So if I want to find those patterns, I can go and find it. In addition to this 3x8 trap, which is Rick's favorite pattern, you do have the ability to look at the other patterns and as well on a chart. And it's a very, very well-rounded add-on, I'd say. So it's going to find your rounded bottom breakout, the T-line squeeze, the T-line bounce, the pinball setup. Those are the setups that it's finding. And of course, the new 3x8 trap. All in all, it includes 2 explorations, 2 expert advisors, 2 of the layouts, and those 5 different unique Rick-only patterns available here at MetaStock as part of the add-on offer. Okay, so normally this add-on $799. Of course, we're going to give you a discount here today. It's going to be $699. We're going to give you that same low risk, high reward type of a setup. If you don't like it, if it's not helpful for you, you can return it. You can get a refund. We offer you a 30-day evaluation period on it. If you aren't using the award-winning MetaStock platform, we'll give you a free trial so you can see why it's been rated #1 in its price category for 27 years in a row. And it is part of our Summit package where you can get Barry Burns, Top Trader, Rick Sadler's Patterns for Profit, the OVI Trader by Cohen, the Chart Pattern Engine, 3 months of a Learn MetaStock subscription, Unleash the Power of MetaStock, which is an on-your-own training CD, DVD, and 2 years of Stocks and Commodities magazine. So normally all of that stuff separately would be $3,831. Here today, it's going to be $1,999. So to take advantage of that, give us a call at 800-882-3040. You can also chat online with us at metastock.com/saleschat. And you can also go to metastock.com/summitdeal. I love this stuff. I love the ability, like I said in the last session, to just be able to scan, ignore all the stuff that's just garbage and I don't care about. I want to be able to focus and be able to make a trade. I don't want to look at every stock in the S&P 500 every day. Most of them aren't going to have an opportunity. I want to focus on what has an opportunity. So again, the details are, give us a call, 800-882-3040, metastock.com/saleschat or metastock.com/summitdeal. Real quick, thank you to Stocks and Commodities for sponsoring today's event. We appreciate it. It's a great magazine. You should get a free issue. In fact, if you go register right now, you can go to metastock.com/tradersummit. You can sign up for a free issue. All of the presenters today have offered gifts as part of kind of the registration process. metastock.com/tradersummit. Particularly if you're on YouTube and haven't registered, get registered. We'd love to be able to send you out a free magazine and any of the gifts that you want along with that too. So in any case, our next presenter is Fausto Pugliese. And I love Fausto. I'm trying to decide which I can either, I think I'm going to talk about how Fausto is one of our presenters that had the prestigious award of being voted the most handsome man on a cruise that we had one time. In addition to being overwhelmingly handsome, it wasn't a cruise that we went on, but he told us this story. It was a really good story. But in addition to being exceedingly handsome, he's also a very, very good presenter and will fit in well with the very good presenters that we've had today. Fausto, I hope you particularly enjoyed that. I know I have a choice with a couple of stories that I like to tell. So there you go. How are you doing today, Fausto? I don't have any audio from you. I have no audio for you. I do show that you're broadcasting. And sometimes, I don't know if there's a USB plug that you can unplug and plug back in really quick. Sometimes that helps. If that doesn't work, I have other methods to get you broadcasting.
There it goes. Sound better now?
Yeah.
There we go, huh? I knew it was something. I knew it was something.
Yeah.
I had the mute off. You would think I would know that by now after doing this for so long, right? So
yeah.
let me get this up and running for you. But how you been? How's everything going with you? Man, you don't age at all. Talk about a good-looking guy. Look at you. How you been?
I'm doing good. I'm doing good. I'd point out the gray hair on the top and the receding milk powder jaw.
I'm getting gray too. Look at that. Definitely got a good webcam over here. I can see pretty well. You know.
Yeah. Craig does a good job with them. I'm going to get out of the way. Let you talk. You always do a great job. Welcome. Thank you for coming today.
Well, thank you very much for having me. It's always great to be here on the behalf of MetaStock. And let me get right into it, everybody. Let me get some excitement. So I really quick want to ask everybody just one simple question. Could everyone just answer this question? How do stocks go up and go down? Let's see. I just want to see how you guys answer that question. How do stocks go up and go down? If you can't answer this question, then you probably should quit trading. So just another question. How do stocks go up or down? Mike, Stefan, Michael, who we got in here? Stacy. How do they go up and go down? Exactly. Buyers and sellers. So what I'm going to show you really quick right here is this. I'm going to teach you one of the big arts of trading. Now, I've been doing this for 25 years. I live here in New York. I was trained by the best traders. What I'm going to show you is something really quick right here. What I'm about to teach you is this. I'm going to show you how to follow the money. Okay, here we're looking at a stock, TLRY. Stock came out with earnings announcements today. They were pretty damn good. If you know TLRY, this stock had just a fun experience of stock running up and down. But you could see that there was almost a 250,000 shares sitting here at 16. Okay, now if you want to know what is it doing and what's happening, how that happened, then you're going to really enjoy this presentation a lot. So let's get ready and get right to the point. First of all, let me just warn everybody that for compliance purposes, future results are not indicative of the future. There's no guarantees. There's no promises. You know, I mean, I guess Jeff said that better than anyone. Listen, this is just for educational purposes. So, you know, please just sit back and enjoy it. Watch. You got some great presenters, but just be careful. Don't go out there and trade what you can't afford to lose. All right. Now, what we're going to learn today is this. I'm going to talk about how to follow the big money. Okay. How to use something called total view. How to use something called level 3. Why do 90% of the traders struggle to be consistently profitable? Okay. And why every trader needs to have certain tools. Now, you got a great platform in the MetaStock platform, but the question is, how are you using it? How are you trading with it? Okay, I'm going to talk a little bit about how I utilize it and what's going to benefit from it and probably what you're doing wrong. Now, what I was always taught is that, like I said, I live here in New York. I was trained by some of the best traders in the world being here in New York. And I'm actually to be, I don't know if you know this, Jeff, I'm going to be 50 in September 18th. So you don't forget that. I've been doing this since I was 22 years old. I love what I do, because I've changed people's lives. And not only that, but I also change people's lives in a way to let them know if they should continue to do it or not, because it's not for everybody. It's really not. There's a lot of strategies out there. You got a lot of people that are going to teach you how to trade, but you got to go through a couple of them to find out. But we all could agree one very important thing, and that's why MetaStock holds these events. Every single one of you need to learn, not from one, but from several mentors. And you got to find the right one you like and their style before you could obviously move forward. But don't be what 95% of the ignorant people, maybe 99% of the ignorant people, they try to go out there, come to a couple of free webinars, and they figure they could do it themselves. It doesn't really work that way. So a little bit about Cybertrade University, and we're going to get right into it. So like I said, I started Cybertrade University back in 1995. The reason why is because before I got started, I was a prop trader. I still had to work for a brokerage firm, and I had to learn from them. And I didn't like it back then because I had to split the profits. I was semi-retired at the age of 24. Obviously, it's not good for a 24-year-old to be semi-retired. Trying to explain that to your girlfriend and your mom. But but I was more of an entrepreneur. I wanted to build on myself, but I found out if I left the brokerage firm that I worked at, it's going to be very difficult to succeed, to be a good trader, because you have to have a team around you. You have to surround yourself with good traders. Listen, a lot of you guys are staying home. You're like, what do I do? Who do I trade with? How do I pass ideas around? You know, even though you might have a mentor, you still got to have a good team. So what I'm going to do is I'm going to invite every single one of you to come into this room right here. This is our professional trading room. Okay, and I'm going to invite every one of you to come in there, and I don't want you to judge us on our winners. I want you to judge us on our losers, because I think that's everyone's biggest problem. They don't know how to take losses. But I want you to see the people who we train and how well they do, and, you know, more or less how we mentor them and work with them. But I want to waste your time, you know, before we get there. So let me kind of show you what our strategy is before we move forward doing it. So this is basically the trading room. Everyone's going to be invited. Now, I started this, like I said, I started the first one out there before anyone did it. I know there's a lot of them out there. Some of them are our students, some of our old instructors, so which is great. And maybe one day, maybe you could be one of them. So let's go out there and begin. All right. So did you see NCTY this week? Did anybody see this stock? NCTY. Just give me a yes or no. Yes or no. Did you see it? Yes or no? It went from, you could see right here around, what is this, 1 o'clock. It ran from $10. Actually, let me get my pointer so you guys can follow along. It ran from $10 and ran all the way up right to the close, ran to about 13. No one saw it? Think about it. If you bought 1,000 shares of that stock, okay, and ran from 10 and you sold it at 3, how about this? Forget about that. How about you bought it at 11 and you sold it at 12 and you made $1? Do that every day. $1 a day is $1,000. It's $250,000 salary. Who here doesn't want that job? Carlos, you did see it? Great, great. Well, at the end of the day, one thing I've learned as a trader, and what I learned from my mentors, is that we don't really care what we trade, because I'm actually a day trader. A day trader is, we just make our monies for the day. That's it. Now, I do swing trade. I do invest. But I've learned that you have to understand what happens over the course of the day before you could know, should you do a swing trade in a stock? You know, should you go out there and invest into a company? Because it trickles down to the same thing. But a lot of people like the day trading aspect because, you know, you make your money and you're done. That's it. You know, like, listen, you could sleep at night. Whatever happens, you know what's going on with COVID. You hear what's going on right now, that we have the Delta virus coming in. They might shut everything down. Remember what happened when they shut everything down back in 2000 with the market? What do? We dropped down about almost 10, 15,000 points. You know what? You might think that'd be the worst thing that ever happened, but for people like us, it's the best thing could happen, because the way we make money, unfortunately, is for catastrophes. So just be very prepared. I think that's why a lot of you guys are here. But how do we capitalize on this every day? Well, let me just fix it. I got to change my mouse here. So there's a lot of stocks out there that are moving. Here's another one, BTBT. Just another one. How about this one? Stock ran from $5 at 12 o'clock to $9, up almost 100% in a half a day. So there's a lot of big movers every day. And by the way, these are just recently stocks. Now, and there's a lot more that's moving too this morning, and I'm going to talk about it. I don't know if you guys saw what happened with all the Chinese stocks, with all the education stocks, EDU. What was the other one? TAL, GOT, GOTU, G-O-T-U. There's a lot of them out there. You see what's happened with cryptocurrency stocks. You know, crypto had a big rally. You know, as a trader, kind of like, listen, we didn't go to school to be analysts, okay? And you don't want to try to always go out there and overanalyze things. But if you just follow the orders, that's what makes things easier. Let me tell you how we find these stocks, and then we'll teach you the strategy of Cyber Trade University, and then hopefully you'll see what we do in the trading room so you guys can understand what the concept of what we do here. So, do you have an alert service? Well, the one thing that's nice about the MetaStock service is that it has a scanner for you. Very good scanner. And right now we're just looking at something called the big percentage gainers and losers. Now, a lot of people like watching TV, they're watching CNBC, Fox Business, all that. And, some people don't even like TV at all. It says, I don't want to deal with TV. I hate the news, fake news, right? Well, when you're using a MetaStock platform, and maybe you have your traditional stockbroker, you know, the big percentage gainers is what we usually just work off. All right. You know, like today, there were a lot of stocks out there that were moving in the big percentage gainers. And, you know, some of them were like BTBT right now. Obviously, that's making a very big move. I don't know if you guys saw this one. You guys see BTBT? Look at this thing. It just got halted and it had a nice run. Ran for 750 just here 11:30 before I got started, and ran all the way up to about $9.13. Now you're probably wondering, Fausto, where'd you find that? How did you know it was going up? Well, if you go through the big percentage gainers and losers on your watch list on the MetaStock, you'll see it. It's the biggest percentage gainer out there. So the stock right now is what? How much is it up? 51%. You know what I mean? As of right now, who doesn't want to trade that stock? But I know everyone was talking about Apple. You know, Apple. What's Apple doing? Okay, Apple is, you know, had earnings. They did pretty well. They're down about $1.80. I would rather trade, okay? I would rather trade a $5 stock than trade a $144 stock. One of them moved up almost 50%. The other one's down 1%. You see, it's all about risking less with high amount of reward. At the end of the day, you think my wife cares? You know, what did you trade today? How much money you made? All she cares about, I got another son, my second son is going to college. I got to pay 2 damn colleges. You know what that cost today? You know, you think she cares what I trade? She just cares. Did you make money today, honey? That's where it comes down to it. Okay, so scanner, big percentage gainer and loser. Let's start talking with TLRY. That was the stock I just showed you just earlier on our big iceberg order platform. Here you can see the stock at 8:30 this morning. Okay, we called it out this morning. This was actually we do in the trading room. By the way, any of you guys trade pre-market? Anybody trade pre-market? Gary's laughing pretty loud. Here's actually the chat in the trading room. You can see it's one of our instructors. We have several instructors in our trading room. You know, it's just not me. We're very big when it comes to customer service, and you know, I have a lot of good instructors out there that work for CTU. And you can see here's Josh talking about TLRY, and you can see how the stock. You know, this is actually AM. This is Eastern Standard Time. How we were watching the stock here, and you can see it ran all the way up to 16. See it right there? And I'll just bring this up over here. You can see it right here. Actually, let me bring up an easier chart. I don't want to talk about that yet. That's level 4. I don't want to throw you guys off. It's going to bring a quick chart. But you can see how the stock literally ran to a price right around here. It hit 16. It came back down to 15. Now it's back up to 16. Okay? So we're going to talk a little bit about that. All right? So how did that happen? All right, let's put this back down. All right, so you need to know where the buyers and sellers are. Listen, how valuable would it be if I was to tell you how to follow 70% of the buyers and sellers out there? Think about that for a second. I'm going to show you exactly where to find all these big orders. Now, remember, do you think you're more smarter than Warren Buffett? Do you think you're smarter than, you know, BlackRock? You think you're smarter than Goldman Sachs or Morgan Stanley? How about this? How about the algorithms? You think you're smarter than them? You think you're smarter than the high frequency trades? Okay. How do I know? Because I used to run them. That's what I used to do. I helped develop a lot of these ECNs. Okay, I'm actually one of the original day traders that started this whole industry back in the early 90s. Now there's millions of people around the world doing it. What changed? Actually, ticket charges got cheaper. Technologies like MetaStock came around and help you dissect it easier. Internet got faster. We didn't have to do this on a 56K modem. All right, but what hasn't changed is that the stock market is going to be there to the day we die, and it's going to keep going, and everyone's so concerned about it, and we know there's no business out there is going to pay the money than doing that, than dealing with this. So, but you gotta follow the orders. All right. So this is why majority of traders fail. They try to overanalyze things. They try to overthink things. They sit there and worry about the book value. Listen, it's all about following the money. So what are the big things that you need to do to be successful, on a platform? Listen, You have some great presenters in here. We all have a little bit of a different style, okay? My style is I don't use about 80% of what the platforms give you because I'm more of a momentum trader. I'm what's called a tape reader, okay? And a tape reader just looks at orders, makes their money, and calls it quits. So this is basically what we use. We use a scanner, a simple chart, NASDAQ total view, and time and sales. That's about it. I don't know if you guys ever tried day trading. Maybe you said, oh, I heard about it. It's very scary. Listen, I swing trade too. And if you're an option trader, I'm going to tell you one thing. You bet it's actually 10 times harder to be an option trader than to be a stock trader because the movement of stock that makes an option move. You want to be a good option trader? You should learn how to trade the stock first because then you know what option to trade. That's basically where options come from. That's why they call it an option. It's another option to do it. But to do it right, you just got to keep things what we call here the KISS method. Keep it super simple. So the trend is your friend. Don't bet against the trend. All right. So let's talk a little bit about this. Let's talk about the stock that we traded, the stock EYEG. Okay. Look at the stock right at the open. At 4 o'clock, news came out. All right, the stock literally ran from $3 all the way up to about $9 a share. Now, I don't know if you guys ever trade after hours, but we make a lot of money. And most of my traders, we love trading pre-market and after-market. And I'm not going to go into detail why. When I invite you in my trading room, you'll see why we do that. But there's a lot of opportunity out there to trade certain stocks. And, and you could see EYEG tanked after the market opened. We had a big rally, the stock went up, and boom, it came back crashing down. Why would a stock go up so much? And why would it go down so fast? Okay? It's because some people are just not using the right data. Now, let me ask everybody a question here. Does anybody here use level 2 quotes? I know a lot of brokerage firms offer it. Does anybody here use level 2? All right, I'm going to explain how it works. Let me get my crayons here. There we go, is my pen. Okay, so you got 3 columns. 1, 2, 3. 1, 2, 3. Okay, so the first column is a 4-letter abbreviation of a brokerage firm or an ECN, which is something that allows us to become a brokerage, a market maker, allows us to place bids and offers. Second column tells you the price that they want to buy for, and the third column is telling you how many orders are out there, okay? I'm sorry, how many shares are out there. The other one tells orders. How many shares? Everything here is multiplied by 100. Sorry about that. Everything here is multiplied by 100. Whoever wants to buy the stock for the most amount of money is up on top. Whoever wants to buy it for less money is down at the bottom. Now, the same thing for the sellers. Whoever wants to sell their shares is here on top. Whoever wants to sell for more money is down at the bottom. So what you're looking at is what's called a negotiated market. People are advertising what they want to buy and what they want to sell the stock for. That's basically what it is. Problem with level 2, it's outdated. It's been outdated since the 90s. We're already in 2021. So why do they have it? Listen, it's free, it's pretty, it's moving, it's data, it's quotes, but it tells you crap, okay? It's not as good as it used to be. So let me clear this out. Erase all drawings, and let me get to something called level 3. Now, does anybody here have level 3? Anyone here have level 3 quotes? Remember, what I'm about to show you right now is about 70% of the volume, so please pay attention. I don't want to lose anybody because I'm going to ask questions, and if you don't answer the questions, that means you're confused or you're too busy watching what's going on TV. All right, and if you can't listen in, you shouldn't be here in the first place. Listen, I take this very seriously, and I hate seeing people lose money. You make mistakes, you're going to blow up your account. Okay, so who here has level 3? Doesn't look like a lot of you don't. Let me explain to you what it is. Oh, we got one person here. All right. So listen what's going to happen. What you're about to hear right now is going to be very disturbing. Okay. By the way, if when you guys get a chance, I don't know if you've gone on our YouTube or Facebook channel, actually even a homepage or our website. I was actually featured on NASDAQ. Let me just show it to you. Cyber Trading. I'm just going to go to our website, cybertradingversity.com. Right here, I was actually featured on NASDAQ. I was a regular guest before they closed it down. NASDAQ wants you to learn how to trade the market. And before COVID, I was always going on there and talking about how to relevel a total view, how to use total view, how to use total view. And I was there almost every month. But when you get a chance, watch this video. I think you'll be very impressed. By the way, you think NASDAQ needs Fausto Pugliese to come on their show to show you how to use these things? Yeah, they did, because that's why they want people like me to come on, and that's why you need to understand how these things work. So pay attention very carefully. What you're looking at right here is every single order around the entire world. That's right. You have a seat on the exchange. Okay, so you're getting 20 times more data than level 2. You see, level 2 is only showing you the best buyer and the best seller. It's not showing you all the buyers and sellers out there. It's just showing you the best buyer and the best seller. Now you're seeing all the buyers and sellers at every single price level. Think about this for a second. This is how we utilize this data. Here at Cyber Trading Verse, I know it's going to sound ridiculous. We do not teach support and resistance levels. Now, you probably fall off your chair like, wait a minute, that makes absolutely no sense, Fausto. I'll tell you why. You cannot have a support level unless you have the buyers to support it. You can't have resistance levels unless you have the sellers out there that are going to resist it from going higher. So unless you see those orders out there, it's worthless. So let me show you what we got. Let me put it in layman terms. Here you have a stock right here, time, TME. Stock started at 10:30. It goes all the way down and stops specifically at 960. It doesn't stop at 10. It doesn't stop at 99. It stops at 960. Now, why, out of every reasoning, why would it stop at 960? Because you might be looking in the past of like, but there was such major support at 10. Why 960? Because if you look over here on Book Viewer, on level 3, which is what we call it here, you have 237,000 shares out there. Not 200, not 1,000, 237,000. There are 37 orders out there. Now, you think about this for a second. How do supports and resistance levels come to fruition? Oh, buyers. How many of you here see those 237,000 share order out there at 960? Not that many. How about this? Here's another stock, Nikola. Okay, you all know about the EV stocks, right? There's another EV stock. Stock goes from 1380 all the way and stops at 1450 in a matter of, I don't know, about an hour. Could you imagine buying a stock at 1380 and selling it at 1450? How about this? I'll use simple math. You buy it at 14, you sold at 1450, 500 shares, 1,000 shares, $500, $500 a day. Do that every day, $100,000 a year salary. Oh, sounds pretty interesting. But how many of you like, you know what? I didn't sell it at 1450 like a jerk. I rode the thing back down. I don't understand. Why did it go down? It went down for one reason and one reason only. You look over here on the right on the sell side. And let me get my pointers out here because things always got to keep going back and forth. The stock literally went from 1430, stopped exactly at 1450, which is right here, because of an 85,000 share seller out there. Okay, who do you think is going to make more of a resistance levels? The 4,000 share seller, the 300 share seller, or the 85,000 share seller? It's the only reason why the stock went down. Okay, the only reason why. Now, I want to go back to something called level 4, which I didn't show you, which I showed you earlier. Remember that stock I told you about, Tilray? Okay. Remember I told you there was a 260,000 share seller? Well, guess what? The stock is going up. Okay, it's already at 1670. I'm going to show you something else. Okay, pay attention. Don't go anywhere. I want you to look at this right here. You see the chat room right here? Watch this. See right at the time before we started? Look at the time right here. at 11:48. Till rate is strong, can be a push going to the close. Look at 54, iceberg order for 250,000 shares at 16, okay? Read between the lines. Read between the lines. The stock just went to 16.20, okay? So before we start, if you bought 1,000 shares of that stock, guess what? $200, do that every day, there's your $50,000 salary. But anyway, we're not done yet. We still got more to talk about. All right, so anyway, let's put this into perspective. What direction is TIGR moving in? Can everybody answer this question? Okay, so Martin, the answer to your question is this. Okay, Martin's question is this. He says some of these traders are shown in order book, but those who are not, icebergs show orders, can be a trap sometimes. Well, Martin, listen, we didn't get there yet. And my biggest question to you is this: who trained you? Who trained you about iceberg orders? Because I actually came up with that word. All right. That's the thing you have to ask yourself. And we're going to get to that question at the end. But I don't have too much time. I got less than 20 minutes because I want to make sure you guys get ready for the next presenter and you guys can get registered. What is the direction of this stock, everybody? I asked, come on, there's over 100 people. There's 200 people. There's several hundred people in here. Why am I only getting like 5, 6 people? Come on, you can't answer this question? It's a very simple question. Is it going up or going down? Don't blow up your count. Is it going up or down? Simple question. Okay, now we're finally getting answers. Down. Carlos is down. Gary says down. Mark says down. Good. Congratulations. Just passed kindergarten. Okay, it is going down. Okay, good for you. Now the next question is this. Is this going to zero? When is it going to stop? You ever get into a position and you're like, oh my God, when is it going to stop? Do I take a loss here? I'm already down $2. What do I do? Right? You could use all the technology and bells and whistles. You can call all your friends up on the phone you want, and you can turn all the TV stations or look on your cell phone, whatever it is. I'm telling you exactly what you need. You got to know where the buyers are. Let's go to NASDAQ Book Viewer. Oh, what a coincidence. There's 213,000 share at 1380. We think it's going to happen at 1380. We think it's going to happen. I'll tell you exactly what's going to happen. Stock's going to go up because that is called a demand. Support levels are built by buyers. That is a major buyer up there. And if you were prepared to buy it, guess what? Stock goes from 1380 all the way to $15. By the way, is anybody confused yet? Did I lose anybody? Did anyone get lost? I've only been talking for about 10 minutes. Could you imagine what you will learn, if I was able to teach you for, a week? Imagine what you learn a month. This is trading 101. You know what the hardest part about trading? The discipline, the psychology. People not like knowing where, do I get in? Do I buy it? Is that like you just mentioned to yourself, Martin? How do I know this guy's real? How do I know it's not fake orders? Okay. Listen, if you think that you're getting into a business, and let me tell you something, 95% of the people that come join CTU, we don't even train them, or they find out it's not for them. And you know what? That's not a bad thing. That's not a bad thing, because you finally realize maybe you don't have the mental state for it. Maybe you just realize my God, I didn't know it was this kind of, maybe, now I know what I'm going up against. So it's not a bad thing, to go out there and do something. Listen, it's no different than, a doctor putting you on medication. You need it, right? But maybe that one doesn't work. You got to try something else. Well, thank you very much, Gary. So anyway, let's go back to NCTY. Okay, so NCTY. Could you guys tell me if the stock was going up, where is a resistance level? Where do you think this stock might back off? Where do you think it'll stop? Because remember, the goal is you don't want to look at the past. We're here to teach you how to predict the future. Right? Everybody would love to predict the future. Yeah, I'm telling you how to predict the future. Tell me where you think other people are selling. Where do you think other people are selling? Exactly. Right here. Sellers on the right, and the big seller is right here. hold on, 60,000 shares right there. Not these 500 shares, not this 100 share garbage, 500 share garbage. This guy right here is going to change the world on that stock, okay? But when you look at this chart, it says it's going up. But when you look at this, it's where it's going to go down. And you know what? As much as you saw the stock going up, what did the stock end up doing? It went to that resistance level of 1380 and came right back crashing down to 11. Think about this for a second. How many times you buy a stock and as soon as you bought it, the damn thing goes down? And as soon as you sell it, it goes up. Sometimes you think like somebody's like watching you, I can't win. It's like, why is it always the opposite? Listen, I'm going to tell you right now, get this out of your head. They're not watching you. You know what the problem is? You are not watching them. That's your problem. Once again, you have to ask yourself, who really trained you? Like I told you earlier, and if you logged in late or whatever, listen, there's a reason. I live in an area on Long Island. Okay, if you're familiar with Long Island in New York, it's actually, it's a beautiful area. It's the suburbs outside New York. Like New Yorkers hate New Yorkers. Let me tell you, at the end of the day, this is the financial capital of the world. Some of the biggest traders in the industry live in my town. They're members of my country club. Okay, believe me, I want to leave a long time ago in New York. It's getting expensive, but at the end of the day, this is my business, and these guys are stuck here. I learned from them. Even till today, every day I was learning with them, with the market crashing, what they're doing. And, and there's nothing really has changed other than things became more electronic, especially after COVID. Look at the New York Stock Exchange. The damn thing is, you're going to have bar mitzvahs and weddings there soon. I had a cocktail reception there, believe it or not. I invited all my traders. We do an on-site class. We had a whole cocktail reception on the floor. It wasn't cheap, but you know what? They learned a lot. And you know what they learned? They looked at all those monitors and like, wow, look at all these orders they're looking at. Yeah, you notice that? Big difference in what most people think. So these are called iceberg orders. Now, I came up with this word after watching the movie Titanic, which I assume a lot of you know what happened to that beautiful ship and those great people. Everyone's focused on top. No one's focused on the bottom because they don't have the right tools. Listen, having a great platform like MetaStock is great. It's great that you made an investment in the platform. It's great that you went out there and you bought what you need. All right. But you also need to know you need to trade with good traders. You know what I mean? Like you can't just be out there and think like this, MetaStock, they know to be successful, you have to learn from successful traders. And me personally, why I do this, because some people always ask me, they say, Fausto, if you're such a great trader, why do you teach? Well, the reason why I'm teaching is because I'm always teaching new traders to be part of my team, because sometimes they become so good that they eventually my goal is you grow up and you move on. So I'm always recruiting. It's like a company. Why is Delta Airlines hiring new employees, 5,000 employees? Why, they don't have enough? No, they're growing. We're always growing. It's your team that makes you good. That's what it is. It's not a one-man show. So what about the fake orders? Let's talk about the fake orders and the breakouts, because that was the whole goal about this. Now, let's talk about this INTZ. Okay, now look, here's a print of INTZ, a stock that we traded. You probably saw it earlier. We saw the stock around 1230. You could see INZ got halted. Okay, you could see right here that Chuck, he writes WW, worth watching, at 450. See it right here? 450, we were trading the stock, and look where it went up. In a matter of, I don't know, an hour, it ran to 7. Okay? Now, the goal is this. Where is resistance levels? Well, $7, you could see that there was a 26,000 share seller out there. 2 signs to spot a false breakout. Orders and transactions. So, there's your orders and there's your transactions. So if you look right here, look what ended up happening to this stock. Stock went up, hit that resistance, hit those orders, stock hit resistance, came right back down. That's really all it comes down to it. Because if you weren't prepared for that, you would have got beat up and would have lost that nice profit, or better yet, you probably could have lost money on that trade. So let's get back to one other thing, which I can't really teach you now because I'm running out of time. So I want to kind of answer some questions, but let me bring up one last thing for you, okay? Remember Tilray, okay? Let me just bring up a chart on Tilray. You guys been following along with Tilray? What happened with Tilray? Tilray had a resistance levels right around here, around 16. Everybody see that? See that right there? 16. It hit 16 at 10 o'clock this morning, came right back down, hit 16, hovered there from 12 o'clock all the way to 12:30. Now the stock went all the way up to about 12 to 16:30. Think about this for a second. Why did it have a problem getting past 16? Do you remember? I'll tell you why. This is level 4. Okay, I didn't cover this yet, but I'm going to talk about this later. If you look at this red bar right there, there was 250,000 shares out there. Now, let me contradict what I'm saying. I thought, Fausto, you said that if there's sellers out there, the stock should go down. That's correct. But what happens if somebody buys those 250,000 shares? You know what? That could happen, right? That could happen. Somebody like, oh, you know what? I like Tilray. Because you know why? Tilray, let me just tell you, Tilray, at one point, if you saw not too long ago, stock ran from 11 all the way to about, I don't know, $70, $67. Everybody remember that? Great short squeeze. Great short squeeze, okay? Which we'll talk about that when you come to my trading room. So when you're looking at 16, you're like, and you're looking at that long term, it's a totally different ball game. But as a day trader, we analyze the orders because somebody went out there and sold the stock and someone bought it, which you would think resistance. But if someone bought a big block, all of a sudden it's a big buying frenzy. You ever go out there and look at the home housing market going on? You're like, oh my God, like what's going on in the house? No one with this stock, no one, like here in Long Island, average home is like $500,000 for some, 1,200 square foot home, an average medium home. I don't know where you live, but I mean, the market's been up almost, 50, up about 12, 13%, over last year. It's like 50%. You would never think like, that it's like saying that house you're paying now never be worth $1 million next year. Never in a million years. And you know what? Someone actually did buy it and the market does go there. You know what? That could happen. It's the same thing with the stock market. How do you know that? By following the money. Okay, following the money and seeing that, because that's what drives these things up, and that's how you follow the trend. So, who here wants to know how to follow the market? Well, this is what I have to explain to you. First, the most important thing you all need to learn. Okay, I only have a very small window here to kind of educate you guys. I've been a regular guest. I know Jeff since the day they probably even started. Probably 2-3 years, and me and Jeff go way back, and Jeff always invites me back because, listen, to be around this long, you're obviously doing something right. And secondly, there are different traders in here, and you might try something, and you might not like it, but you want to do it. You just haven't found the right mentor. But every one of you need to listen to every single mentor in here, and you're going to have to try a little bit of everyone's stuff, okay? Hopefully you like my stuff, and you want to try this, but you're not going to know until someone coaches you through it. Now, I'm going to show you how to read, like, the ladders and everything. Like here, look, there was an 800,000 share buyer in here. Look at this thing. The stocks. This is yesterday. Okay, this is a stock MOV. It was an MOVI, I think it was, or something. This stock just literally from 9:30 ran from like 16 all the way to 19 in a matter of 30 minutes because this buyer out here for 780,000 shares, 800,000, let's keep it that, kept bidding it up and bidding it up and bidding it up. He couldn't get it. He just couldn't get, he just kept buying it up. But what you got to watch out is that when someone sells it to him, that's how the stocks crash. Because you know what? Eventually someone says, oh, you know what? I got the guy to buy as much as I can. Now let me screw him. Boom, sold all those shares and ran the stock down. This happens. You know it happens. It happens every day. It happens in stocks all the time. If it hasn't happened to you before, you could have been prepared for that if you just knew how to play the game. So this is the reason why Cyber Trading University has been featured on pretty much every brokerage firm in the industry. Schwab, MetaStock, TradeStation, Thinkorswim. I do presentations for all of them because, you know, these brokerage firms know that if you're an educated trader, you'll be a client there forever. A lot of people blow up their accounts, and it really stinks. If you haven't done it before, it's terrible. I blew up 2 accounts when I first started because I was an ignorant 22-year-old kid before I said, you know what, maybe I should work for somebody. And then that's how I finally realized. And ever since then, I never blew up an account in my life. I've been through some of the worst catastrophes. I've been through the internet bubble. I've been through 9/11. I've been through Hurricane Sandy, the financial crisis, you know, COVID. I mean, I can go on and on and on. But, you know, presidential elections, how things change. So there's a reason why. And it all starts by learning how to play the game. So this is what I want to do. I want to teach all of you guys how to trade. I want to show you, if you like what you see, I'm going to do a big promo for all of you, okay? I want to invite you in the trading room, and I want to teach you how to read this because I can't teach you all in less than, 30 minutes. So I want you to come into our pre-market. I want you to see how we scan the stocks. I want to show you and introduce you to traders just like you so you can build a good relationship, make some new friends, find out, how to trade with everyone else because it's more of a team effort. Now, this is what I'm going to give all of you guys to learn what I'm going to do for this. I'm going to offer everybody a bronze course. I'm going to do something this is the first time I ever did this, actually, believe it or not. I'm going to teach you how to find these stocks. I'm going to teach you how to find the best brokers, how to use level 2, level 3, time and sales, shadow the smart money. I'm going to teach some technical analysis, the best times to trade. By the way, it's not a full-time job. The best times of the week to trade. I'm going to show you how to go through a watch list. I'm going to teach you how to follow support and resistance, consolidation patterns. I'm going to teach you how to short stocks. I'm going to teach you how to do that, which, by the way, is so much fun. I'm going to show you how to journal. We're going to give you a journal list. Believe me, you got to take trading very seriously because you could blow up your account and you don't want to be there. You're going to get 3 months of premium access to all those courses. You're going to be able to talk to an education advisor. We take trading very, very seriously with customer service. So, we want to make sure this is for you or not. Now, this is the bonus. You're going to get all these workshops. I'm going to teach you how to use ECNs. I'm going to show you how to shadow these big high frequency trades, everything. Entries and exits with workshops over and over again. It's a lot of content. And a lot of it's going to be live. So, and once again, you're going to get your own personal education advisor too, and an instructor to help you coach you through this within that time frame. Now, this is the bonus that we're going to do. This whole value we sell is $2,600. Okay, it's a lot of content. But as today, as a bonus, I'm going to throw this in because it's the summertime, and let me tell you something. September, October, November, the busiest months to trade, especially we're going to be, it's not really an election year, but you see what's happened with COVID, you heard what's going on with Delta, you damn well better be prepared for the next catastrophe. It's not a matter of if, it's a matter of when it's going to happen. This is what I'm going to do. All this stuff, and that's the promotion link, I'm going to give it away for $797 or 3 payments of $297. So you get a $100 discount if you pay it in full. All right, so I'm going to give you all that stuff for that. Now, listen, it's not cheap, it's not expensive, but I'll be honest with you, I can't have you in the trading room if you don't understand how to play the game. So, I'm not here to, it's a lot of work to train somebody. It really is. And I think nobody here wants to take advantage of somebody. First of all, I don't know if you ever hired free employees. It doesn't really work that well. But to be a part of a team, you got to learn how to speak the language before you can actually go out there. And then the worst thing that can happen if it doesn't work out, you don't have to continue. So let me post that link up there. And then in the meantime, if anybody here would like to, if anybody here would like to, any questions, just please give me once again, just let me know and let me answer some questions for you. Where is the link? Let me give you guys the link. I had the link here for a second. Here's the link. So you guys can register. All right, you have any questions, Jeff? In the meantime, I got about 5 minutes before the next presenter comes in. Listen, if you believe that that one stock literally just paid for itself, the TLRY, okay? that one stock, just being in here, what's happening. If you like and believe that there are orders out there and want to see it and see how it happens and who does them and understand how to trade them, you just got to do it right. You have to do it right. All right. Now, when could you start? I personally tell people start right away. I don't know what the waiting is, but you got to know exactly what's happening with the stock. Let me just see what I got going on over here. All right.
We do have a question for you, Fausto, from YouTube. Hans wants to know if you could talk about what level 1 to level 4 are for order information.
That's an excellent question. So let me change the slides here and go back to a level 1 screen. So level 1 is this right on top. Level 1 is this price right here. It's the quote. That's level 1. Level 2, so level 1, you're seeing the first level of orders. You're not seeing anything below. Level 2 is as you work your way down, you're seeing all the ECN orders out there, but level 3 is showing you all the orders that are on that ECN, that electronic communication network. So basically, an ECN is an exchange. So if you want to see all the orders in the New York Stock Exchange, you got to have access to that. If not, you're trading blind. All right, hopefully that answers the question. Any other questions?
Not on YouTube. A lot of comments about like following the biggest organisms like in the ocean and stuff like that, but not a lot of questions. So if you guys do have questions, it would be a good time.
Yeah, well, listen, when it comes to trading, it's just a game. It really is. And people try to make things more complicated than what it is. They want people to tell them. You know what biggest thing we teach? And this is like the opposite what most people learn. We don't tell anybody what to buy and sell. First of all, it's illegal to do that unless you're registered. We don't tell people what to, and most importantly, we don't, our goal is not to teach you how to make money. We teach you how to stop losing it. People have a problem. They don't know how to take losses. Okay. That is what we mainly put our focus, our attention, because you're not going to be right all the time. So you got to know when to listen, you got to know the 30-second rule, you got to know the 3T rules, all that stuff. A couple of questions. If you were to start small, can you trade options instead of buying 1,000? Yes, you can. And honestly, Ralph, you don't got to trade 1,000 shares. You could trade 1 share of stock. Listen, you can't be on demo mode because demo does not work. Okay. It's not reality and it's only numbers as you get better at it. But by trading options, you're actually making it a lot harder on you because now you're dealing with time, spread, and commission. Just trade the stock first, and then eventually, once you get used to, because this is black and white. Once you're good at that, then you could trade an option. Then you'll know why to trade an option because there's a lot of strategy to trade an option. It's like a big rainbow. You ever open up the Crayola cans? Everyone's like, oh, you could listen to every person teach option. They all have a different strategy. You talk to a market maker like me, they tell you the same strategy. You follow the money. Martin has a question. Fausto, are you using the standard indicators and looking for book orders? No, I don't. Honestly, I'll be honest with you. Don't take this the wrong way with other presenters. I don't use any indicators. It doesn't work for day trading. It works for swing trading or investing. But as a day trader, I just follow orders. I just need real-time charts, minute charts, and so on. Is this course online? It's all online. I used to travel around the world and just got enough. I don't want to live in my suitcase anymore. I saw your presentation on NASDAQ on level 3. Seems move real quick. Isn't it hard to keep up? You know what, Michael? That's a great question. Yes and no. There are some slow stocks and there are some fast stocks. So the stock that you saw in that video was the company that came was a Mandora, the Mandora stock that went from 20 and it's what, 300 now. That's the vaccine stock for the coronavirus. Yes. So some stocks move fast, a lot of them move slow. We have different levels, 1, 2, 3, 4, and 5, and we'll teach you that in this class right here. Okay. So don't misconstrue it about, speed wise. And believe me, you'll catch on. Listen, try to teach a kid how to drive a car. Okay. Scariest thing in the world. All right. Try to throw him on a parkway, and all of a sudden he's going to, God forbid, he'll freak out. It's no different. Eventually you'll get onto it. It's not as fast as you think. 95% of what you see out there is all windows dressing. Okay. All right. So let me go, Jeff. Hopefully,
you,
we're
Fausto.
going to meet up again. Thank you so much for having me. And always look forward to coming here and talking on behalf of MetaStock. And I always love talking to all the students out there and traders out there. Listen, before I go, just remember, everybody, you got to learn before you can earn. This is the greatest job in the world. Got some great presenters. Learn a little bit from everybody because the faster you learn it, the faster you get it, the longer you're going to do this as a career for the rest of your life. And that's what the ultimate goal is. So thanks for having me, Jeff, and take care.
Thank you. Thanks, Fausto. Good to have you. Great job. All right, let's go ahead and get this kind of back over here. And another question that we're getting a lot of is, let me just go ahead and do this real quick. It takes a set. There's a few buttons I have to push to kind of just move everything to kind of where we need it to go. But one of the questions that we're getting a lot of today is, can we get a recording of all of the events? And so just to answer that question, it's come up like 5 or 6 times. Yeah, absolutely. If you're watching on YouTube, just hold on to the link. That link's always going to be there for, well, as long as YouTube's a company. We're not going to take it down. It's going to be something you can go back and watch over and over again if you want to. If you're watching on GoToWebinar, what's going to happen is within about an hour of the stop time today, we will send you the recording. Actually, we'll send you direct to the YouTube link, and you can actually kind of watch it there. So that's where we're going to keep everything archived, is on YouTube. While you're up on the channel, hey, it might be helpful for us, quite a bit helpful, if you just hit that like button and that subscribe. We have a great selection of let's say presenters and methods. And I think today's going really well. I'm very happy with the way today is going. So if you also feel like it's useful for you, go ahead and hit that like button. If you don't, hit the don't like button. But make sure to subscribe to the channel while you're there. And we really appreciate it. It does help quite a bit. So anyway, with that, Fausto, great job. Really appreciate it. Very good. In terms of the package, let's go ahead and kind of get back on course here. Just as a reminder, we do have the MetaStock Traders Action Pack that's available, and we're doing a really good summer discount on today. We've got the Barry Burns Top Dog Trader, the Rick Sadler's Patterns for Profit, Guy Cohen, who's coming up right now, the OVI Trader as a 3-month subscription, the Fulgent Chart Pattern Engine, which is actually right after that. Learn MetaStock subscription to kind of help you learn how to use everything. Unleash the power of MetaStock. 2 years of stocks and commodities. So all of this would normally be $3,831 here as a part of the hot summer sale. And it is really hot in this room, but as part of our hot summer sale, we're going to give you a price of $19.99. So you can take advantage of that. Almost all of it's refundable. Everything that's not subscription based is refundable. You can take advantage of that at 800-882-3040. You can get in touch with us at metastock.com/saleschat. And you can also do it all online if you want to. If you don't want to talk to us, that's fine. metastock.com/summitdell. We'd love to talk to you, but whatever is easiest for you. So 800-882-3040 to take advantage of that package. I do want to say thank you to Stocks and Commodities Magazine today. They do an absolutely great job. You know, they've been publishing monthly ag magazines on trading with technical analysis since 1982. They've got over 1.2 million subscribers, and they've done 17,000 different articles over the years. If you register today, you can get a free copy. You do have to select the button that says, give me a free copy of Stocks and Commodities Magazine, but they'll send you a free edition of it. If you do any of the MetaStock subscriptions, you'll get at least 5 months, and you can do at least 2 years. One of the things I think is very helpful for me is I always look to improve what I'm doing when I'm trading. I think you, in life in general, but in trading specifically, you're either always getting better or you're getting worse. There's not a lot of neutral. You're either actively working on improving or you're kind of getting worse, for lack of a better term. The thing I like about Stocks and Commodities is if you're a subscriber, you get a good amount of articles and a lot of different ideas and things that you can kind of look at given to you on a monthly basis. And it's always good to be kind of looking at other ideas, I think. I think there's always things that you can be doing better and I think you should always be actively improving. So there you go. If you want to register and get a free copy of Stocks and Commodities magazine because you're like watching on YouTube, or maybe you just didn't elect to get it before, go to metastock.com/tradersummit and elect to get the free issue of the magazine. Whew, there we go. Our next speaker is a gentleman from the UK. He knows a really good breakfast spot. I haven't been there since before the pandemic, but Guy does a really, really good job, and we really appreciate him coming in. It's always a pleasure to see Guy, and he's going to talk a lot today about his patented OVI methods. So let's go ahead and bring you on here, Guy. How are you doing?
I'm doing good, Jeff. How are you?
Good. I'm hungry for that breakfast.
Well, there's better places now. Once you get over here again, I got 2 new places to show you.
Well, I'm hoping that it's sooner rather than later.
I am hoping so too. I need to get over there. You know, we have a lot of stuff going on. I'll talk a bit about it today, but we have a lot of stuff going on that side of the pond, and institutional, and obviously with people like you guys, you know, with the more retail, the sort of more discretionary focused stuff, and it's important that we get out there. That's for sure.
All right, I just sent this screen share over to you, and I can see your screen.
Can you see it? You can see my screen now.
All
right.
And I'm going to shut up and get out of the way.
No, you don't have to do that. Okay. But anyway, good to see you, Jeff, and good to see all you MetaStock people. I always like to see MetaStock people. You are the more cerebral people in the industry, and I really like that. So we usually have a good time with you guys, indeed. So I have got to whiz through a presentation very quickly today because Jeff has put me on a strict time limit. And I'm going to respect that and respect all of your time as well. And what I'm going to show you today is what we call the big money strategy for small account traders. I'm just going to take off something of my screen here if I can. It doesn't look like I can. Oh, actually, I've just done something really crazy there. So let me just see. Can you still see me now? Can you still all hear me? Jeff, you might want to tell me. I just want to make sure.
We can see both your screen and
me.
You, yes.
And me too. Okay. Well, I think
we see both.
I think we'll be all right then. Okay, good. Sorry about that. I just don't, because I had me looking at me, and that was all discombobulating as well. So what I'm going to go through with you today is a very focused, repeatable strategy. We call it the big money strategy, and we call it the big money strategy for small account traders. But this is really a very subjective term. Nearly everyone I know, whether they're 4-figure traders, or whether they're 5-figure traders or 6-figure traders, even beyond, they all seem to have this perspective that they are small account traders. And it's really more to do with where they want to get to rather than where they are right now. So we call it the big money strategy for small account traders because really it does apply for whether you've got a $3,000 account or whether you've got a $300,000 account and more as well. So this is why we call it that. And I'm Guy Cohen. I'm from Wise Traders. I'll tell you all about me in just a little bit. Quick disclaimer, I know you guys like to do this, just highlighted in yellow, stocks and options trading do have large potential rewards, but also large potential risk if you do it the wrong way, particularly. Don't trade with money you can't afford to lose. Past performance, not necessarily indicative of future results, and what I go through today, not to be construed as specific advisory recommendations. That bit is done. Now, in my universe of trading, we have what we call the 3 master keys of trading that govern everything that we do. And it kind of goes like this. The first master key of trading, and by the way, please do write stuff down. It's really important. I've got some things that will really, really help you today. First of all, market timing. Think about it. If you can at least not get market timing horribly wrong, then you have a chance, don't you? It just makes sense. So we're looking top-down approach, 30,000-foot view. First of all, don't mess up market timing, number one. We don't have to be that granular with it. It's really a question of not messing it up rather than getting it spot on. The second master key that we have is stock selection. This is where we pick good stocks at the right time with higher probabilities. And then the third master key is trading those stocks where we can control our risk and we can maximize reward as far as possible as well. If you think about it, it just makes complete sense. Today, what we've got time to do, though, is focus on stock selection. That's a good, fun thing to do, and that's what I love to do as well. But the other 2 parts are very important as well. Now, small accounts, again, how big and small is a small account? Well, here's Patrick from Canada on the left. He thinks he has a small account, but made $4,500 in an hour. Just telegrammed that to me not so long ago. And then there's Simon in the UK. He's made $76,000 in 206 days, almost 3/4 of a year. So these people still have the perception that they have small accounts, and yet you can see that one account is probably considerably bigger than another there. Now, what we're going to cover today is a few bits and pieces in our training session. First of all, why stocks? I focus on stocks and stock options. I'm going to show you exactly why. And that means that I don't have to do lots of other things. It means I can be extremely targeted and extremely focused. What does that do? It helps me specialize, and it also saves me a lot of time. Then I'm going to go through the secrets of growing I said a small account, but growing an account. I'm going to go through the secrets of that, the very simple things that if you get them right, you won't go too far wrong. Then I'm going to show you something that I think is super, super important, and that is why prices move. Once you have an understanding of why prices move, then you will be able to be focusing on the setups that are likely to be conforming to why prices may well move up or down. The fourth part of the session today is going through the big thing I want to go through today, and that is the big money footprints. Well, this is part of stock selection. Remember, we have market timing, stock selection, and trade plan. This is all about the stock selection piece. It's the exciting bit. It's the bit that everyone really, really wants to do, and this is the bit where we add tremendous value. We add value in all of the areas, but this is the one that is perfect for a presentation and a session like this. Then I'll go through a quick case study of how someone has multiplied their account by multiples of about 15 times in actual fact, and I'll show you how she has done that, and then I'll do a very quick demo, literally showing you the software that we have as well and how you can do it literally in a few minutes, just a couple of clicks as well. So lots to get through. First of all, why stocks? Well, look at the other asset classes we could go into. We could go into real estate, but you don't want to be handcuffed to, obviously, real estate has a place in anyone's portfolio of a certain size. Of course it does. It's a wonderful thing. But if you have too much, then you could be handcuffed to an illiquid asset. So you don't want to be overexposed to anything, particularly real estate in that sense. Now, we can do bonds and commodities. And if you do, great. But you are going to have to specialize in those particular disciplines. That's why I've got the cap and mortarboard there. Then you've got crypto and Forex. Now, as you've seen recently, I realize there's a very big demand and a very big enthusiasm for crypto. And again, it has a place in a portfolio in somewhere in there. But it is a bit of a gamble, isn't it? I mean, who would say that they're comfortable in letting half of their investment go down the pan in 2 months with Bitcoin? Well, that's what happened, from April to June this year. So, it's a gamble. And the biggest winners in crypto are the ones who got in 2013 and before, aren't they? Let's face it. Same goes with Forex. There is no actual discernible edge, mathematically at least, and quantitatively, that Forex traders have. I know there are some people who are very good at it, but from a quant point of view, the retail-based trader doesn't have much of a chance. Again, a bit of a throw of the dice there. And then you've got the alternatives, like classic cars, fine wines, art, all that kind of thing as well. Again, specialist knowledge in that sense as well. So what do we trade? Well, we trade stocks. And the reason we focus on stocks is because anyone can do it, and stocks are exciting. Look at Overstock last year. From May to August last year, it went up by tenfold in value in 120 days. So $1,000 turns into $10,000 if you get it right. All off a setup that I'm going to show you during the course of this session as well. So stocks can be just as exciting, if not better, than crypto and all these other asset classes. Plus, you can fast track your progress in it. You can start as small as you like. It's very simple to learn. Small cost to start, minimal cost to start. So fast tracking it, you can do it anywhere like any other trading thing with an internet connection. You can choose how much you do. You're not exposed to much leverage or any if you don't want to be. You will also get quick results and feedback if you're getting it right or wrong. Also, it is tremendously scalable. You can grow a small account very quickly, as I will demonstrate today. Also, the way that I do it is it's very focused, it's very targeted, it's very simple, it's logical, and it's different. And when I say simple, it's not to say that we're just, doing 1 + 1 = 2. We're doing some sophisticated thing, but if you allow software to do the deals for you effectively, or do the hard work for you, you can make it simple in terms of execution. So if this is all true, then why aren't all traders millionaires? Why aren't all stock traders millionaires? Well, there's a few reasons, and you might have come across this, yourself. First of all, overwhelm. There's so much to learn. What do I start to learn? Which asset class do I do? Which course do I do? Which trading coach do I go to? Where to start is mind-boggling. And if you've been through that, by all means, raise your hand and go, that was me or that is me. What about time? Well, time is a big hog when it comes to learning. You've got a steep learning curve, lots of different methods. Also, some methods are out there, they want you to do intraday trading, which is fine if that's what you want to do. We don't. We are more swing traders. We don't do staring at our screens. But again, time can be a big hog in not just that way, but also the endless pursuit of the Holy Grail and getting burned time and time again is another massive time hog. And there's so many things to choose between. I won't go into the whys and wherefores, but I understand it. I've been through it myself. And if that's you, again, just give me a wave to say, yep, I've been there, done that, and I'd really like to find, a way that's a little bit easier now. And then there's who to trust. And we're talking about who to trust in terms of who jives with you, who resonates with you, which method resonates with you. Now, we deal with institutions and funds as well on the other side of what I do. And they always demand to see proof. They want to see what our equity curve is. So this is our equity curve since we started one fund in February 2020, right before the COVID crash. We're in blue. The benchmark to which we measure ourselves is in red. There's no leverage in this, and we comfortably beat it. And there's up to about 29 million in assets in that particular silo right now. So again, this is what we have to do, and this is what you should also demand as well. Now, the problem is that most private investors never quite get past these challenges and end up feeling rather deflated as a result. So that's hopefully not what you're going to find here. Let's now get into secrets of growing a small account. We now know why we trade stocks. They're exciting and they're very accessible, and we can also create an edge with them, as you're about to see. So secrets of growing a small account. If you have ever felt like this, anxious about risk while you're trying to grow a small account, is growing a small account going to increase your risk? Not necessarily, but a lot of people feel that way. If you've ever felt worried that there might be specifically different rules for if you've got a small account rather than a big account, that can also be a big concern. And then for some people, they just might not even bother getting started. They might do all the watching in the world and paper trading, but they never really actually get started with a real trade. So if you've ever felt like this, don't worry, it's a well-trodden path. Now, here's what you've got to really, really get into, what you've really got to understand, because I know that you're being exposed every day to thousands of indicators and all these things that look very, very clever. You've got to keep it simple. You must not overcomplicate. You've got to remember one thing. Trading is all about people versus people, buyers versus sellers. And the art of the game is to be on the right side, to be on the side of who's winning the tug of war between buyers and sellers over a particular period of time. If your chart looks as untidy as this, then I can assure you, you're not going to get very far, because that's going to create inertia, complication, confusion, and you end up losing money. If your chart looks a little bit more simple and you can determine from that chart who's winning the tug of war between buyers and sellers, then you've got a much better chance. Again, a chart should reflect what is going on between buyers and sellers and give you a clear indication. If it doesn't give you a clear indication, you don't trade that particular chart. Give me a wave if that makes sense. You've got to have that simplicity of knowing which side to back. So if you can give me a wave, that would be ever so good, because then I know that you're with me here. So 3 principles of growing a small account: safety, growth, and mindset. Pretty simple stuff. I'll whiz it through. Keep it simple again. And if you stay on to the end of this fairly small session here, you can also I can also show you how to get a copy of this little report that I wrote, Growth Secrets Small Account Trading for small trading accounts. Now, safety. Simple principles. Don't bet the farm on any one trade. Control your risk. Only have a few trades maximum at the same time. I wouldn't think that most of you should have more than 5 trades on at any time. 3 would be optimal even. And I'll tell you why. Because more is not more. Less is more. If you look at these 2 ladies here, there's Pat and Chloe. Chloe, her average number of trades per week over the last 3 years have been 1.19 trades per week. She has multiplied her account by 15 times in the meantime. This is Pat. In 9 months last year, she traded on average 1.28 trades per week, and she turned a $3,800 account into $33,000. Okay, not big risk, not big activity as well. How'd they do it? They are very, very, very fussy indeed. And they also set easy to reach profit targets. You hear in trading all the time about, oh, I'm only going to risk 1 if I can make 4. On what basis, I would ask? You know, some sort of firing an arrow into the sky or something like that. You've got to make your profit targets easy. I liken it to this. What's the quickest way of getting to first base? Bring first base closer to you. That's how you do it. Ring fence your profits early. Now we go on to the growth part of it. Now, what we do is we specialize in a concept we call the big money footprints for stock selection. Okay, so for stock selection, which is what we're talking about here, we focus on big money footprints. What I mean by that is something I'll get into a little bit later, but we follow the evidence of where big money is lining up. That's what we want to do, because they are going to be the ones to shunt demand against supply. They're going to cause an imbalance of demand and supply, and we want to be riding on that imbalance. So also, not only do you focus on a particular technique, but you can also focus on a watch list of favorite stocks, on a smaller amount of stocks. You don't have to know what's going on with 3,000 stocks. Of course, you're going to miss opportunities. That's not the point. You miss opportunities just, you know, turning left or right on the street. It's not a question of the lost opportunities. It's a question of specializing in something and having a repeatable skill. We want to avoid volatile, messy stocks. We want to avoid trying to be too clever. We want to swim with the tide. If the trend is up, go up. If the trend is down, either stay out or go down. Okay, avoid uncertainty by trying, don't try and be too clever. Now, mindset. Now, we're not talking about the totem pole, dancing around the totem pole and, trying to pray your way into a good trade here. That's not going to work for you. What you need is a set of guidelines. Some people call it discipline. I call it guidelines. Guidelines sounds a lot more fun. It's liberating. And when you specialize in something that works and has a mathematical basis to it as well, that's what's going to propel you into an elite group. Tobias here was a slightly awkward one for us. He joined, he didn't want to obey the rules, and he didn't do very well. He finally got convinced that actually rules or guidelines might be a good idea. And then he reported this to us back in February, 24 out of 25 winners. From a bad situation, that's what he has been able to do. Now he's a raging fan as well by following simple principles and following those guidelines. So imagine that you had a coach just like me, and you've got to justify each and every trade to them. When people trade in pairs, they generally do pretty well because they've got to justify the trade to each other. They're accountable. Be accountable, and again, secure those profits early using the market's money thereafter. Don't get greedy. It's all about quality. It's not about quantity. See the people who have multiplied their accounts by 10x, 15x in a very short space of time, and they don't over trade either. Again, keep it simple. So we've talked about why stocks, and we've talked about the secrets of growing a small account. Pretty much the same as growing an account. So now we're getting into why prices move, and now we're getting quite close to getting to these big money footprints, which I'm really excited to show you because this is the real essence of what we do. But let's talk about first, why do prices move? Well, imagine you're picturing your dream home, and I'm going to give you 3 scenarios where each scenario is going to give you a very important lesson you can apply to trading. So let's go through it right now. Here's a beautiful dream home, and its asking price is only $950,000. Now, you offer the asking price. You don't want to offer too much at this point in time. Why would you? And so does Bob. So you and Bob have offered $950,000, and then Sue chimes in with her offer of $950,000, and Jim does the same, and so on. Everyone's offering $950,000 for this prime piece of property right now. Now, here's the deal. Lots of money being thrown at the property, but all at the same price. Here's the learning lesson. Big money is being thrown at the property, but it's not enough alone to move the needle of the price. So now we go to scenario 2. Big bit of news. Everyone hears about it. New information. Google is opening a headquarters 5 miles down the road from this property. And guess what's going to happen? The area is going to improve. More people are coming in. More demand for property. More demand for better facilities, leisure facilities, restaurants, cinemas, better roads, education, all those things. So Bob sees that Google's coming in, as can everyone else. And Bob says, I think it's worth more. It's going to be worth more. I'm going to pay more. I'm going to offer 960. Sue, with the same information, offers 970. You, same information, offer 990. Jim now offers $1 million. You counter that offer with 1.1 million. What have we got here? We've got a bidding war. What's the learning point? Well, big money alone didn't move the needle, but big aggressive money does move price. Give me a wave if that makes sense. It's not just big money. If everyone's offering the same price, that's not going to move the needle. If you're offering higher prices, that's going to move the needle up. Again, give me a wave if you can. It's that little button that you can see. But there is a third scenario. It's information, but it's what we call scarce information. So Bob had previously bid $960,000 on the news that Google was moving into town. But he's done a bit of due diligence and he's discovered there's an old couple living behind this property who would be willing to sell their big parcel of land, but they only want to do it privately. They don't want to put it on the market, and they are willing to do that on a secret basis only. So he is now the only one with that information, and he realizes he can improve his property, he can build new properties. He's got what they call marriage value. So he's prepared to up his bid privately to, he knows he can bid more for this other property, knowing what he can do with the whole thing. So he ups it to 1.2 million and potentially more. And with that private piece of scarce information, Bob has a major edge over, guess who? You. So Bob is going to get your dream home. And the idea is, let's not do that, because we want to be in possession of scarce information, because information's valuable, but scarce information is life-changing. And if you want to know how life-changing it is, think of a diamond dealer. Diamond dealer has scarce information in terms of their education about diamonds. They know about the cut, clarity, color, carat, source, all those things that affect a diamond's value when they buy it, and then the add value, and then they make a markup of 100, 200%, 2 or 3 times when they sell it. And it's the same if you think of scarce information. What's the Coca-Cola recipe? What's the KFC recipe? It's scarce information, which has fostered companies worth billions and billions, and even more importantly, repeatable profits. Now, if you have scarce information on a regular basis, you too can have repeatable profits. Give me a wave if that makes sense, because this is all super, super important when we get to those big money footprints. The idea is that you end up being the diamond dealer of the stock market. So now we are ready to go into the big money footprints. This is the essence of stock selection. We're looking to follow the big money. Here's where we can see hidden evidence, where you can see not just big money, but aggressive money, not just present already within a stock, but also lining up for more action imminently. Now, there are 3 big money footprints which are readily available for you to exploit. Now, I'm going to show you what they are. And if you can identify them, then you will have a lifelong repeatable skill in trading. Very quickly about me, I'm a nerdy kind of guy. I'm a professional trader, made over 7 figures, thousands of % in personal gains. Started off pretty small with this, had very big runs where I multiplied my account by many times in a very short space of time, like you saw with my other people that I know as well, like 14,500 to 187,000 in 6 months. These are the kind of runs that are possible. I also am the founder of Wise Traders, which is dedicated to serving home-based private investors as well. So to that end, I've been on various media channels. I've written best-selling books with the Financial Times and Wiley out of New York, all that kind of stuff. I've also had clients who have I've either provided software platform services, trading software platform services, or data analytics services to NYSE and the International Securities Exchange. And here's what I learned from these blue chip clients. And this was really super important because I was looking at a lot of data and a lot of big money data flow at that. And what I realized is this: it's all about people. Don't overcomplicate things. If you can get to the heart of the matter, which is the battle between buyers and sellers, that's what's going to give you your advantage. And it's by using big data. This is why we're now managing in a very short space of time, having made ourselves available 30 million in 17 months. That's going to grow significantly and with big outperformance of the market. So from 2005 in testing to 2021, my systems, which are there now being traded by professionals for their clients, have outperformed the markets by almost 11 times, and even just in the last year and a bit by over almost 40% outperformance of the index. So they're very happy, which is why, of course, I also get paid big fees for helping people to do that. So 6-figure fees in several amounts as well. So this is why, because we're able to bring that consistency. But I also love speaking with and serving you, my community of private investors, including the likes of Chloe, who is 14, actually 50 next, her account in 30 months. And now, her life was changed. She was just about to give up trading. She's now done this, and now she works in my team as well. Roger slightly older guy in his 70s. This, in his word, transformed his retirement life. He's made over $685,000 in profits. Now, I'm going to show you exactly how they've done it. Just before I do, where did it all begin? Well, it all began when I did a finance MBA in the mid-1990s, 1996, 97, after I'd been very, very ill. If you were to do that finance MBA today, or a version of it, it would cost $57,000 for 1 year. And there were two professors that I had that were really interesting guys. This was a nerdy guy, Gordon, and this was Kevin, a City and Wall Street trader who was a guest speaker, a guest professor, visiting professors, they call it. He'd made millions. This guy had made nothing, but they both came out with the same thing in different lectures. And this is what they said, and I never forgot it. They said, if you want to make big money, follow what the big money is doing. Specifically, stock investors, so that would include your pension funds and insurance companies and those big people, hedge fund types. And also, even more importantly, follow what the options traders are doing. Now, this really intrigued me, because who are these people, these options traders, the big ones? Well, they're the ones who are using leverage in order that they can risk more in order to make more. And why are they doing that? Because they think they have information that is better, more valuable than other people. And that's why they're prepared to risk more percentage-wise. And this really intrigued me, and it made a lot of sense to me. Of course, that would be great if you could do it. Now, there was a catch, of course, with that. Because the catch of being able to follow those people is you need a lot of data, a lot of data. And for that, you also need many years of research. You're talking about billions of rows of market data. You would need people like quantitative analysts. They're the eggheads of Wall Street. You need specialist programmers. You need industrial-sized servers. You need specific expertise. You need to learn it and also acquire it. And at the end of the day, when I realized what it would take, I realized it would also take millions of dollars as well. So a bit of a bummer in that one. But in that journey, I also realized that I also learned there were 3 other big money footprints from which you can gain serious success. And that's where you're going to get the value from this particular session with me. Now, let's talk about big money footprints. Elite investors are trading with billions of dollars in the markets every single day, and their activity leads a trail. But that trail is invisible to most people, because they're not trained in how to see it. But if you can, that's where you can transform your trading fortunes and do it in a focused and very targeted fashion. And that's the way you're going to get the consistent profits, but also save enormous time, because you're going to be removing the guesswork. You're going to be eliminating the overwhelm, and you're going to be shutting out all the other things around, because you'll be able to focus on a repeatable skill. That's the big thing. So what are these big money footprints? Well, again, it's all about big, and it's all about aggressive, because big aggressive money is what moves prices. So the first big money footprint is, guess what? The presence of big money. We're going to talk about that in just a second. The second big money footprint is the A word. What is it? Aggression, because you want that big money to be moving prices. I don't want to be in a price that doesn't move. I want to be in a price that does move. And the third one is eyeballs. It's all about eyeballs. So when do eyeballs train on a particular stock at a particular time? Well, there are several things that can lead to that, one of which is when a stock moves through what we call a key level, like a 200-day moving average. Nothing magical in that. It's just that lots of alerts and alarms are trained on that. And if a stock goes through it, in the words of Paul Tudor Jones, he wouldn't even consider a stock unless it was trading above its 200-day moving average. So eyeballs, all these factors are affecting supply and demand, and we want to get on the right side of that, the right side of buyers and sellers. So big money footprint number 1 is big money. In other words, big volume. In other words, on the way up, it would be accumulation. On the way down, you're talking about distribution. Let me show you how it works. Here's Perkin-Elmer, and all I want you to do is see if you can find big green volume spikes. And if you find one here, look up and see what happened. Big green volume spike, and soon after, there's a move of 11% in 7 days. Now, interesting. That's not a left on its own, but the presence is there. So we see big money footprint number 1. Again, wave if you see it. The second big money footprint is all about the aggression. We want to know that the price of the stock can move even before we actually get into it. So what we're looking for is a move for bullish stock up and then sideways. Up and then sideways, like a bull flag type of thing. We want a price jump, and then we want a sideways move. Let's have a look at tractor supply. Here we have a price jump because of earnings. That's what that red bell is. Often earnings will be a catalyst to a big price jump. Here it is. And then it goes sideways. So there is another big money footprint there. The second big money footprint is there, and that heralds a move of 27% in just 7 weeks. The third big money footprint, again, is all about eyeballs. It's all about a stock that has crossed a key level and stayed crossed through that key level. So in this particular diagram, you can see the 200-day moving average in red has been crossed by the stock, and it's stayed crossed as well. Let's have a look at that. This is Livungo, and of course, what happens? The stock crosses it and stays crossed, giving us a potential signal, and that's the third big money footprint. But let's put them all together, because that was a move of 2.5 times, 160% in 11 weeks. Let's put all that together, and now let's have a look. Do we have the first big money footprint of big volume? Yes, we do. Again, chime in with the hands raising when you see this. There's big money footprint number 1. Do we see a big move? Yes, we do. From 20 to 30, that's a really big move. That's 50% in just a few days. Really big move. Some people go, oh, I can't go further. Well, think again. And then the third big money footprint, a key level crossed and held. Now you've got 3 big money footprints all there at the same time. This now starts to get interesting. What if you could master just these steps alone, nothing else, and you become a master of them? That's where the 160% comes in on that one. But if you look at the other stocks I went through, like PerkinElmer and Tractor Supply, guess what? They too had all 3 big money footprints present, heralding the move. Easy to filter for, easy to find. And again, Tractor Supply doing the same thing. All those 3 big money footprints were there. And it doesn't just work with bullish stocks, it works with bearish stocks. This is Roku. In the pandemic, right? Down it went. That's a big move. Big volume spike, that's a big one, another big money footprint, and then the cross and hold of a key level, but to the downside this time. And there's 3 big money footprints, and there she goes, drops another 50% in just 50 days. Stock halved in 15 days. Now, if you short that or buying puts, that's a big payday for you. Does it work with high ticket stocks? Absolutely. Here's Amazon when it was $2,000, going up to $3,500 in just 5 months, 75%. Here's Altimmune when it was only $14, a low ticket price stock, 100% in just 3 weeks as well. Did the same with Kirkland as well. So here's a recap. We want to filter for a volume rush for big money. We want to filter for a price jump for the aggression bit, and we want to filter for a cross and hold of key levels, or a key level, maybe 1 or 2 at a time as well. Now, there's a 4th big money footprint, and this is very important. I'm going to go through it in just a minute, and that is scarce information. Remember, scarce information. Information is valuable. Scarce information can literally change lives. And this is Rohan, who wrote into me on WhatsApp saying, oh, thanks to that DIG, it's been a nice winner. Again, big money footprints, 25% profit in just 7 days. A simple thing. And you're going to see the same looking thing over and over and over again, and which means you're specializing, and it also means, guess what, you are already saving time because of that. But not just scarce information, because I want to go through that in a few minutes, but you also will need a robust trading plan. Now, we do have a trading plan where is designed in 4 steps to control your risk, have a quality control there as well, ensure that you're consistent, and also maximize profits, but also while all the time controlling the risk. Now, we have a proven 4-step formula for that. I don't have time to go through it right now, but I do go through it in my Flag Trader program. And this Flag Trader program is what automates the entire process of the big money footprints, of finding them and then knowing what to do when you do find them. So effectively, you could filter 10,000 stocks into a handful of high probability big money footprint setups literally in just 1 click. And I'm going to show you exactly how we do that. And what Flag Trader also provides is the tools and the training and all the support to start generating that consistency from being so targeted, so focused on something that has real proof and evidence that it actually works as well. And so depending on how quickly you want to take it, you can literally spend days or weeks, but you can then get that confidence and that consistency as well if you're prepared to follow those guidelines and then still have time to do other things as well, because you are that targeted and because you are that focused. You don't have to spend all that time doing all that other stuff out there. Now, this is how it feels to be in the Flag Trader sort of community, if you like. You can log into a private members area just on a mobile device, you know, when you're having your morning cup of coffee or whatever. You can literally click 1 button and activate a fast filter in a couple of clicks. That's it. to find those big money footprint stocks. And then because you now have been educated as to what the best setups are and what you need to do after that, you can pick those setups pretty quickly and then trade safely according to the trading plan, because you've done those tutorials as well, and they are bite-sized tutorials of that. This is what also is part of being in our community. David writes in and says, I'm blown away by all the constant and continuous updates, developments, and ongoing ways making the whole system more intuitive and easier to use. I love you guys, but of course you know that. That is very much the essence. We're always moving forward, always wanting to get better. This is also how it feels. This is CRISPR. Did this one not long ago, just a few weeks ago in June. Big money footprints are all there. It's a 30% move in just 7 days. And here's what Joel says back on the 26th of June. I gave a gift out to some particular members who'd come to an event that we had. And he said, I really appreciate the gift pack, but I have to tell you, the greatest gift is your software. It saves so much time. And combined with your trading plan, I have been able to finally start making consistent profits. Isn't that what it's about? The consistency and the repeatability of it as well. Same with Pat, turned $3,800 into $33,000 from April to January, April 2020 to January this year. And again, she started with a small account. And all these trades with Apple or Advanced Micro and Amgen and Bristol Myers, they've all got the same setup. That's all we're interested in as well. So here's how it looks. You'll be getting automated software for those big money footprint stocks worth $1,997. Also, one-click done-for-you watch lists. So this is where you literally click a button, as I'll show you, and you then get a list of stocks which is conforming to a particular setup that we like to see. And then you'll have the education to perm through those and know which ones are really good or which ones you might not want to do just yet. Then there's bite-sized training videos to show you and reveal the entire system. Now, this is great because with these videos, they're not hundreds of hours. There's about 8.5 hours. That's it. You can do it in a day. You can do it in a day. You can spread it over a week, but you're in doing it, specializing quickly. Again, another 1997 value. Quick and to the point, and you can watch them as many times as you like. Then I talked about the trade plan that we have. This is supremely important and supreme value. Once you know this plan, you can't unknow it. So this 4-step trading plan, all about controlling your entry and protecting your profits and then escalating those profits where that opportunity arises, is just pure gold. So that has a 997 value, but truly it's invaluable. Now, we make a big thing about support. Let me just read you a couple of tweets that came out. Here's Dave, who wrote in saying, this is in July, I think it was last year actually, but he says, thanks to your team for your hard work. Guy, thanks for your diligence and persistence. And Ollie writes, I had difficulty yesterday, but it was straightened out within minutes of my reporting and support. Exemplary follow-up. That's the kind of feedback that we get. And obviously, if you want to know what these images are all about, it's about one-click software, saving you time and being able to scale your account as well. Now, the total value of this so far is $8,152. If you go to our website, wisetraders.com, you'll see it there available for you at $2,997 per annum. But today, for my friends at MetaStock, particularly for Jeff, a good old friend of mine, it's just $997, a MetaStock special. Now, I talked earlier about scarce information, said how important it was, because if you have the ability to get scarce information on a regular basis, then you have the ability for repeatable profits as well. So scarce information can be life-changing, as it has been for Coca-Cola and KFC and diamond dealers and other people as well. Like these people here as well, they also have used scarce information to scale their accounts over time. Why do I get paid the big sums by money managers and professionals? Because of scarce information. Why is it that we can consistently outperform our benchmarks? It's because of scarce information as well. So not just in the long term, but also in the shorter term as well. Or should I say, not just in the shorter term, but also in the longer term as well. We're the blue line, the S&P is the red line there. What were my professors talking about when they were saying following the big money, particularly those options traders? What they were talking about was scarce information. And when I mentioned to you that it would take years to do and billions of rows of data and all the specializations and the equipment and all that and millions of dollars, they were right. I was right. It would take all that. It did take all that. It's still taking that as well. It's taken all those things, and this is what I have in my team: quantitative analysts, programmers, expensive servers, specialist expertise, billions of rows of data, and this is what we do. We specialize in this particular specialized topic. This is what we do. This is why we're doing things for institutional types as well as for you private investors. And we are private investors ourselves. This is how did Roger transform his retirement in his own words, because he was using scarce information. That scarce information presents itself in the form of the options volatility indicator, or the OVI. And this is the ad he saw. The ad said, do you have the skill to spot when this line crosses from positive to negative to positive? And this is it. I'm going to show you what this line is all about. Because this line, this little line, is now patented as well as of October of last year. What's the patent all about? It's all about scarce information, how we are presenting this scarce information. So it's the options volatility indicator, and it goes from a minimum of -1 to a maximum of +1, and I'll show you exactly how it works. And a short name for it is obviously OVI, which you might have heard of as well. The OVI is deemed to improve performance by around 71%, in some cases a lot more. What it is and what it does is it's revealing what hidden money is betting on. It's revealing the sentiment of options traders on individual stocks, and also throughout the market as well. And here's the essence of it. When it's red and persistently red, we're typically dealing with a bearish situation. And when it's blue and persistently blue, we're typically talking about a bullish situation. So if we look at Overstock here, and it goes down from $24 down to $9, that's bearish, isn't it? And we would expect the OVI to corroborate with that. And by and large, it does. And when it does, it's going to potentially reveal a trading opportunity. And when Overstock then recovers all of that ground to go back up, we would expect it to say bullish, wouldn't we? And by and large, it also does, which would then create potential for trading opportunities as well. That's as simple as it gets. Persistently negative or persistently positive is basically how we use it. And not just it improves performance by 71%, but in Chloe's case, it's improved her performance by almost double in terms of her win rate. But in terms of the actual dollars, she'd lost almost all her account down to her last $3,000 before she's using it. And now it's gone from $3,000 up to $45,850 in just 30 months. That's a dramatic transformation. Same with Kyle. His win rate before was 30%, 3 out of 10 winning trades, and then transformed to 8 out of 10 winning trades as well. And for him, it transformed his life because on welfare, he was, well, not on welfare, on Social Security rather, he was able to then improve his regular income by more than double as a result of that. So we're not just talking about the 3 big money footprints, are we? We're talking about the 4 big money footprints, because we are talking about big money being the big volume. We're talking about the aggression being the big price move. That's big money footprint number 2. We're talking about the key levels being crossed and held. That's big money footprint number 3. But guess what? We're also now talking about scarce information. The OVI being persistently blue at that time in a bullish scenario. Scarce information that no one else can see outside of our community. And that's really been the driver of that stock going up by 160% in 11 weeks. Buyers had the whip hand. It was clear. With PerkinElmer, again, not just 3 big money footprints. There is the 4th big money footprint happening, again, around earnings. Again, there it is, setting up an easy trade there. And with Tractor Supply as well. Big money footprints are there, 3 of them, but we've also got the 4th. The most important one is there. Again, earnings being a catalyst. Once again. So the 4 big money footprints, the 4th being that of scarce information, something that is life-changing. If you have regular access to it, can be completely transformative and repeatable over time. And here's Roku. Did you notice before? Not just the 3 big money footprints, but the 4th, and look, persistent red negative OVI with that, precipitating a fall of 50%. The stock halved in just 15 days. Big winnings for those who are short. And it works with big stocks like Amazon, and it also works with other stocks. And here's CRISPR, which I showed you earlier. Again, big money footprints, all in evidence there, 30% in 7 days. Kirkland's went from 150. This was an unusual one, but the big money footprints are all there, especially the OVI. It's all there, and it makes a proper setup, the ones that we absolutely like and specialize in. And it went and doubled in just 6 days, from $1.50 to over $3 in just 6 days. But, and this is a little tweet that came in saying, oh, I've reached my first profit target, and now I'm going to hope to capture some more. And this is what then happened after that. It kept on going. It went not just to $6, it went all the way up to $14, or it went $3 rather to $14. That's an increase of 643% in just 2 months. And it didn't stop there, it kept on going as well, with the big money footprints in evidence on several occasions. So 1,222% in 8 months. That's what that could have meant for people trading that. Leg Mason, again, all 4 big money footprints in evidence there. And what happened then? We had earnings and then a buyout. So earnings happened, up she goes, and then there's a 34% increase in just 3 weeks with Leg Mason. So the big money footprints, following big money in a structured, organized, and very simple way, over and over again, with a trading plan as well. Now, quick case study. I'm going to show you now samples of Chloe's trades, and what you're going to notice is they all look the same. But it's not just Chloe's trades. I'm talking to you about Pat as well, who'd almost 10x'd their account in a very short space of time, 800% from April to January this year, April 2020 to January, and still going strong. There's Pat. But I don't have time to go through her trades. Let's go through Chloe's. Remember, Chloe has transformed an account from 3,000 up to now 45,830 in 7 months. In 30 months, with an over 76% win ratio. This is no fluke as well here. Now, here's Adobe, 33.93%. Again, you'll see the big money footprints in evidence, especially the scarce information one right there. And then there's Advanced Micro. Again, big money footprints in evidence. Again, especially the fourth, the big money, the scarce information. Profit almost 42%. Here's Marriott. Doesn't it look similar? It is similar. Big money footprints there in evidence. Again, especially the fourth one, that scarce information, 20% there, and 24% with the Russell here. Again, the same kind of trade over and over and over again. What does that mean? It means you're specializing. It means you're saving time as well. Alibaba, another one, 41.5%. Big money footprints in evidence, especially the scarce information one as well. So I hope you see that those were some of Chloe's real trades, and that's all she's doing. So imagine having the freedom to just do one thing really, really well and being that good at it. That's what my community is, what my family of traders do. We focus on one thing. And of course, it just gets rid of all the clutter, doesn't it? You get to focus and be really good at one thing. So I'll give you a quick demo now of how to find the best setups in literally just a few minutes. And there's 2 ways of going about this. You can either do it the manual way of, selecting from a group of stocks, maybe the S&P 500 or top 1,000, and you could save a watch list manually that meet the criteria for what a big stock may be. Because most of the time we're trading big stocks anyway. We're not doing, penny shares or that kind of thing. You could then go through the charts manually to see if forming big money footprints, and you could include OVI if you have OVI, and you can then execute my trading plan if you've got access to that as well. The other way of doing it is to automate the entire process, literally in a click, which I'm about to show you. Finding big money footprints with a couple of clicks, managing the trade in a specific way, a little step by step, and then just repeating for scale. So let's have a look and see how that might work right now. So here is my Flag Trader application. I'm just going to scroll down. We're actually in the Trade Finder right now. And all we need to do now is click either on New Search, which is where we could do it manually, and we can fill in our filters there, or we could just say OVI Fast Filters. This fast filter thing is a selection of filters that are pre-done for you. So I'm going to click right now on just number 3, 4 big money footprints, and we're using the 50-day moving average as the key level. All I'm going to do is I'm going to click on this button here, that button that you've seen over and over again, the magnifying glass. Here we go. I'm going to click on it. And that's what happens. I've clicked on it, and it says right now, market's a bit wobbly right now, just 9 selections today. Sometimes there's 30 selections, but today that's what you've got. And you've got this lovely table. And if I want to then look at the charts, I click on View OVI Charts. Here's one I've already got for you, the right size. And you see that here's a sample of what happens. The magenta line is the 50-day moving average. Has it crossed it and held it in the last 30 days? It has. It happened a little while ago, but it has. I do build in a bit of buffer for it. That's one number, one big money footprint. Has there been a big rise in it recently? There sure has. There's actually been one even recently as well. So that's second big money footprint as well. Have we had a big volume rush? Yes, we have in the last 30 days. That's big money footprint number 3. And of course, do we have corroborating OVI? We do. So we now know that this stock qualifies. Now, whether we want to actually trade it or whether we say, oh, I don't know, but that will depend on a couple of other factors. But we have literally in one click found stocks that comply with the basics of big money footprints. Give me a wave if that was pretty simple, just as a quick demo there. Just give me a wave there. Now, something else I want to show you, just a little treat before I do. And that is what we can also do is I can enter in here, this lovely little thing, I can enter in and find more information about a particular stock, any stock I like, and I can see whether we have a big money bias of bullish or bearish or nothing. We can see which of the big money footprints are present in the chart right now, and it has all 4 of them in there right now. You can see when earnings is, all this other information. I can see which watch list this stock happens to be in at any one time, either my own or our house watch list. And there's a whole host of other information in here that's fun. I can even write journal notes in here and do a bit more research as well. It's very, very cool stuff. I can even see which other fast filter combinations it may be in as well. So I hope that was just a very quick but very useful demo of how quick you can find big money footprints literally in just one click on a mobile device wherever you are. So that's how you could cut the learning curve with something that I think is very intuitive, as you could see, on pretty much all of your devices, laptop, desktop, but also mobile devices as well. And that's my proprietary software filtering technology for small account trades, but also others, because we have people, as you can see, with many hundreds of thousands, even millions of dollars. And again, you can access those optimal setups literally in a single click there. General Electric appeared in our watch list or filter search. Again, click, you see, you confirm the chart, you go, yeah, that looks good. And then that was a 61% profit in literally just a few weeks there as well, as per my trading plan. Here's what other flag traders are saying. This was Henry. Obviously, it met and exceeded his expectations and hopes, over $38,000 in profits from just 3 trades. Quants, this is what the institutions are saying. The OVI stands up to rigorous scrutiny as a valuable, logical, and robust indicator, highly valuable, predicting broad market sentiment and identifying stocks that subsequently performed. Again, in our systems, if you'd traded our system instead of the S&P, you would have 10x'd the S&P. $10,000 in 2005 turns into over 440,000 today. Newbies, not that there are many newbies here, but they say, look, it almost feels like unfair or cheating. Increased my confidence, downside risk feels very low, learned to take profits, that's the trading plan, and his gains, again, from between 70% and 550%. This is an experienced trader. The OVI is by far the best program I have ever done so far. This was just recently. I love also the personal relationship with everyone. Just whizzing through this, again, you can do it from any device, anywhere, anytime. Nice exotic pictures there. Look at these setups with Boeing and Halliburton and Chubb and BXP. They're all the same setup that we're finding over and over and over again, all through scarce information. So here's how it looks. The automated flag trader software for big money stocks, big money footprint stocks at 1997 value. The done for you watch list, dynamic and static at 1997 value. Bite-sized training videos, not overwhelming you with information, 1997 value, and our trade plan invaluable. 997 value, but way, way more. All of this because you can't get it anywhere else because it is patented as well. And then you have the support at 1164 value, and embedded within everything is the OVI, that scarce information that you can repeat over and over again at 1997 value, but obviously more because you just can't get it anywhere else. And then there's the one-to-one coaching session that we also put in here, and that's why I limit this to 25 seats as well, because we like you to we like to help you form a little few-minute routine that you can do that doesn't take much time out of your day. And again, you can do it in bed if you like, from your mobile device. Again, very simple process that we want to make it part of your day that doesn't really take up time. And then we talked about earnings being a catalyst for big moves. I have 2 earning strategies, one pre and one post, and that I'm also going to throw in there our ultimate earnings blueprint, because it's very exciting around earnings, particularly after earnings where it's lower risk. And then there is also Chloe, who is, well, 15x'd her actual portfolio, but we'll give you also the watch list of stocks that she uses, a limited number of stocks, less than 40, and we will give you access to her watch list and any changes she makes to it as well. 597 value. All that makes $12,737. If you go onto our website right now at Wise Traders, you'll see it at $2,997 per annum, but it is here for you today as a special thing for Jeff and MetaStock at $997. It is per annum because obviously we have to keep on renewing the software, making it better and better all the time. Also, if you do access this today, you will get this report as well, Growth Secrets for Small Trading Accounts, but it's only for today. There is a very simple guarantee. If you don't like it in 30 days, you can get that refund within that 30-day period. No quibble, no catches, nothing. But very few people do refund because it is really this good. The way to go is ovi.to/growth. Let's just put that in the chat if we can. If I put that in here, I should have done this earlier. www.ovi.to/growth. And if you go there, you can get this deal. Now, it will expire quickly within 24 hours or so. It will expire, so go get it now. And you're grandfathered in. If you get it now at $997 for all renewals, thereafter, you will be at $997 if you carry on every year, which most people do. So do that now. There is no risk. That's what that guarantee is all about. No impossible guarantees here. Again, if you tried to get it now on our main website, you will see it here at $2,997. Don't do that. Get it for $997 right now, but you will have to hurry because there is that seat limit because of the personalized nature of that training session you'll get. A couple of other things. Here's Mike, 150% on M-Phase. Guess what? Doesn't that look familiar? That set up there with the big money footprints present. Pretty interesting. Steve, big trader, 600% 7-bagger, $53,000 on LinkedIn. Vinny, 7 out of 10 win ratio. You'll see this over and over again, 7 and 8 out of 10 win ratio, 34,000 on post earnings Apple. Remember, I'm adding that as a bonus for you, our earnings blueprint as well. There's Doug at 5-bagger on Boeing, making $10,000, 8 out of 10 win ratio. Kyle, 8 out of 10 win ratio. Kedzie, fun character, had 15 newsletters. She was addicted to newsletters. We took her down from 15 to 1 newsletter, and in the same time, instead of making losses, she's now making profits, 200,000 in profits there. And she writes a little funny note about how she's making more money up there. I won't go through that. This is our community. Well, it's actually a lot more than this, but if you go to ovi.to/growth, you can be part of this community of people who are doing very well. I will finish with one little quote. It's not a motivational quote. It's just basically this. I'm going to do it very quickly because I know we're getting towards that time. It is trade, that's the T, what, that's the W, U, that's the most important thing, that's the Y, and then C. That's what TWYS. It's one of our mantras, as well as the big money footprints and the 3 master keys of trading and the edge trading plan and all that. We have mantras. This is one of them. And what are we looking for? Well, we're looking for the presence of big money so that we can follow that big money. We're looking for that presence to be aggressive and future aggression moving forward. We're looking for a key level to be crossed and held, and we are, of course, looking uniquely for scarce information. That's what we are looking for. That's what we see, and we only trade what we see. So that's ovi.to/growth on that one, and I'm now going to do that last slide. Again, if you do it today, you will also get that report, Growth Secrets for Small Trading Accounts, and that's it there. Jeff, take it away if
All right.
You're here.
One question we've got for, well, we got a couple questions, but we're kind of a little bit low on time. But Paul wanted to know, what charting platform does OVI work with?
Well, we work with our own very basic one, but also this program isn't with MetaStock, but MetaStock also have an arrangement with us for our OVI Markets daily service as well. So while the filters and the other things aren't available on that one, if you had a combination of both, which I know that you'll get if you have Jeff's package as well, then you get the best of both worlds, because then you get our specific stuff, but also you get some other OVI stuff within the MetaStock OVI Markets daily package. And Jeff, did you change the name of it yet?
No, not yet.
Oh man, We're going to confuse everyone. But anyway, but yes. So for flag trader stuff, we are doing our own specific chart. We only focus on what we do. The beauty about MetaStock is you can do lots of other things as well, but we just do one thing. So it's a perfect thing. It's a perfect combination, if you like, because you've got the flexibility with MetaStock to do other things, but I only want to do one thing myself, because I'm the kind of guy who is better just doing that. Some people are like that, but we have a lot of MetaStock members now, Jeff, as you know, and they just love that combination of being able to focus with us, but having the exploration time with you.
Yeah, I'm glad we worked on getting it into MetaStock. I think it was a good addition, and I think it's the only place you can use it outside of your website. So it's awesome. Long says, great presentation. It's really appreciated. Paul wanted to know what time frame, and well, real quickly, just because of all the calculations, it's daily, right? It's after market
data. So your daily, it's daily. We're not doing intraday. It's daily charts we're doing. Number one. What was the other question?
What's the average hold time?
Oh, the average hold time is anything from a day to several weeks. In fact, sometimes several months, depending on whether the trend if the trend manifests. So I see I think it's Steve. Anyway, saying what percentage of big money footsteps or footprints buy setups are false negatives? Well, this is where the plan comes in, Steve. Because I think it's Steve, but if your name's different, I do apologize. It starts with an S. But let me answer that question. It's a very good question. The trade plan, the 4-step trade plan, really kicks in with this as well, because not only are we looking at the big money footprints setting up as well, but we're also looking at only trading breakouts. We only trade breakouts from consolidations. And part of that trade plan is a very conservative first profit target. It's all part of this. So what one person might have a false narrative, what you call a false negative, we won't, because our first profit target is deliberately conservative, so that we want to up our level of win rates, but we're still only going to risk the same amount that we are actually going to make on any particular trade, at least for the first profit target. But the great thing about our trade plan is the third step of it is actually how to keep on riding a trend if a trend manifests. And you don't know the trend will manifest until it's manifesting. We don't have the benefit of hindsight. So this is all part of our plan. And so when you stitch it all together, when we do surveys, the vast majority, the median is around between 6 and 8 out of 10 winning trades. That's where people settle, and you saw an awful lot of those sort of testimonials coming in there. We do surveys regularly. What's your win rate? And we get a good feel for it, and that's what our traders are getting. Not all, of course, not everyone's going to do this. Not everyone's going to follow the protocols and the guidelines, but we have amazing consistency. And it's why, Jeff, as well, that like MetaStock, we have an incredible stick rate, and people, when they find us, they stay. And it's the same with MetaStock as well. When you're that committed to improving and being better and having something that, in our cases, is very edible, that's why we get this amazing stick rate. And that's also why we're able to keep the price very low, because we know once someone joins, they're staying. And so we don't have to charge $15,000 or something. We don't have to do that. We know that you're with us for a long time. And that's why we make friends. That's why my dog and my kids get presents from you guys. Gifts. I mean, I actually got actually not long ago, I got a £700 bottle of scotch with Lalique crystal glasses as well to say thank you. And that was the first time someone actually bought me something. They usually buy my kids and my dog something. But anyway, it's that kind of relationship we foster. It's a familial kind of community that we have. And that's because we really do a good job.
All right, Guy. I look forward to seeing you hopefully.
As do you.
Hopefully sooner rather than later. Thank you, guys.
I would love to. I really hope so. Get over here.
Yeah, me too. Okay. Sounds good.
Cheers.
Thank you very much, Guy. Bye.
Bye.
Okay. Let's go ahead and I'll push all the buttons right now to kind of get everything kind of pushed around. Appreciate Guy for coming in. He always does such a good job. We enjoy having him around. So let me go ahead and kind of turn over the presentation here. Let me go ahead and let's see, make it me. Let me go ahead and show my screen. What we also did was, as part of the OVI Traders Club, one of the things I really wanted was to be able to incorporate his OVI, his patented OVI indicators in MetaStock. So basically, if you're a member of his OVI, what he used to call his OVI Traders Club, I believe he calls it the Wise Traders Club right now, we have the ability to put all of the indicators of OVI into MetaStock. And you can scan for what they're positive or negative. You can scan for, there's of course an expert advisor that shows all the signals and a template that comes along with it. The nice thing is if you're a member of the, what was the OVI Traders Club and now it's a Wise Traders membership, it actually is included as part of your membership. So you'll get all of that. You can use their website. You can use MetaStock. You can kind of use the best parts of both sides of the service, and it'll work for you. With OVI's private club, basically you get weekly live dashboards from Guy Cohen. You get a dashboard. You get video updates from him. You get blogs featuring input from his OVI traders. You'll get some scans like the reversal trend finder, interactive watch lists. You'll get access to basically his website and all of the stuff that's on there as part of the OVI Trader Club. In addition to that, you'll get the integration into MetaStock. So you can go in and run the OVI scans if you want to in MetaStock. You can also incorporate some of the other scans that you might be using already. And I do want to reiterate, if you're already a club member, you can actually just get this as part of your club membership. Okay. If you're not and you want to get it, it's $197 per month. We made a special deal with Guy where if you pay for a month, we'll give you your second and third month for free. And that's includes the indicators, it includes the clubs, it includes the full membership. So to sign up for that, you can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. Robert's not available in NinjaTrader. It's just on his website and in MetaStock. So I'm very happy that we kind of put it in there. So again, it also is part of the full package that we're talking today about: the Top Dog Trader, Rick Sadler's Profit Patterns for Profit, the OVI Trader, Fulgent Chart Pattern Engine, Learn MetaStock, the 3 months of Learn MetaStock as a subscription. You also get Unleash the Power of MetaStock, which will help you learn everything, and 2 years of Stocks and Commodities magazine. As part of this, if you're a brand new MetaStock member, there's a couple options for you to get MetaStock. You can just do a free trial, won't cost you anything. You can also do what we call an extended trial, where you buy a month and get 2 months as part of it. So normally everything would be $3,831. Today, oh no, I'm going to do it again. Today we're going to party like it's 1999. You can actually get a huge discount. It's almost 50% off. To do that, go to metastock.com/summit deal. You can also give us a call at 800, and I'm sorry about that. I apologize in advance for when I do it again later. 1-800-882-3040 or metastock.com/saleschat. So it's a great package. Includes some really, really good add-ons. A really quick shout out to our sponsor, Stocks and Commodities Magazine. They've been sponsoring the event we've been doing this for 8 years, if you can believe that. And they've been a sponsor since the very first one. So we appreciate that. We love it. And you can get a free issue of Stocks and Commodities with your registration. If you want to do that, metastock.com/trader summit, fill out a short registration, and you can sign up for all of the bonuses that are there. So our next presenter is another person that we go way back with, a gentleman by the name of Ed Downs. Right here, we've got his high school picture. But Ed is somebody that I've known since I started working at MetaStock, which you'll find this believable. In March, I'll have been at MetaStock for 25 years. I remember Ed, when I started at MetaStock almost 25 years ago, Ed was a guy that we sold a lot of systems for. We had a bundle package that marketed his OmniTrader package with MetaStock. He's a very smart guy. A few years ago, he kind of called me up, kind of out of the blue. It was really good to talk to him. He started to talk about the AI stuff that he had developed and wanted to pull into MetaStock. And so we did that. I also told him I wanted to do, as part of that, his chart pattern engine, which I think is incredible, and he's going to show you today. So Ed, that's the intro that you get. I hope you enjoy it. But you're welcome to embellish on it. You have been a great partner of MetaStock over the years, and I'm glad you called me a couple of years ago. And I'll leave it at that. I know we're running a few minutes late. Right now it looks like it's 10 after. I'm next, so if you need to go long, you can go long. Don't feel like I will eventually kick you out, but not too soon.
You guys are great. Thanks, Jeffrey, so much for that. And my video's up, yes? You have me?
Yes, we can see you. Let me change the presenter over to you so you can share your screen too.
Awesome, awesome. Thank you so much, sir. All
Of
right.
course.
I love that warm intro. Jeffrey and I go way back, as he says, back to the 90s when I started my company, and just had great relationship. Came back after many years and said, "Hey, we've got some pretty cool stuff here. I'd like to work with you." And it's been great working with these people just to integrate our software. Our application is very unusual in that it is a full AI engine, a lot of code. It's not huge in terms of overtaking your computer, but it is very large and complicated internally. And so it's unusual that way, but it works so well with MetaStock, thanks to the folks over there helping us integrate it properly. So thank you all for that. And I'm just thrilled to be here and to talk about this thing. It's awesome. And like I say, I've really enjoyed my relationship with the folks at MetaStock all these years. Just the 30-second tour of my background. By the way, we're going to have plenty of time with the 50 minutes we have. It's not a problem. We're good. But I started Nirvana Systems back in '87, if you can believe going back that far. And the reason I did it, I was an engineer and I was trading, and I had a hard time following what I was trying to do. It was difficult. And fortunately, I was in an automation field, design automation for chip design. And I kind of put two and two together and said, I bet I can automate most of the stuff I'm doing and find, the signals and trade and all these things. So I really focused on automation and all kinds of products. The first one we did was the one that MetaStock sold. It was an automation utility for MetaStock. And so did a lot of other products aside from that. And but the theme behind all of them going back to like 96 has been centered around artificial intelligence and how you find really good signals in a market using AI and techniques around AI. So today we're going to be looking at the chart pattern engine that we developed. It's been out for a while and we've refined it over the years, gotten it better and better. This version for MetaStock that we have, I'm really proud of. It's actually better, I hate to say that, but it's better than any other version that we've made in other software because of the way MetaStock works. We were able to expose a lot more features and make it more configurable. So it's really powerful for MetaStock. But let me tell you, today, I'm going to show you the engine and what it does and how it finds patterns. But I love educating traders. Been doing it a very long time, and so most of the reason I'm here, I'd say half the reason I'm here, is to help you see these patterns in the market. Because if you can do that, whether you have our software or not, you can just actually see them in charts. They are extremely predictive, especially certain ones. So what I want you to come away with today is, of course, an understanding of the software that we have with MetaStock. It's awesome, of course. But then also to get these patterns in your head so that when you're looking at charts, you can react to them and understand why they work and how to profit from them. So that's really what I want to leave you with today. Now, before I dive in here, let me just say that I'm going to be covering a lot of concepts about these patterns, targets and different things, how they form. So we have a book on our website, an ebook that is free. And if you go to fulgent.ai/MetaStock, you'll see it there. You can just download it. And it's a pretty long book. It has a lot of examples in it of all these patterns and how they work and kind of some pros about the different examples. So I would really recommend that you jot that down somewhere and go get it at some point. And that'll help you a lot, I think. Okay, so let's dive into the idea of chart patterns. And the first question that I think anyone who's new to this would, there's the download link, there you go, is new to this would say, well, when you say a pattern, what do you mean? And the beautiful thing about chart patterns, and I really reflected on this many, many years ago when I started teaching about patterns first, and then we built this engine after that, was understanding and seeing very clearly that patterns are really two things. They reflect the psychology of a market, what the market thinks about that particular chart and that stock or whatever it is, futures contract, whatever it is. They also, however, determine the behavior of the market. This is a very interesting thing about these chart patterns, that, when you see something like a support level form, and it's very clear that support, and you guys have used this, I'm sure, all the time, and price breaks that support level decisively, what does the market do? There's fear. Okay, so it will sell into that pattern. They're basically, the pattern determines the fact that people are going to follow that down, and all of them are like that. They're visible. You can see them. They represent the psychology of the market, and so when they go, the market will very often, 80% of the time, will follow in that direction. So they're extremely tradable. There's been a lot of debate over the years about technical analysis. I was in graduate school, had a finance professor say, well, it's just kind of hocus pocus voodoo stuff, Then, of course, he was kind of using it on some of the charts that he showed us. So we could, wait a minute, you're using support there. But so there was a lot of debate about this back in especially the 80s. And so in 2000, these two gentlemen wrote this landmark presentation. I guess it was a thesis, really, for their dissertation on, does technical analysis work? And it's a McKinley and Lowe. You can look that up on the internet and find it. And it's called Head and Shoulders Broadening Bottoms is the title. But they looked at a lot of different patterns. And from 62 to 96, they focused on these things: head and shoulders, triangle tops and bottoms, and all that stuff. And what they found was that the technical patterns occurred far more frequently than if they were truly just random. And since you're here, I'm sure you completely agree with that. But, the fact of the matter is, if you're new to trading, that these chart patterns really do work. And so that's a landmark paper on it. I'd really encourage you to read that by McKinley and Lowe. It's very, very good. All right. So when we look at patterns, one of the questions that I get asked is, well, all right, what are the best chart patterns? Because there's lots of them. And we're going to be talking about different classifications in a minute or so. But you have these, trend line breaks and consolidation breaks and, volume patterns, volume climax patterns, different kinds of consolidation, support breaking here. And actually pulled this for one of our webinars right, at the point of the decline back in 2020, and said, well, this pattern right here is very bullish. Actually, we talked about that on the webinar. And of course, that was right middle March. And then it, fulfilled itself and took off after that. But when you look at all these, you want to kind of figure out, if I see pattern X, Y, or Z, which ones do I really put faith in, and do I really, follow the ones that are the most productive out of all of these? And so we're going to be talking today about the 7 patterns that I think are representative of pretty much every pattern you want to talk about. And I actually wrote a book, which is available out there somewhere. Many, many years ago, I wrote this, 98, and kind of summarized these 7 patterns. And here they are. So we're going to talk about these, of course, today. But you have trend lines, trend line break and reversals. You have support resistance, break and reversal, consolidations, volume climax and trend, Fibonacci retracements, price gaps, and saucers. And then you have the other patterns that people talk about, tops and bottoms, cup and handle, and so on. But those are really derivative patterns. They are essentially these patterns combined. So, for example, a cup and handle, the cup is a saucer, the handle is a consolidation. So you put those two together and you've got a cup and handle. So the other patterns are derivatives, but these 7 are really the essence of chart patterns when you're talking about specific price movement, not talking about candle patterns. Those are different. Those are 2-3 bar patterns. They're very valuable. They're good. But we're talking about patterns that form over a number of bars in a chart. All right, so let's just dive in here and look at, oh, by the way, these abbreviations are used in our software, so that's why I put them on here. They're actually printed on the MetaStock chart when you bring them up. So that's why they're there, just in case somebody wonders, what the heck are those things? That's what they are. All right, so we're going to go ahead and dive in here to the first one, trend line breaks and reversals. And, for a break, you've got a trend line formed. Everybody's seen this happen. You break that trend line. And especially if you come back and touch it and start going down again, we call that the kiss of death on a downward move. And the market's going to sell off right there, just, 8, 9 times out of 10. So very powerful pattern, especially the shorter term ones. And so trend line break. And then the reversal is these moves up off the trend line. So you have to have at least 2 points to form the line, right? You come back and touch it and take off and move out away from it. So, and then you have them to the downside as well. So very, very powerful pattern. Now, normally in my teaching seminars, what I would do is start showing slides, slides ad nauseum, showing trend line breaks and reversals everywhere. But we have the benefit today of being able to use this amazing software called MetaStock, which I know you're familiar with. And it's really, really great software. And so we're going to be using MetaStock to show these patterns one at a time. And that gives me a chance to show you the engine as well as kind of a byproduct of demonstrating these patterns to you. So what I'm going to do is go into the tools menu. And again, thanks to the great folks at MetaStock, we were able to integrate this into their menu directly. So I go to Fulgent AI. Here it is. I've got chart patterns set up here. And what I'm going to do is go in to my chart pattern. There, by the way, all these lines are different Fulgent applications for trading, signals on stocks or different AI applications. This is the one that I'm working with today. It's just the patterns. So I double click that and I bring up a list of all of these patterns. So these are all individual experts that are coded into our engine. And there's lots going on over here. We're going to I'm going to show you what these things do a little bit later. Right now, we're just going to use the default, the way it comes, which is kind of everything's turned on. And I'm going to activate trend line breaks and reversals right there. Okay. And I'm going to say OK and close this. And I'm going to apply the template, which is, hold on here, actually going to bring up the stuff on the chart. So there we go. Yeah, nope. All right. That will come up. And there we go. We also want to look at the expert advisor over here. So I'm going to say view expert commentary. Sorry. Okay. And of course, on these things, if you click anywhere, it'll show you basically, what you're looking at. So I can zoom in a little bit here to make it bigger. So right there, I zoomed on a TLB, which is a trend line break happening right here. Now, before we go over these patterns, let me just say that the idea of the Fulgent pattern module, there's several things it has in it. I can clamp it down to show me only the best trades or the best signals, pattern signals, because it actually knows which ones are more profitable than others by doing extensive backtesting internally. Right now, they're just all turned on. But the idea of the module is to show you where the things are and where they are likely to be happening. So you always have to confirm trades. Anytime you trade anything, whatever it is, you want to make sure that you have confirmed, like the prior gentleman was saying, the trend, you got to let it kind of develop before you got a trend. Well, this is the same way. When I see this TLB here happening on the right edge, I want to look at it and say, well, do I see a trend line there? Because it sees one. Oh, wait a second, getting some data. Okay, it sees one, but you want to look at it and kind of verify that, yes, I think that's good. And then where am I going to take the trade? So if I go over to the MetaStock toolkit over here, and let me make sure I can find this. Need the trend line tool. So we're just going to put a little tool line right there. There we go. So there's the trend line it sees. And so as I break that line, I can see it's a very clear break of the trend line. I'm going to go with that short trade. So what it's doing is it's saying, I've got the ingredients for this pattern right here, and it brings it to your attention. And then you look at it and say, yep, that's a good one. Otherwise, you're going through chart after chart after chart, using your imagination, looking at the thing and trying to find these patterns. So that's the value of the module. That's what it's doing. Now, this color coding that you see here is where the pattern was identified. Again, folks, MetaStock helped us do this. And so there's different colors for different ones. The trend line breaks are this maroon color. And so anyway, and then the reversals are the blue color. So there's trend line break there. Here's a trend line reversal. So why is it posting that right there? Well, because there's a trend line, if you look, going like this, and it says you got a reversal off that line. Okay, so that is, but anyway, on any of the patterns that I show you, you're going to see a little color ahead of the pattern, which is where it was identified in the chart. I can zoom out just a little bit here. Now, I wish we could go through tons and tons of these things. We're going to go through just a couple of charts here and look at it. So here's a trend line break. Again, I see a trend line there, trend line reversal. It's actually seeing this line across these highs, reversal, reversal, and you can see just how powerful this is. And again, it's showing you I likely have the right stuff for that particular pattern to fire right here. It's got everything going for it. You know, I've got the I see the peaks across there, and I see the break right there, and you're off to the races. So that is the idea of it. Okay, so let me go ahead and move on here and talk about, we've got 7 to get through, so let's do it. It's going to get more and more exciting, I think, as we go along. So what is the next one? So this is trend line break and reversal. Very closely related is support and resistance break and reversal. And that is very clear. The clearer the level is, this is psychology, right, folks? It is. So, you know, when you see the chart, that support level needs to be obvious to the market. And, you know, the software's trying to get it as close as it doesn't have eyes, of course, but it's getting it as close as it can to that from the analytics it has internally. But you look at that chart, you can instantly tell as a human being, yep, that's a good support level right there. It is seen in the market, or resistance. It is seen in the market multiple times, and people are going to react to it. So here's support on this side, and you've got, of course, both. Sorry, Austin allergies today are just really getting me. So I'm hoping I don't start sneezing because it could happen. Anyway, so you have a support break here, another one here from that one little point right there, another one here from that point. Here's a resistance break from that point, and so on. You'll have used this, I'm sure, in charts quite a lot. And I put down here, support breaks can cause panic. Yes, they can. Absolutely. So let's go ahead and go in to Fulgen again and bring it up and go back into patterns. And now I'm going to turn that pattern on individually. This gets wild when they're all turned on because they're everywhere, but we're going to isolate them. So click OK, very easy to do, and refresh the chart. And now we're going to see support resistance. Boom. And you can see it's got this kind of a goldish color and the green. And like I say, it is looking for the right stuff for the pattern to fire. So I'm going to go to this signal here first. This obviously did not work out. It was a support break right here, and so it's looking at, you know, across these lows, but it didn't, you know, it didn't confirm. It didn't keep moving. So it just kind of stalled out right there. So it's got the right stuff. It starts to go, but it doesn't keep going. Again, we're looking at all patterns that the tool has, and I can isolate to the best ones easily. If I were to do that right now, a lot of them would go away and I'd lose my examples. So I'm gonna just show all of them. But here's a reversal. So if I go to another trend line here, let's do right there, across those highs. That's where that reversal is being detected. Here's another one here. I'm sure if I go to the leftist chart, I'll see, there we go, over here. See, it's seeing that. So there's another one right there. Boom. Really nice signals. And so extremely powerful. And again, you know, you look at the chart, you see it. Well, yeah, that's definitely resistance right there for sure. And yeah, we're coming off of it. So there you go. All right. So there's those two. And these are going to stay on my chart. So I'm going to take them out. And we'll do a couple more, just trying to pace myself here for our time, which we're fine on. But let's do another chart. And you can just kind of see here's a break right here through those lows, a break right here through the highs. And, you know, again, this one had the right stuff, but it broke, but then it fizzled, turned around. So, but these charts have the ingredients, the right ingredients for those patterns to fire. Okay, and more examples here on this chart. Very nice fire there, nice break here, nice break there, nice reversal there, good reversal, okay reversal, nice reversals, nice reversal. Nice break right there for a nice move on Boeing. Okay, and my example charts, I like to pick ones that are moving a lot up and down, back and forth, because that's creates the psychology. I cannot target that for some reason. I'm going to stop trying. That creates the psychology that the market reacts to. Is if the chart is moving and it's uncertain, then you have these things occur. Okay, let's go ahead and go back over to the presentation and move on to number 3, pattern number 3, which is saucers. And I love saucers, especially the really well-formed ones. They are extremely powerful. You've got a turn that's very smooth. The market can see it. It's clear. It comes up and it will go up usually about, you know, in the turn here at about a 20 to 25% point, and then it will break through these recent highs right here. That's what you need to look for in a saucer for a good trading point is as it breaks those highs, and they usually will retrace about 50% of the prior move. So you have maybe a high up here somewhere, you come down, you turn up, break through those highs, and typically that's about where your trading target's going to be. We're going to be talking more about targets as we go along here, because the following patterns actually have very good predictive targets, and some of them are incredibly good. Okay, so keep that in mind, but this is the first one that has the target that we've talked about. The inverted saucer is known in technical analysis jargon as a rounded top. So that's not a saucer. And they are actually a little more prevalent than saucers. Saucers are kind of rare. Rounded tops happen all the time. Well, they're still rare, but more rare than support, resistance, and that kind of stuff. But they're out there. Okay, let's go back to the old software and go in here to our Fulgent engine and chart pattern recognition. Turn off the support resistance. Where is saucers? There they are. And okay. All right, show me some saucers here. Chart pattern engine, and I'm gonna connecting again. Okay, it has to connect. So, all right, computer, let's go. We got a webinar to do here. Come on. Well, that's interesting. Let's see. What can I do? Maybe if I kind of poke on the monitor here or something. See, connection is waiting for a response. Okay, well, I can restart MetaStock if I need to. There may be something with icon happening right now.
Yeah, this is a new feature that only happens during presentations.
I know, we build these in too, so it's okay.
Try this. Click on cancel. I don't think this is getting anywhere. We can try something short of just restarting MetaStock. Go to File. And then let's see, hit go offline. It's right above the bottom, like right above exit at the very bottom.
All right.
And now try File go online. It's in the same place.
That sounds likely.
Might work. Sometimes it does require a reboot, but this sometimes will do the trick, and it looks like it might have worked. Hit refresh.
I did. Hey, all right, it worked. You're a genius.
All right, cool.
And I'm glad to know about that little trick. That's never happened before, ever. Only on webinars. Okay.
Like I said, we only do that kind of stuff when we're presenting.
Exactly. It's okay. It's okay. Computers are fun. All right. So here's the saucer pattern. You can see most of these are rounded tops. Look how good they are. I mean, wouldn't you just like to know? This one was the only one on this picture that did not work out. Nice saucer here. It's breaking through, but right away, it's not falling through. It's not confirmed. So just get out of the trade right there. But all these others are great. Let me see if we can find some more. Go back left. I'm gonna have to stop looking at multiple charts here so I can get through everything. But you can just kind of see that, this rounded pattern. And again, this is all the saucers that it can see. There are, if I clamp them down, which I'll show you in a second how to do that, it'll be less. We'll do that when we have all the patterns on, because there'll be so many. You'll see the value of that. All right, so let me go ahead and go back now to the presentation. So saucers, amazing patterns. And again, on those charts, I didn't see any actual, really well-formed saucers that are like long like this. Breakout. That little ebook that I pointed you to has a lot of good examples of it. So, but you get the idea. Mostly rounded tops that we saw there. Okay, so what is tool number 4? Let me see here. 1, 2, 3. Yeah, number 4 is a very interesting pattern. And these Fibonacci numbers occur in nature. If you ever read about this in a technical analysis book, they talk about that fact, and they basically have to do with retracements. 50%, 38%, 62% are the primary. There are others that people look at, but those are kind of the primary ones, and they have to do with 8s. So 4 8s, 3 8s, so 5 8s. Retracement of a move, and very often, the market will react to that point and reverse. And it just, nobody really, I don't know why it works so well, but it does. I met one guy at a conference, and he was about, I'm going to say he was about 80 or 83. And he was just like a spring chicken, man. He was running around that seminar. He said, Ed, I'll tell you what I do. All I use in the market is Fibonacci retracements, and I'm just doing fantastic in my retirement. And he was serious as heck that that's the only pattern he uses. So that really got my attention. But it is an awesome pattern. Let's go ahead and look in here at Fulgent and see what we can do. And you get a chart that is moving a little more than American Express to actually show it. This is pretty good. Amgen's pretty good. All right, let's go ahead and bring up Fulgent again. And we will double click the patterns and turn the saucers off and turn on the fibs. All right. All right, let's go, Fulgent. Show me what you can do there. Okay, here we go. So this one right here is, you can see there's the move. So that looks like a 38% retracement. We get a nice little move up before it turns down. And over here, I've got what looks like a 50% retracement off that move. Let me back up just a little bit here and get more of these in. And let's try move left to a different chart. This is a very clear 50% retracement. Here is, if I look at this move here, that looks like 50. It sees it again. It's got the right stuff. It starts to see the chart move down right there a little bit. It says, okay, you've got a potential Fibonacci 50%er right here. It does not follow through. So, and that's going to happen, but it's telling you where it sees them. Very nice trade. Very nice. Very nice. And a very nice short term of about 6, 7, 8 bars right there on that one. So again, it's looking for those retracements, and every place it sees the pattern, it's going to color code the chart as to where that is. Okay, so just speeding up a tad bit here, not too much. All right, so the next one is also a great pattern to trade, and that is price gaps. Amazing price gaps. You want them to be unusual. If you see gaps all over the chart, everywhere, that chart's not tradable in terms of gaps. You want to see something that is like, if you're looking at daily data, a gap that's happened once in 6 months, that's a significant sudden change in the supply and demand equation on that chart. And you basically have 3 kinds of gaps, the major gaps that we look at. One is the breakaway gap, which is where you have a low point in a chart or a high point, and it suddenly breaks away in the other direction. Those are great. They work out really well. The other one, and then the exhaustion gap, is at the end of a move, you get an exhaustion and the chart starts to turn around, and that's where you want to trade, right there. And you got a very nice stop at that low right there, by the way. So the same for breakaway gaps. But the measure gap is the interesting one, because you never know if you have a measure gap or not until the chart moves away from it. The beautiful thing about measured gaps is that they do predict the 50% point of moves. So if you have a move that comes up, a decent move, not just a few bars, but a good move, and it gaps right in the middle of that move, you can pretty much bet it's going to go twice that distance. That's why it's called a measured gap. But you have to wait for it to break out, because it could be an exhaustion gap. The gap could happen and it could turn right around on you. So you got to be ready to get out if it goes back in the gap, if you bought, right? If it turns around and goes back inside there, you got to get out and go short, if it, because then it's an exhaustion gap. So that's and the software is looking for this stuff and trying to figure out which one they are. Let's go and look at it really quick and go back into Fulgent. Okay, all right. And where are they? Right there, gaps. Okay, turn those on. Yeah, pretty easy to do. Okay. I don't see really many gaps in this chart, but let's go ahead and see what Apple can do for us on gaps. All right, and actually, so this is again showing all the gaps that it sees, regardless of the historical testing on them, and I'm going to clamp them down. Like I said, I have to say that because some of these patterns you're going to see quite a few of them firing, but if I just zoom in here a little bit, you can just see, right here, there's a gap formed, which, look at this, is just about halfway in that move. Here's one here, which is just about halfway in this move. Here is a breakaway gap that did not work out. It sees the gap breaking away from these highs, and it turns around, so we get out right there. This one's pretty good with a small retracement. Let's go and go forward to a couple more charts here. I love doing this in MetaStock because it's very cool. Okay, here is a breakaway gap right there. Not many examples on that chart. And a couple more. So we've got a nice measured gap here. Looks like we pulled back and broke away. There's a breakaway gap there, a breakaway gap there, a breakaway gap here, and another one here. So those are your gaps. And some charts have more than others. But if it's a unusual and large gap, the signals are very, very promising. They're very productive on those opportunities. Okay, let's go ahead and look at our next contestant is another one of my favorite patterns. And I actually think I discovered this many years ago because I hadn't seen it written up anywhere when I saw it. But it is really pretty powerful. And that is the volume climax and volume trend. What happens in markets is, if you're going up or down, let's say you're going down very quickly in a chart, it's being sold off. Volume rises as that's happening because more and more people get out and they're selling to get out. So for every seller, you have a buyer, but that activity increases. The price is dropping. The buyers are thinking it's cheap now, I'll buy it. Well, at some point, they kind of start giving up. They go, maybe I shouldn't be buying this anymore. And the sellers go, well, maybe we're done. So there's some point where the volume starts to back off. And when you see one of these things form that is very, very clear, and then you see the little reversal happen right there, that is a dynamite signal. The really clear ones are kind of hard to find, but they're there. Just look down there in the chart. Of course, Fulgen is going to show you where they are, but they're easy to see in any chart. If price is dropping and the volume rises to meet it, but the price keeps going down, I call that a volume trend signal. And what's happening is people have transacted at that point in the chart, and there's no more pressure. It's like everybody who wanted to buy or sell there has done it. And so it takes very little movement to accelerate down. So as this volume backs off, you'll often get these very strong moves in the same direction in a volume trend signal. Okay, so we'll go back into the software again and look at that. AI volume, oops, I'm sorry, let's delete that. Double click it. All right, so volume climax, which is both patterns, is right there. Okay, and close that, and we'll refresh. By the way, you can minimize that little form. You have to close it every time. Okay, let's look at a couple of these. This one's very interesting here, but so is this one. Let me kind of move the chart over, and we'll just sort of look at this guy because he is pretty cool. Okay, so when I look here at this chart and get the cursor, all right, you can see that right here that volume is rising pretty steeply. See that spike right there comes up. It's not real clear. This is a much clearer pattern here. See the volume's coming up and it starts to back off. Oh yeah, baby, that thing, we have just had a volume climax reversal right there. And so, it goes up. The same thing here. Volume's coming in, higher. Chart backs off, volume backs off. All right, that's your reversal point. Okay. Again, this one is the right stuff for a volume climax. It's got that, but I'm looking at the opportunity and I do see an increase in volume there, but it's not that dramatic. The chart doesn't really go down much. So again, there is the human element of this, of looking at, I can click on them, of course, and I didn't mention this earlier, but the advisor over here will tell you about each pattern and kind of, what it is and all that stuff. So I can click after each one. I meant to do that earlier, sorry. But we're going to turn the cursor off here. See if we can find another good example. This one's a really nice volume pattern right there, coming down, breaking away. So you can see those happening in each of those cases. All right. Okay. And actually, I've been meaning to get rid of these lines I drew a while ago. And get rid of this one. There's a really good example here of volume, again, rising, very strong. You see it's really low back here, and it gets really heated right there. And heated. The chart's still going down. We're not ready. Okay, the chart turns around. Volume's backing off. Oh, yeah, do it. Okay, so some good examples of that. All right, I think we have one more. One more in our 7 collection here. And this one is the coolest pattern because the psychology around these is so strong and they're so predictive that some people just trade consolidation. Just like the gentleman said, I trade Fibonacci's. You can specialize in consolidations. There's many different flavors, flags, wedges, rectangles, ascending, descending, but they're basically places where buyers and sellers have been duking it out, and no, I think it's cheap, I think it's expensive. And finally, one side wins. And that breakout is where you want to trade it. And look at this. What happens is you get a consolidation. It's very obvious. When you break through one side or the other, they can fail. When they fail, they're going to come down to about halfway. But when they break through in the correct direction, in the direction of the consolidation, they will very often, I'm going to say it's 80% of the time, will go to twice that distance. So from A to B, you're going from B to C. And it is uncanny how often you just exactly hit that point. It's weird. So don't get greedy, get out before you get there. But, and even the little consolidation, see, this one started from here, up, consolidate, it's going to probably go to here. This one, down, consolidate, it's probably going to go twice that distance to about here. So very powerful pattern indeed. All right, so let me go ahead and I'm going to back out a little bit so we can see more of the stuff. And we'll see what we get on American Express. So engine, okay. And we're on the last pattern here, so I have time to show you the last little things about this. Consolidations right there. Okay. There you go. All right, let's see what you got. Okay. And again, the consolidations are marked by a color. In this case, got this light blue. And you look at it, same as everything else. You know, how clear is that consolidation? The computer is going to see any range and it's going to flag it. But with your eyeball, you can look at that and say, that is pretty good. It's up and down right in that range. It breaks out. And if I go from where this started from, which I would say was from here, you could say from here, but probably from here. And if I do, another great tool over here, if I could get it, I think it's this one. No, that's price projection. Hold on. I need the fib tool. And I just picked up the wrong one. Just a second here. All right, there it is, Ben Price. I think it's this one. Yeah. No, still okay. Well, I can still do it though. There's the 50% line. See, it's 50% right there. So from here, 50%, it exactly touches that apex. Okay, we're going to go through in a couple charts here. There aren't that many clear consolidations in this one, but just back up a little bit here. We'll look at. So here's here's a downward consolidation, and it fails. It does get some movement. And it'll flag these. The ones that fail, it will show you. But let me go and go left here. Let's just see what we got in the next chart. And of course, you know, I'm going to show you in a few minutes the Explorer that we have that will find these things across the whole market. So you don't have to go through chart by chart by chart to look for one on the right edge. So this one, these are not very well formed. They're there. But let's go and go one more to the left. Okay, so here's a well-formed consolidation, and it fails. It goes the other way. That's good. So does this one, and so does this one. But it will find those. And so again, looking at this chart, I'm not seeing any real clear wedges or rectangles. This is one of the things about doing these live is, you know, getting examples for a PowerPoint are pretty easy if you have time to go do that. But I'm just trying to find some really good ones here. So here's kind of a rising consolidation. It breaks out. Another one breaks down. But not seeing that many good examples on just these first Dow charts. But because you had such a strong bull market, they're just not as prevalent. There's a really nice one here. Breaks out. Does retrace, but it continues on to the target. And another one there, which is okay. Again, what you're looking for are the ones that are very clear. The market has to see it. So if you're using the software, when it points one out, you're just going to look at that and go, does the market really see that battle between buyers and sellers? It's going to show you all the ones that it thinks are candidates, and you're looking for the really, really clear ones. So that is the consolidation. Okay. Let me get a couple more here just to see. So I'm disappointed we didn't see just a really good one in these. So again, this is pretty good here. Okay. Let's spin the bottle one more time. Okay. So here's a consolidation. So we came up, we consolidated, and it looks even more like more of this range here. And then it continued on up about twice that distance. Here's a pretty good one over here. From, came up, got kind of a range formed, and again, going twice the distance there. So a couple of examples, but didn't really find any great ones in these charts, just going through them live like this. Okay, now what I'm going to do, that's the last pattern I want to cover today. Let's go back a few charts here. And I reset this back. All right. And again, these are just the Dow charts that come up first in the list. American Express, I like this chart, it has kind of more movement in it, so I want to get back to it. Okay, so what I'm going to do, let's go back to here, and we've covered the 7 patterns now. I hope that those little nuggets of wisdom about using patterns will help you in your trading. Talked about some target ideas, how they form, what the psychology is. What I want to do in this little presentation here, or just for about 2 minutes, and then we'll take questions, is talk about what comes with this thing. If you're interested in using it, you can see how easy it was to use just by clicking in this interface. And one of the things that I mentioned several times was that I can limit what I see. So let me go back. This is actually the most powerful thing about this, because you can get exactly what you want out of the software. I mean, you saw me turning each of these on individually. I'm just going to go and turn all of them on. All right, let's see what that looks like. Ta-da! Patterns everywhere. So there's no shortage of opportunities. Use the Explorer on this. I'll show that to you next. They're all over the place. So, which is exciting, because you're never going to have a lack of something to look at. A gap, a saucer, consolidation break, volume climax. There's plenty of them. All right, so that's that. But the other thing that it does that I mentioned is that you can actually make it show you the best patterns. So, and that's probably the thing that people want to see in here. Before I do that, though, I realized we have this thing called time frames. So you see short-term, medium-term, long-term. So it actually will show you very, very short-term patterns. So I can turn on, let's say, all the short terms. Let me turn off the medium terms and turn off the long terms. And I'll say, okay, this is just a really quick example of this. Short-term patterns, only short terms. And you'll see some will go away. And the thing about patterns is they will mask each other, because if a pattern's firing, there may be another pattern like right next to it, and it needs a few bars so that the advisor will work over there. So as you adjust patterns and turn on the ones you like, you'll see different ones because they're on top of each other. Makes sense, right? So these are just the really short term. So if you're trading like scalp, like 2-3 day moves, I know a lot of people love to swing trade these, 5-6% moves that happen in 3 bars. Look at how many there are in here. They're all over the place. Look at this. I mean, look at that volume climax right there. It's amazing how great these trades are, just the very, very short term. And that's why I like showing this. But so you can do that. You can do the medium term, which is going to be patterns that form over like 30 bars. Long term, patterns that form over 60 bars. So you have that control. And finally, the last thing is what I keep teasing you about, and that's this accuracy rating. So we actually backtest these patterns over many, many, many years of data, millions of bars. And it looks at things about the pattern, like how many touches does the trend line have? What is the angle of the line? How much volatility is there around the line? So we measure all of these factors. That's what our AI does. And it says, okay, when you see these things around a trend line, they're likely to be really good. So all I do is get down here and say, I've got 65%. I can go up to 75% and close it. And let's see what that does for me. You can see it basically took away many, many of the patterns. I'm looking at very short-term patterns that are highly accurate. And look, accurate, not accurate, 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 questionable. But it's going to get you to about 75 to 80% accuracy on those patterns. It's amazing. So I wish I had time to go through a bunch of charts and show this, in the market, but that it's fun to play with, because you can get exactly the patterns you want, the time frame you want, and then you can increase that accuracy this way, increase the accuracy to get higher and higher and better patterns. All right, the last thing to show you, which is on this slide, is another great feature of this that makes it just easy to use, and that is the Explorer. So that is a picture of it, the output. I'm sure you're familiar with it in MetaStock. And so what I'm going to do, go back over here, and this will be a very quick demo because it is so fast. Let me go back to Fulgent and turn on the defaults here. So patterns, And let's look at the defaults. Yep, I sure do. And we have set these to the ones that we think are the best in terms of term, and all these are turned on over here. You can get longs and shorts, or just longs, just shorts, all that control. I've just set it back to the default. And so now I'm going to go into the Explorer. And I just love how easy this software MetaStock is to use. It's just so great. All right, let me see here. I am going to start question. What did I not? I did not connect something here. Oh, I need to check it. So go up here. So I need Fulgent, the expiration for this. We actually have a separate expiration for each pattern. So you can find just gaps, just saucers. But this one is all of them. So I've got that selected. And I've got the SP 500. Now, Jeffrey's going to have to save me here because I'm not doing something right. I can't click Start Exploration, and I don't know why. There's a reason. What am I missing? What am I missing? Use the selected instruments. I have a date set, which is a week ago. All right, loading records. So
I think you might have a report open. If you right-click on MetaStock, in the toolbar, in the taskbar area, there's a report that's already open, and that's what's preventing.
That's it.
Save number 2.
Save number 2.
Tech support here for you. There you go.
Okay, and we may actually end on time. What? Okay, well, let's show the folks what this thing can do. So as you watch this, I want you to realize that it is looking at all of those patterns, all of those time frames, long and short, on the S&P 500, and look how fast this thing is. It's amazing. And so it is looking a week ago, and I set that a week ago because I wanted to show you kind of what it found a week ago, and we're probably not gonna have time to really do that. But anyway, it's just, I love the software, how it works, how it finds them, and then with Fulgent working with it, it'll literally go through all those charts, and you can scan the whole market, and it doesn't take that long. So show me all the really great, gaps today. Where are they? All the great saucers today, where are they? And it does it, and boom. It doesn't make that sound, but so you got your long over here. So all my long candidates, here they are. I've got like about 6 of them. Interesting. We also have in long. So we keep the patterns active for 3 bars because they have to be confirmed. You get the pattern and the software's saying, I think I got the right stuff right here for trend line break. And you look at it and go, well, yeah, but I want to see a little confirmation that the market sees that. So I'm going to wait a bar or 2. And that's why we do this. So all of these are in trade. They're actually fired a bar ago or 2 bars ago, maybe 3 bars ago. Which pattern is it? Well, there's a little legend in the manual. The manual's very complete, talks about the patterns, what they do. There's a lot in the manual that you can learn from. But the C503, 504, these are the IDs of the pattern. I haven't memorized them, but like a 501, I think is trendline break. There's a little table in the manual that shows you what these are. So you can tell, which ones to click on very easily from that ID that comes back. That's it. And as you know, you double click, you get the pattern in MetaStock, and then there it is. All right. So Jeffrey, I think we're doing it here. And I know, no rush. I don't feel rushed. It's good. I've got 2 more things to show folks. One is tips about these patterns. And I talked about, my favorites, like the ones that I think are the most productive. These are the 4 that I really like: the support, breaks, reversals, saucers, volume climaxes, and consolidations. And I think you probably got that from my presentation. Very, very predictive patterns. And, like in the 70-80% zone for these particular ones, especially the shorter term ones. All right, so those are the most accurate patterns, and these are talked about in that little book as well. Lower volatility is better. So you see a chart that's going like this, that's what I call a schizophrenic market. Yes, you'll see patterns in there, and yes, they work, but it's much better to trade something like this, where it's just very, very nicely formed, not all over the place like this chart. So that's something you're gonna have to put your stop somewhere, and you don't want the stop to just get hit by one of these, big moves like this. So that is something I wanted to pass on to you. And the final thing, there's 2 more things. Next last thing is You want to try to trade in the direction of the market. So you can run these chart patterns on the indexes. It'll show you what patterns are firing. But if you are trading long only when the market is breaking through or turning up, your probability of working out is higher, of the trade working out. So you want to trade in the direction of the market if you possibly can. And the final thing is, this is another use of this that is very popular. I've talked to users, and I know there's a lot of plugins for MetaStock, a lot of signal generators and different things. Chart patterns can only help. So if I've got, like, this is a RSI 14 reversal system here that I've got plotted going through, the 30 level and back up. Well, if I just confirm those signals with a pattern, is there a pattern happening when the signal happens by turning them all on? You're just much more likely to get a move right there, no matter what the system is, no matter who made it, whatever plugin you're using. You just go and turn on the expert up here and let it show you where they are and confirm them with patterns. So it's a great use of this. And once again, get your book. So fulgent.ai/MetaStock. And I think that's some good information that'll help you in your trading. All right, Jeffrey, I think we got her.
I'm typing in that address for everybody here. I'm sure Kelly is as well. One question I have for you. How long did I try it? How many times did I ask you to bring this to MetaStock?
You're pretty persistent.
You did a great job with it. I'm gonna show it a little bit more. Thank you very much, Ed. I appreciate it.
You're very welcome, Jeffrey. Thank you.
I'm gonna go ahead and take over. Thanks for coming in. Thanks for everything. Have a good afternoon.
You too, sir. Thank you all very much. Enjoyed it.
Okay. All right. Let's go ahead and kind of get this going here. And let me go ahead and there's just I'm pushing the buttons. Let me make me the presenter and let me show my screen. So I do absolutely. One of the things that, so there's that. One of the things that we like to talk about, and one of the things that is very popular is chart patterns. Chart patterns have existed for a long time. And the thing I like about kind of automating these patterns and putting them in a computer is it takes them from being relatively subjective to being completely objective. So in other words, like the computer has kind of got it all keyed in. If I looked at the ceiling tiles in here for a little bit, I could find some patterns for you, but that might be just me trying to kind of confirm what was actually on the chart and not really seeing what was on the chart. And so the ability for to have the computer help you recognize you and help you learn about them is something that is really, really helpful. One of the things that I like is kind of the implementation. I think Ed does such a good job in implementing MetaStock products. So I've taken a little bit of a screenshot here, but right here you can see the consolidation pattern. I've got kind of the expert advisor, and he's got kind of an idealized pattern, exactly how this should look, drawn up for you with some instructions in terms of what the pattern is and what it indicates and all that kind of stuff. They've truly spent a lot of time kind of developing and refining and revising the chart pattern engine. And I absolutely love it. It is one of the things that I saw. I was like, I need to get Ed to put this in MetaStock, just like a lot of the other add-ons that we're talking about today. But in total, it identifies consolidations, cup and handles, fib retracements, gaps, head and shoulders, saucers, support and got a little hiccup coming. Support and resistance breaks, reversals, tops and bottoms, trendline breakouts, trendline reversals, volume climax. Just about anything you want. In total, it does include explorations. Ed showed you very well how those work, and you can kind of go in, scan for any of the patterns. The expert advisor. This software, with all of the patterns that it kind of identifies, is available at a one-time cost. We normally charge $1,495. And of course, we're doing a summit special where we're kind of discounting that down to $995. And we're offering it, of course, with like a 30-day money-back guarantee as well. So we want you to be able to try this product. We want it to be helpful for you. If it's not helpful for you, you do have the ability to return it. No questions asked. We'll just basically give you a refund for it. So actually, we will. That's not entirely true. We'll ask you why you didn't like it, because sometimes it's a technical issue, and we can kind of help you with that. So, and we also use that to improve the program going forward. So we will ask you why you didn't like it, but we won't give you a bunch of hard time about whether or not we're going to give your money back. We give you a money back guarantee. So give us a call, 800-882-3040. You can visit us online at metastock.com/saleschat and give this a go. It's been a very, very popular product. People love chart patterns. This is the best implementation of chart patterns, and I'm glad we have it in MetaStock. It is also, you can pay $9.95 and get that as a one-time cost and add it to your MetaStock. It's also part of our Summit special, so you can get Barry Burns, Rick Sadler, Guy Cohen, the chart pattern engine. You can get 3 months of Learn MetaStock with Kevin Nelson, and that's a premium subscription where they kind of go through a lot of, like, over 300 hours or 300 videos about how to use MetaStock. He does webinars all the time. You'll get 3 months as a subscription to that. You also get the Unleash the Power of MetaStock, which is a training CD that we put together. It's no longer on a CD. It's an online training course with a workbook that you can kind of download, print off if you want, work through to go with the CD. I'm sorry, the online course. That comes with it. You also get 2 years of stocks and commodities. Individually, if you bought all of this stuff, it would be $3,831. We've put together a really good summer discount on everything, where it's $1,999 today. As I said, most of it's available on a 30-day money-back guarantee. And you can give us a call, 800-882-3040. You can visit us at metastock.com/saleschat. You can also go online at metastock.com/summitdeal. So there you go. We're going to talk a little bit more about that. But before we kind of go on to my part of the presentation, I do want to spend a minute to talk about Stocks and Commodities Magazine, the sponsor of today's event, been sponsoring us ever since day one. The very first time we did this, they were on board as a sponsor, and they've been great sponsors. They help us with the kind of getting the word out. It's also, for you, it's a great magazine. They've done 17,000 articles. They've got more than 1 million actual subscribers. They've been continuously publishing the Stocks and Commodities magazine since 1982. And if you are watching us on YouTube, go right now and go to metastock.com/tradersummit, register for today's event, and you can sign up to get not only just a free issue of Stocks and Commodities, but also there's all of the presenters that are here today are giving away freebies, like Barry Burns is giving away a stock course. Ed Downs is offering that ebook, and you can sign up for all of that at metastock.com/traders-summit. So there you go. All right, let's kind of transition a little bit. I'm up next. Let me go ahead and kind of read a legal disclaimer again, and then I'll kind of tell you kind of how I got involved here and, you know, what I've done over 25 years. So let's go ahead and start here. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. This information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. And I always say this. Today, we're going to kind of look at a couple of examples, and we're not going to, but I am not recommending that you buy or sell any type of instrument. I am a very probably more active trader than I've ever been. I also have a very, I don't know how much money you've got. I don't know what your risk tolerances are. I'm not here to give you advice, but I do want to point out some things that are in MetaStock. So there you go. I see Scott has been waiting for the president. Thank you, Scott. Welcome. I haven't seen you say anything today, so welcome to the room today. So for those of you, let's go ahead and kind of go over here. I just want to ask you how everything's going today so far. We put these on probably almost every month. Sometimes they're like a week long. If you're enjoying today's class, go ahead and say so in the comments, or just let me know how you think it's going today. I think it's been going very well personally, and I always like to get feedback, particularly when it's good. But in any case, let us know. Let me know. How do you like today? Like I said a little bit earlier, I just looked. I've been here at MetaStock so long that I have to that I have to look at LinkedIn to see how long I've actually, to do the math. And as of right now, it's been about 24 years, 6 months. So that's pretty crazy, right? I started back here, I want to say it's 1997 was the actual start date, March. And I just remember kind of coming in. I had a little bit of experience of being in college, did a little stint with the Army Reserve that lasted little. It was like 8 years long, and it actually lasted until 2000. But my buddy worked here, and she was like, you should get a job here. They're hiring in sales. You're in sales. This is a good company to work for. And that's kind of how I was initially. I didn't even know I knew what a stock was, but that's about it. So I came in and we kind of talked through, and I got the job as inside sales. And I absolutely was excited about it. And I ended up, if somebody would have told me I'd still be here 25 years later, I would have been absolutely floored. And I'd be like, nah, I'll be there for a few years. But it's a great company to work for. In inside sales, I did that for almost a decade. And it was great. Like if you had questions about what MetaStock was, or you were looking to improve your trading or all that kind of stuff, you give me a call. We just talk about what you're trading and how you're doing, and how maybe MetaStock might be able to help you find better trades or find a better trading strategy. And the nice thing about representing MetaStock in that type of a capacity is it's a very well reputed product. I've got this on the next screen, but it's been rated now #1 in its price category for like 27 years in a row. And yeah, I think it's 27 years. It might be 26. But in any case, decades. It's been rated #1 for decades. In addition to that, we were owned by Reuters at the time. And if you haven't heard of Reuters, they're one of the most well-established data providers in the world. And it was great. I really enjoyed working inside sales. After that, for about another decade or so, I worked in business development. That's where I met most of the people that are speaking today. And it was really good. I've learned a lot about trading. I've been able to meet and become friends with everybody that's speaking here today, and a lot more. And that's been very, very beneficial. The last 5 years, I've been in charge of kind of these events, which we started about 8 years ago. I'm also in charge of our sales team, and I'm also in charge of kind of like our US-based partnerships. So, well, it's a relatively small company. We have about 30 people here, and in a small companies, you wear a lot of hats, but I really enjoy most of the hats that I wear here. So, and it's a great company to work for, and it's one that I'm proud to represent. So, in any case, that gives you more than enough information on me. Probably it was a little bit long. Looking at my clock, it was definitely long. For MetaStock, we've a software company that's been doing software since the 80s. Like I said, we've been rated #1 since sort of like 26, 27 years now. About 8 years ago, we purchased our software back from Reuters, who was Thomson Reuters, and now they're Refinitiv. But we still have a really good relationship with them, which has been very beneficial to us in a lot of ways, mostly because they're one of the best data providers in the world. We're able to have a lot of customers in India, in London, in Australia, in you name the country. We have a lot of customers all over the world. And the nice thing is I can go, well, let's say it's a non-COVID time and people are traveling normally, but I can go into India and I can go in and talk about these same methodologies that we're going to talk about in India using Indian stocks. There's literally hundreds of thousands of instruments that they cover, and their market cap is huge. They're famous for their news. They're the same. They sell a lot of the news and the data that we sell. They sell it to institutions and hedge funds, and so it's a great company to work for. It's a great company to represent. I think it's a great company to be a customer of too, because a lot of times, we have people we have a support staff that is here based in our Salt Lake City, Utah office. If you contact them, we actually keep more support reps in support than we have in sales and marketing put together. But if you contact them, they do a very, very good job of making sure that your questions are answered. And there's not It's not uncommon for our support surveys that come back to come back 100 for the whole week. They do such a good job. It's a great little company to work for. I absolutely love it here. Like I said, I'm proud to represent the company, and I need to move on. So, anyway, today we're going to be talking about more hidden gems in MetaStock, and this was actually Scott's idea. Neil, thank you. I'm glad you said it's been great so far. Long, thank you for saying it's been a great presentation. If you guys have questions as we go today, please feel free to ask. Today's class is a brand new class. One of the presentations that I do is called Hidden Gems of MetaStock. And Scott actually recommended, Scott's in our YouTube channel, he interacts with us quite a bit. He comes to a lot of our sessions, but he recommended that he didn't say it exactly in this way, but there's so many tools in MetaStock that we could talk about that we just kind of don't talk about, that we could kind of talk about more in MetaStock. And so today I'm going to talk about a couple of really hidden gems of MetaStock. So the first one is going to be Elliott wave analysis, which is a fantastic little tool of MetaStock that I'm going to show, the LCI method. And if we have time, I'm going to show a couple of different methodologies that are put together by John Ehlers, who wrote a couple books, and I'll talk about them if we have time. So the first thing that I kind of want to show, though, is the Elliott wave analysis. And so this is a picture of R.N. Elliott. R.N. Elliott is also Ralph Nelson Elliott. I have the exact, I'm going to also cheat a little bit. Most of the stuff, when I get real seasoned as a presenter, I know what I'm talking about, and I don't need notes. But with this being the first class, I do have some cheats here just to kind of help me out. So R.N. Elliott was born in July 28th, 1871, and he died in January 15th, 1948. He is a father of Elliott wave analysis. Elliott wave is a very, very popular branch of MetaStock, or of analysis and analytics, and this is pretty much the person that developed Elliott waves. Now, if you're a MetaStock user, you may not know it, but we have some really, really cool Elliott wave tools that are built into MetaStock. And today, my goal isn't to give you a firm and functional understanding of Elliott waves, because we could spend days on that, really. We could go in here, we could talk about kind of amplitudes and fast versus slow amplitudes, and we could really kind of get into the woods on it. It's a very complex theory, but I will want to talk about the basics of Elliott wave and show you how you can access them as well. My boss, who is an awesome guy and is listening in the other room, so he's extra awesome today, actually created a video that's quite a bit longer that talks about Elliott waves. And if this is something that's of interest to you, well, you could go to youtube.com/metastock, and it'll be right there is what's new in MetaStock. I think it was 17 video. Anyway, we can find it for you if you give us a call at www.metastock.com/saleschat or 800-882-3040. We can send it to you. While you're on the channel, you should like and subscribe. So in any case, today we're going to just kind of talk in broad strokes from a high level. I'm mixing metaphors a little bit here, but about what Elliott waves is and how you can kind of use these tools in MetaStock. Okay. The Elliott wave principle was initially developed by Nelson, R.N. Elliott, to identify market cycles, and it used market psychology. Basically, and if you follow markets, markets don't go straight up. They go up in waves or stair steps or whatever you want to call them. They go up, sellers come in, they pull them down. They go up, sellers come in, and they pull it down. And so even in a bear trend, or in a bull trend or a bear trend, you generally have an upward step. And it's a very, very natural function of markets. And R.N. Elliott was the first one to kind of break this down into a methodology and into a wave count. And he called them waves. He was probably the first one to call them waves. But here are kind of the wave patterns that he looks like. And here's the step pattern that we're talking about. Market goes up, Enthusiasm is in this stock because it's in an overall bull trend, but the enthusiasm comes in, profit takers take profit, enthusiasm returns, profit takers take profit, and that's kind of how the cycle of a normal market theory works. What R.N. Elliott did was he actually started labeling these wave counts. So in this particular wave count, your first upward wave in this bull trend is going to be wave number 1. Your counter trend wave, or the wave that comes back, is going to be wave number 2. Your next wave will be, your next upward push will be 3, followed by your next wave down, followed by your wave 5. So generally what you have here is basically a market, normal market activity. And you can break these down into subsections as well. And I'm going to show you that a little bit in the chart. In other words, there's like waves and waves. So while this is an idealized flow, in these bigger moves, you're going to have smaller moves as well. And those can also be labeled and identified and follow a very similar pattern methodology to what we're looking at here. Okay. Any questions you've got, feel free to ask. Every time I look over in this direction, I'm just looking to see if there's new questions for me to answer. So the other thing that he kind of talked about, and I actually learned this from watching Kelly's demonstration, which was fantastic, and that I mentioned that he's an awesome guy. Just kidding. So motive waves are the waves that push the market, and they are labeled 1 through 5. The 1, the 3, the 5, if we look back here, are the directional waves, and the 2 and the 4 are the correctional waves. So they're the ones that pull back. Okay, and there we go. Let me kind of just show you this. That's about what I was going to show you when it comes to Elliott waves, and kind of lay the stage. Elliott waves, like I said, we could do a whole class on it. And but I do want to show you that this is a tool that's available in MetaStock. And one of the things that we've been doing over the last several versions of MetaStock is taking some of these tools that are out there, buying the rights to them, and just making them available for free. So I've got a chart of the automaker Tesla here. It's had some really good waves. It was a good representation of the way that it looks. And in order to use this, if you're a MetaStock user, what you're going to do is you can open up any chart, and that we have in MetaStock, we have the concept of what's called a template. And so you can apply a template to the chart, and it's going to add all of the indicators, what we call the expert advisor, which is labeling all of these symbols and providing any alerts and any commentary and trend lines, and the volume, everything, the color, the look, the feel is always applied by using a template. So in the later versions of MetaStock, we have the Elliott wave theories built in. So if I can right click here, I'm just going to show you the templates that are available. And again, I'm going to tell you exactly kind of what they do. So right here, I've opened up the template folder. If you're using MetaStock, just right click on any blank spot of the chart. It doesn't matter as long as you're not pointing at an indicator or something along those lines. As long as it's a blank chart, you can go to apply template here. And what I'm going to look for is Elliott wave by MetaStock. Okay, so right here we've got Elliott waves advanced. Okay, that one has quite a few indicators on there. We're not going to look at the advanced ones here, but you'll notice there's high volatility with support and resistance, high volatility, low volatility, and normal volatility. And I want to talk a little bit about what that means. As you may know, some stocks are more volatile than others. Some of them have bigger directions than others. And so the different settings actually use different expert advisors to identify the wave count. In this particular one, I've got the normalized volatility open. What you could do is if you have a very low volatility stock, you can put on like the matching template, and what'll happen is it'll require smaller moves to start identifying wave counts. And likewise, if you have a very high volatility instrument, you can use a higher volatility. So if you're what I would recommend is always start with the normal volatility. And if the wave counts, if you're not getting enough wave counts, or you kind of want more, then you can always move to a different volatility and see how that looks for you. The other thing that kind of I like about this is what I was talking about with the patterns. Like with patterns, they can be very, very subjective if I'm trying to identify them. With Elliott waves, there's a running joke, and I can't remember where I picked this from, but you can have 5 different Elliott wave technicians a chart, and you'll get 5 different wave counts. So they can be very, very subjective in terms of where you start and where you finish, depending on kind of how things are drawn out. And I like the fact that this is included with MetaStock and that will automatically draw it for you. Okay. So up here, there's a few indicators that are actually attached to the chart, stochastic RSI and a demand index. Down here, you're going to notice, because I'm going to point it out, that you're going to have numbers. I'm going to zoom out just a little bit because generally what I want to be able to show you is the longer term wave counts. So if we're looking at, this is Tesla, and this starts, the start of this chart is back in 226. It incorporates all of the activity, and we can go back in the future, but I mostly want to look at that big up wave that you've all seen in Tesla that happened. It peaked out here at number 5, and you can see it all on the chart. With it, it's identifying the actual waves for you. So right here, we've got the wave 1. Here you have the corrective wave number 2. You have the big wave up, the directional wave is what they call it, to number 3. You have the corrective wave down to 4, the big wave up to 5. So all of those are kind of identified with you. And if we zoom in a little bit, so if we're trading this from a long term, this number 2, if we knew we had finished a first wave and we're starting the second wave up, or we'd finished the second wave up, trading and buying on the third wave when it starts to go up is probably a really good idea. Likewise with the 5th wave, when we have that kind of identified and determined. It's always good to trade in the general direction of the trend that's come up a lot today. An Elliott wave will kind of identify what trend you're in, but also what part of that trend, what wave you're in, what cycle you're in, okay? So and it does a very good job in there. You'll notice that it labels the bigger parts of the waves with the big circled numbers. So 1, 2, 3, 4, 5. Okay, but you'll also notice if we kind of grow in there, you do have, like I was saying before, waves in waves. So here, if you notice, there's a little bit of a little one here, a little 1 here, or a little 2 here, 3, 4. So it's also labeling both the big waves and the intermediate waves. Okay, and this is all happening automatically for you. It's actually pretty cool. I think that's probably technically what I'm going to talk about with the waves. There's a few things that I want to point out with the expert advisor that I think are really cool that I'm going to show you. So as with everything else, this has an expert advisor commentary. I love the commentary in MetaStock. It's probably my second favorite thing next to the actual scanning, because I use scanning every single day. But if I go into the commentary for this Elliott wave pattern, go ahead and open up the window for that. And it's going to take a second to load just because of it loads in a lot of data and it calculates a lot of data as well. So initially, whenever you put in a commentary, it's going to actually tell you where you are in a current wave. So if we look at here, it's going to say, oh, actually, this is interesting. I'm going to kind of zoom in on this here a little bit and let you see it, because there's actually a couple warnings that are automatically showing up. So I'm going to, let me go ahead and kind of make this a little bit bigger so you can read it along with me. The Elliott Wave's normal volatility expert has detected a triangle consolidation, 21% pass pattern for Tesla orders. This pattern trades better with indicators such as RSI. When the pattern will end, the trend will normally resume. The thing right now, it's seeing a triangle pattern here, and we should watch the RSA when the trend resumes after the consolidation ends. It's also warning us that the normal volatility expert has detected a 0.4 of a wolf wave pattern. So it's telling us a couple of different things and giving us some pretty good advice. I'm not going to read all of this just because of time, but it actually kind of just, in this particular case, it's looking for a estimated target price of 205, which is pretty far down based on this, okay? Right here, it's going to look at different wave patterns. So the fast amplitude just means shorter waves. That's detecting a bullish wave 2, a bullish wave 1, a bullish wave 3, and the slowest wave that it looks at is the 34. That one isn't defined on this chart. It usually will be if you load in a whole lot of data, but right now, this particular sub-pattern is not defined, okay? Tesla ordinary shares is long-term bullish as the 144-day moving average is increasing. The relative strength index is this, and then it's in neutral territory. And you'll notice that it's very, very descriptive in terms of telling you not only, okay, it's in a bullish trend, This is what the moving average is doing, and it's increasing. The relative strength index is here. It's in neutral. And it's actually telling you not only what the indicators are saying, or what the indicator values are, but what that means for you. Also, the Elliott oscillator is in -3, which is negative territory and a bearish sign. So overall, and this is kind of what we expect right now because it's very sideways, we're getting kind of a mixed message from this chart, and that's fine. We don't want to trade mixed messages. If it's giving us a mixed message, we definitely want to know. The other thing that I really like about the Elliott Wave Expert Advisor is that it's going to give you weekly pivots. So it'll give you weekly support, pivot, resistance, and support. And those we're going to say right here. So our first weekly resistance level is at 665, and our second resistance level at 686. The first support is 621.49, and the second. So you can read that. The other thing that I really like is it will actually give us a predicted high and low for tomorrow's trading activity, or for if you're looking at an intraday, we're looking at daily right now, but for the next bar. So if we're looking at a daily, which we are, and the market was closed, which it isn't, but it's right now it's projecting a high of 655.64 and a low of 616.38 tomorrow. So it's giving us those projections. It's also giving us a Bollinger Band top value and a Bollinger Band bottom value. So that's kind of, in a really big nutshell, from a very high level, the Elliott Wave tools. And if you use MetaStock, I'd actually recommend that you take a closer look at this. You also have the ability, if I come into our power console, I do have the ability to go in and scan for these patterns. So I can actually go in and look for stocks that are kind of in a certain specific waves. And just to kind of give you an idea of what those look like, you have the fast waves, the impulse, the moderate and the normal, the signal and the slow. So that's generally, you can run that scan. We've been running scans all day long. As a trader, it's my favorite function of MetaStock. I have the ability to just focus on the stocks that have an opportunity. And I use it every time I trade. And I try to use it every day, unless like I'm tied up in an online trader summit or, busy. I try and kind of go in and kind of just identify. And it's very, very easy to do. Here's the 5 stocks out of the S&P 500 that I want to trade. So in a nutshell, that is the Elliott Waves. We've been including that in MetaStock for a number of versions now. I think actually we included it in 17. So it's a new feature to 17, if I remember correctly. And Kelly, if I remember that incorrectly, let me know. But I think we did add it from 16 to 17.
Unmuted.
A couple of things. Okay, cool. We add so many things, it's hard to keep track. Flavian in Montana says, is Elliott Waves the best strategy to use? Flavian, there are a lot of people that really like Elliott Wave. It's not a strategy that I use, but one of the things, we get a lot of Elliottians that would like MetaStock, and you can pay thousands and thousands of dollars for software that all it does is identify Elliott Waves. The point of one of the things I love most about MetaStock, Flavian, is it's something that has tools that we've been working on since 1987. Over the years, I've seen a lot of software that comes in and maybe it's really good at showing a couple moving averages and gives buy signals, and they put a huge marketing budget and they charge an insane amount at $3,000 for just a system. And what happens is people get excited, they buy into the system that costs thousands of dollars, and within 2 or 3 months, they genuinely grow out of the system. The nice thing about MetaStock is, we're going to show some very kind of unique tools today, but it's a system that I believe will continue to grow with you. As you get better and better as a trader, it's going to get better with you. You're not going to outgrow MetaStock. I still have, to this day, and I've been working here for 25 years, questions about things that MetaStock can do that I have to ask our tech support team, and usually the answer is yes. But there's so much there. It's just not a software that you're going to outgrow. It'll grow with you, as opposed to the other way around. I remember Steve Akalis used to talk about how easy it was to create software that just had a bulleted list of here's 25 things we can do. We have 8 mathematical functions, stuff like that, right? And it's easy to kind of develop software, but that has just for that bulleted list. But if you want to set up something that's customizable, that you can say, okay, well, give me all the stocks that are above $5 that also have this pattern. Simple stuff like that is very easy to do in MetaStock, and yet a lot of software that you get out there just can't do it. So in any case, I got off on a little bit of a rant there. Thank you for the question, Flavia. So it looks like Mr. Cohen says, how do you capitalize on market manipulation? I like to use, I don't know that I can necessarily answer that in a good way. I like to be able to find opportunities in the market from a large number of stocks that are firing today. And so I don't know that it would be necessary capitalizing on market manipulation. I wouldn't say that that's necessarily what I'm doing generally when I trade personally. Generally, what I'm looking to do is take advantage of a trend. So all of the stocks that I'm looking at are generally in a trend, and I'm trying to trade in the direction of that trend. And one of the things that kind of stuck with me over the years is a saying that Robert Deal said. And Robert Deal is absolutely great. He's retired. He was the son of a preacher. And if you've ever gotten excited because you were listening to somebody that knew there was a son of a preacher that talked about technical analysis, he was a great speaker. But one of the things that's always stuck with me is like a saying that he would say: bulls will make money, bears will make money, and pigs will get slaughtered. So the idea was to stick to a trading method, and that's what MetaStock. The idea is not to be a pig. Most of the time when you're buying, you're not going to buy in at the very bottom or the very top. Don't be a pig. Anyway, all right, let's move on a little bit. Again, you can scan for those waves. The next one I was going to talk about is specifically one that Scott asked for, and that's a system that we've included with MetaStock for a number of versions. And if you remember, Kelly, go ahead and put it in the YouTube chat. I don't remember exactly what version this one was either. But again, Raphael asks, how much is the Elliott service per month? So it's included with MetaStock. You don't have to pay any extra for it. And if you own a copy of MetaStock, just apply the experts. If you don't own a copy of MetaStock, you can get yourself a copy of MetaStock. We have two versions of MetaStock. I'll cover this in a little bit more detail in just a minute. But MetaStock Real-Time includes real-time data. We call it MetaStock RT. It also includes a new service that Thomson Reuters, now Refinitiv, spent over $1 billion developing. And it's only $250 per month for real time, with that really good market data feed that includes some of the best news in the industry and some of the best information in the industry. So that's $250 per month. We have an end of day version that starts at $69 a month. And what we'll do with this, I'll talk more about how you do this, is we do what we call an extended trial. With the extended trial, you pay for your first month of MetaStock, and you get your second and your third month of MetaStock for free. And so quick math, about $20-something, you can own MetaStock. You can, well, not own MetaStock. You can subscribe to MetaStock for about $20 to $30 per month. You can own it. You can do that for the next 3 months, which means right today it's like July 28th, August, September, October. So for less than $20 a month, you can use the software that's been rated #1 in its price category for more than 20 years. And then if you like it and it helps you with your trading, well, then you're going to keep it. It's an easy decision. And the same thing is with the real time. We do the buy 1 month, get the second and third month for free. So that's the way I would recommend to try it. And we'll talk a bit more about that in a second. Okay. LCI was introduced with MetaStock version 14. So thank you for that question, Raphael. This is a picture of a good friend of mine. I haven't talked to him for a while, but his name is Logan Connors. And he's a very nice guy. He's started in our support team. He moved into our sales department, and he developed some tools that I thought were very, very cool. And so I'm going to kind of highlight what those are. These are also, just like the Elliott wave indicators, included with MetaStock. And I love this series. Scott, it was a great idea for this series because there's so much that's in MetaStock that we could talk about that, you know, normally we talk about how you test trading ideas or how you scan, and this is a good way to kind of get off the beaten path, and it allows people that have MetaStock, hey, maybe here's something that you didn't look at. So LCI trading system is a system that uses quite a few things: support, resistance, Fibonacci, pivots, and in the calculations that's due. The commentary gives trade management entry, exits, targets, and stops. So we're going to kind of go through this on our Tesla chart. There are a few things that I want to kind of just talk through here. And I'm going to do this mostly in the chart. So one of the things that you'll notice here is it's identifying support and resistance levels. What I'm going to do here is we're going to go into the we're going to go into this Tesla chart, and we're going to apply the LCI system, so you know how to do it in MetaStock. And we're just kind of walk through it. Before we go to the commentary, I want to get a bit of a clearer view, so I'm going to close the commentary for now. Don't worry, we'll open it in a minute. But what I'm going to do is I'm going to apply this LCI model. So again, like I did before, I'm going to go to Apply Template. And what I'm going to do here is I'm going to go down to LCI. So if I scroll down past the Elliott wave stuff, and there are a huge amount of methods in MetaStock. Again, I don't think it's something you're going to grow out of, but the template that I'm going to kind of walk you through is this support and resistance main template. So I'm going to go ahead and apply this to the chart. We'll go ahead and click on, I don't need to save this. So we'll go ahead and put this out. We'll just kind of walk through the elements on the chart. And I will be looking over here at my notes. I don't want to miss anything important. And I do have some notes over here that I want to kind of just go through. And again, if I do this presentation a few times, I won't have to refer to notes as much, but I don't want to miss any kind of the core elements that I want to talk about. So in this, and as part of the scoring system, as part of the template, you're going to have automatically support and resistance lines based on Fibonacci. These are just calculated. They're put on the chart. And so if we're looking at Tesla right here, right now we're kind of very much stuck between this level here and this level here. We've been there for quite some time. If we look back in time a little bit more towards the left end, right here we had a major support that there was actually a breakout signal for. And that's indicated right here by BK, which we'll come back at. But it is looking for the patterns. If it bounces off a support level, you'll see this MB signal, which is a major bounce. All of these are actually kind of automatically plotted for you, so you don't have to kind of guess where the levels are. It's just going to look for them for you, and they are based on Fibonacci's. And every time it finds a level, it's going to go ahead and put it on the chart for you. So there you go. That's kind of what those do. Next indicator that I'm going to talk about is, I need to kind of, can't see my notes over here. We talked about Fibonacci retracement, the volume indicators. This just kind of helps me kind of stay with what we're doing. So down here in the volume, you'll notice that the volume's different colors. It's either bright green, meaning that the volume is heavy and the price is going up. It's a lighter green, which means the price is going up, but then the volume isn't necessarily heavy. There's bright red, which means that the volume is heavy while the price is going down, and then kind of a light red and a dark red. Okay. You'll also notice that there's 3 different bands that cover here. Okay. And so really kind of the idea behind these bands is the top band is yellow. And if you have a volume bar that really exceeds that bar, you would say that volume is exceptionally heavy that day. Volume is huge right here, so it's way above the yellow band. If it's on the middle band, you'll say it's about average for that day. And if it's at the lower band, you'd say it's lower than average for that day. So that's all you're looking at. The volume is going to be kind of color-coded for you automatically. The bands are just going to tell you if the volume is extra heavy. But all of those values also go into the scoring calculation as well, and which we'll get to in just a second. Okay. In addition to that, there's the LCI percent R indicator. The only difference, this is Larry Williams LCI, but if you're familiar with Williams percent R, it goes from 0 to like minus 100. And some people find that somewhat confusing. All Logan did to kind of make the LCI percent R is he normalized the volume so that it went from 50 to minus 50. Otherwise, it's the same calculations Larry Williams did. It's just basically rescaled so that when it's above 0, it's bullish, and when it's down below 0, it's bearish. It just makes it a little bit easier for somebody to understand, because we're used to working with positives for bullish and negatives for bearish. So that's all he's doing, though. It's very much a percent R. And you'll notice right here, when it gets severely in the overbought regions, there's a couple of different bands to tell you that. When it gets to the severely oversold regions, there's a couple of bands that are color-coded to tell you that. Okay, so that's the percent R. You'll also notice right here, and I'm going to kind of zoom in on the chart right now, that there's a bit of a blue line here, okay? So right here, this is BK. That's a BK breakout signal. And you'll notice that there's a little bit of a trailing line that comes down after it. And there's actually two of them. And it might be a little bit hard to see, but I'm going to zoom in a little bit more so you can kind of maybe see it. Sometimes there's just one blue dot, and sometimes there's a light blue dot and a dark blue dot. Okay, what those are is when the stock is kind of moving in a bit of a trend, you're going to have kind of the darker blue dot. That just gives you the stop loss value. When it gets a little bit kind of less certain, you get both a light blue, which is a tighter stop, and a dark blue, which is a stop that's further away. And those are automatically plotted for you as well, and you can use whichever one that you want. Okay, and that's what that is. Okay. The next one talks about the scoring. Before I go into the scoring, I'm going to open up the expert advisor to talk about that, but I want to talk about kind of the patterns that he looks at. And they are built around the support and resistance levels, and they're confirmed by indicators, and they all give a score. So right here, there's these signals right here that appeared here are called MB, major bounce, okay? BK would be a breakout to the downside. Okay, and this would be a primary bounce, breakout. This is a breakout to the upside right here on this nice little move up. And so those are automatically identified for you as well. I believe it's breakout, primary breakout, major bounce. And those are kind of what he's looking for. Anytime you get a signal, what it's going to do is it's going to come up with a score. And to kind of show you the score, that kind of takes into account like the volume, the volatility, where it's at in support and resistance, all of the kind of stuff. It just kind of automates the process a bit more for you. So if I look at, like let's say I wanted to look at these major bounces. If I go ahead and open up the commentary, I can actually see that it's going to give us a score right now. And if I'm looking at it right now, it has a bullish reversal behavior, which is 35, and a bearish reversal behavior, which is 32. And we're not really getting much activity. It's been very channeled, and so that's really what the score is telling us, is that it's been channeled. If I move to kind of different parts of the chart, I can kind of see where this major breakout happened. Okay, and we did have a better score, like 47.5 versus 35. So it was more likely to be bullish. It wasn't a huge move, but it was a huge score differential either. So in this particular case, though, I am highlighting the bar that is the MB bar, and this is a bullish bounce. Okay, so this is a bounce off of a major support level, a major bounce, or a bullish bounce, and it's going to give us very specific advice in terms of what we should be doing on the chart. Okay, so right here, entry confirmation within the next 3 trading bars, the price must break 589.73. So what he's saying is, okay, this is a bullish signal. We're not going to buy unless it goes up above this price level, and if it does, we'll go ahead and buy. Okay, so our entry price then would be 589.73. Our initial stop level would be 523.99. It even gives us a points from entry. I really like kind of how well this is put together, because I know that our entry level we're about 65 points from it right there. Okay, our profit levels, it's going to give you targets, and they're going to be based on the support and resistance. They're the Fibonacci levels. So our initial profit target level would be 665, which is 64 points. Our primary target level would be 730, and our extended profit level would be 832. So if we buy this, as we hit our initial, you may want to cover enough, like maybe you're doing options, and maybe or maybe you just want to sell a third of your position, and then you get to your primary target and you sell another third, and you sell another third. So however you want to exercise it, it's giving you 3 different targets that are automatically generated based on support and resistance. Okay, it also goes through and looks at and does analysis for you of all of the different parts, and it's very, very extensive. So right here, when it analyzes the indicator, it's going to look at price. The recent price movement indicates a weaker bullish bearish trend. There's an expectation for that. It analyzes volume for the day that we're looking at and gives you some advice around that. You can move in a little quicker because I looked at the time. And in relationship to time, in relationship to Fibonacci, and then it gives you your trailing stop levels. So this trailing stop levels are actually put on the chart for you. But in addition to that, it tells you what the values are here, and whether it recommends that you use the tight stop, which it's recommending, or the lenient stop, which is not what it's not recommending. So in a nutshell, that's the LCI, and that's how it works. The thing I like about the LCI is it kind of dresses everything up. It looks at a lot of different things like volume, time, Fibonacci, and it gives you a very, very good, well-rounded trading system that includes things that you need to know, like stops are important and targets, and those kind of things. You actually absolutely shouldn't trade without a good plan in place, and this is a fairly well-rounded plan. The other thing I like about it is the scoring methodology that he takes advantage of this. I've said it way too many times, and maybe you get the idea that I like scanning in MetaStock. I do it almost every time. Well, I do it every time I trade or take a new trade on. But one of the things that I can do is, since those are actually coded in, I can come in here, and there's a couple different scans that I can run. Like right here, we've got bearish bounce signals, breakout signals, bullish bounce signals, Fibonacci retracement signals. I'm just going to run these two really quick against the S&P 500. Go ahead and start that as a scan. And look how fast it's going through those 500 stocks for me. Again, what I want to be able to do is ignore everything. A lot of times I'll go, oh crap, it's like 1:30. If I want to get a trade on today, and this happens all the time for me, I need to do it. So I'll run in and run a real quick scan. I'll see if there's anything that I like, and anything that comes back, I'll just buy it. And if I put a stop on it and move on, I generally, as a working professional, do not have time to look at all the S&P 500 stocks or all the offshore stocks. Forget it. There's just no way during the day. And so for the way that I'm trading, scanning is important for me. So this right here is a bullish bounce signal. This would be the major bounce signals, okay? And so Citrix, Fortive, Insight, IGP, and Las Vegas Sands, all those had majors. Because they're scored, I can instantly see that the best one, there's 45, not too good. 100 is not a score it gives, but it would be the best score. The reason Logan didn't want to give 100 is because nothing's ever perfect. So, but an 80 is pretty good. So I'd start at Insight, and if I like that, maybe I'll consider a position. If not, I can move down to LVS. It's got a 60, but it kind of combines all of those indicators into a very usable score that you can use. So there you go. Raphael says, thank you for the information. Appreciate it a lot. Great news on the prices and the services included. Walter says, I've been trading very successful for years with an end of day strategy. Is there any technical analysis software available that I can use offline, which allows me to create and modify indicators? Okay, that's a really good question. I'm going to kind of move on just because I'm looking at the time. I kind of want to talk a little bit about pricing. Unfortunately, I'll save others for a different class. I didn't kind of think I'd get through 3, but I kind of figured we'd get to LCI. I just have a tendency to start talking, and that's how it happens. The John Eller's work is really cool too. You should take a look at that. Walter, thank you for that question. One of the things I love about MetaStock, yes, you want to be able to use it offline. Yes, you can use MetaStock offline. If you want to be able to use your own strategies, you create your own indicators, you can create them. We do have a formula language that's built into MetaStock, and you can do those. You can see I'm skipping a whole bunch of stuff here. You can create your own indicators in MetaStock, but the other things that you can do is not only can you create your indicators, you can create your own scans, you can test your own trading ideas. Whatever you want to do, it's a very, very flexible program. And that goes back to what I was talking about earlier. MetaStock's a program you won't outgrow. I've seen so many software companies that people get excited about, but people just spend $3,000 on. And then they just grow out of it, and they're looking for a better tool. Like MetaStock, that's been rated #1 27 years in a row, right? And so I'd encourage you to try out MetaStock. It's a great software program. I want to say thank you for all of our customers that have been there with us for as many versions as you have, who keep voting us year after year after year #1. I appreciate that. I hope you like MetaStock as much as I do. I absolutely love the tool. So we have 2 versions, like I was saying a little bit before. MetaStock Real Time, that has the Zenith news that they spent over $1 billion, and the numbers behind that are pretty incredible. They spent over $1 billion on it. They have thousands of reporters and hundreds of different news bureaus all over the globe, literally, trying not to say literally as much, but they are the same news feed that is available and that is paid for by a lot of hedge funds and mutual funds because they want good data and they want good information. And so for $250 per month, you'll get MetaStock. You'll also get any data from a specific region that you want. You'll have the ability to go real time in that particular region. There's 3 regions. There's North America, Europe, Middle East, and Africa, and Asia Pacific. And if you pay for a month, we will give you the second and the third month for free. So basically, if you try it, you get 3 months to play with it. We'll set you up with somebody that will walk you through the installation, walk you through all the tools. We'll give you tons of training to help you get started with it. That's it. It's $250 per month. We also have an end-of-day version. It doesn't include that new service, but it includes everything that I showed you today. All of the scanning capabilities, the ability to use MetaStock with end-of-day, with end-of-day market data. It's only $69 a month, which is $23 per month. So for $23 per month, you can try the software that's been rated #1 for 27 years in a row. And if you don't like it, you can just cancel it, and you're out $69. Give it a go. You'll like it. Okay. In any case, we do offer that on an extended trial where you buy 1 month, you get 2 free months. If you want to take advantage of that, give us a call, 800-882-3040. You can also reach us online at metastock.com/saleschat. I'm surprised I'm going to end on time. Actually, I thought I was running a little bit more long than that. So in any case, also you can get that extended trial if you're new to MetaStock and you want to, and you really like kind of the presenters. We've had a great collection of presenters today. You can get all of the add-ons that we talked about. There's Barry Burns, the top dog trader, taking all of the stock to court. Rick Sadler's Patterns for Profit. Rick did a really good job. The OVI package from Guy Cohen, the chart pattern engine, which had all those chart patterns that Ed just talked about before me. We'll include with that learnmetastock.com. With learnmetastock.com, Kevin Nelson actually runs that website. And what he's done is he's put together hundreds of videos. I had a new rep start this month that I made him watch this, so I'm going to ask him how I did afterwards. But having him go through the videos because it's one of the most effective ways we can train him on how to use MetaStock. So he runs a monthly subscription that has MetaStock, that's learnmetastock.com, has 200-300 videos up there, some that are kind of about technical analysis, some that are about MetaStock, some that are about the Zenith program, which is our real-time native newsfeed. And he does 3 live webinars a week. He also, one of the things that I like is a lot of times he'll pull up in a Stocks and Commodities magazine. He'll kind of talk about kind of the methodologies that they talk. He'll put together the formula that you downloaded and kind of just do a class on a technical analysis topic. So he's built a really, really cool site over there, and it's only $99 a month, but it's part of this package where you're going to get 3 months of that. Okay. You're also going to get our home study course, Unleash the Power of MetaStock. And last but not least, you'll get the Task magazine, the Technical Analysis of Stocks and Commodities magazine for 2 years. So you can buy all of these things separately. This is a great package with a lot of the add-ons that I really like that we've kind of worked really hard on. Normally the price would be $3,831. If you buy it today, it's going to be $1,999. And the only thing that's not refundable as part of that is the subscription. So this 3-for-1 on Guy Cohen's product and the Learn MetaStock, your risk is really a couple $100, maybe like $200-300. Everything else is refundable if you don't like it. So I try and give you a risk reward that you'd love to get out of every trade. So, you know, the thing is like I just use MetaStock every day. It's a software that I've been recommending and that we've been using with our customers for decades. And I think it's valuable. I wouldn't be able to trade without it. I think it's going to be valuable for you, so try it out. 800-882-3040, metastock.com/saleschat. You can also do this online at metastock.com/summitdeal. And if you just want to try out MetaStock, that's great. Welcome to the family. Give us a call, 800-882-3040. We can start you out for $69. You can play with it. It's a tool that has been rated #1 27 years in a row by the readers, not the editors, but the readers of Stocks and Commodities magazine. So 800-882-3040, metastock.com/sales-chat. In any case, how am I doing on time? Perfect. Let's put this back on. I do want to say thank you to Stocks and Commodities magazine for sponsoring our summits and helping us with the advertising on them. Being really kind of, I remember we called up and talked them through the methodology and the idea, and they're like, yeah, we love it. This was before there was a lot of online sessions and things like that, and they've just been really good partners of us for years. If you do that summit package, you're going to get 2 years of Stocks and Commodities for free. If you're watching us on YouTube, go to metastock.com/tradersummit. For free, you can register for today's event, and you can actually sign up for a free issue. And all of the presenters actually had a freebie. So with Barry Burns, it was a free course. I think Larry was giving, I don't remember. I'd have to look, and I usually look right in advance, but I've been talking for a while. So in any case, a big thank you to Stocks and Commodities for years and years of sponsoring the event. We love them. They've been great partners of ours, and so we appreciate that. Our next speaker, I'll be just I kind of got a little bit full of myself. Our next speaker is literally somebody, there we go again with that word. Our next speaker is somebody that almost doesn't need a introduction. Larry, you'll have to bear with me a little bit. I've been talking for all day, and so if I stumble over my words more than normal, just bear with me. Larry has written some great books. He's one of the most respected options traders I think out there, and he has such a great reputation. And there he is. How are you doing, Larry?
I'm good. How's it going, Jeff?
Good. I'm going to go practice my ability to talk properly. But other than that, we're having a great day there. Well, I'm not going to curse it by saying there's no technical issues so far, but things are going well. Welcome. Thank you for coming today. Let me go ahead and throw the screen over to you. Are you enjoying your summer?
Yeah, pretty good. We just spent about a month up in Michigan. Now we're back in New Jersey.
Okay, perfect. I'm going to turn off my camera. I can see your screen. Everything looks good. We do have questions that are coming in through YouTube. So if we have some time, I'll make sure to throw them at you towards the end here. And okay.
Can you see that thing moving?
Oh yeah, it's way better than any of the PowerPoints we do.
I was just getting the PowerPoint ready, and PowerPoint suggested this slide, so I grabbed it, and this is it. It just came out of PowerPoint.
That's fancy. I really like some of the stuff the new PowerPoint does. It's really cool. All right, I'm going to get out of the way. Your turn.
All right, thanks. So good afternoon, everyone. We're going to spend an hour or so talking about the market and what our indicators are showing regarding that. We're a derivatives firm. I'm just going to briefly talk about, in case you're not familiar with our company. We started out as a derivatives research firm, selling data, newsletters, etc. And then after some pretty good recommendations in the 2008 financial crisis, we moved into money management. So we're both a CTA, meaning we manage futures options accounts, and an RIA, meaning we manage like SPY option accounts. We also have an educational arm with including mentoring and then other webinars like this, for example. So last year, our money management accounts had a great year. In fact, most years we've made money. I think we've only lost money in 1 year. And our newsletter recommendations were very strong. Of course, past performance is no guarantee of future results. So I will be coming back to this a little bit later, but we recorded a new 14 session home study course, and that's just recently come out. And we will be offering that to attendees here today at 50% off at that URL that's at the bottom of the screen. I'll come back to that later. So the four main indicators I look at in terms of analyzing the market. And the first and foremost is the chart of the S&P 500. Now that's pretty obvious. I mean, if if the chart's going up, you need to be bullish, at least to as long as it's holding its momentum, holding its support levels, despite what other indicators might say. And we're actually in one of those situations right now where several of the indicators are negative, but the chart of the S&P is positive. I will also look at put-call ratios, market breadth, and volatility, mostly VIX, but some other things to do with that. And if we have some time at the end, I want to stick in a couple of other things, including perhaps how we're trading some of these short squeezes that come along. So there's a couple of rules that I have, and they're related. One is that oversold does not mean buy. So, for example, in March of 2020, when the market started down, really February actually, and about a weekend was extremely oversold, but that obviously was not a good time to buy. The market continued to go down for about another 3 or 4 weeks and probably another 30%. So an oversold market can continue to fall for quite a while. And conversely, overbought does not mean sell either. More recently, we've had overbought conditions and the market has continued on higher. So we wait for confirmed sell signals. I mean, we'll never catch the exact top or the exact bottom by waiting for those, but also we won't be premature and get run over by the markets being a freight train. So here's a 2-year chart of S&P, and on this chart, we were only ever oversold there that one time, March of 2020. There had been one in the previous December of 2018, right before Christmas. The market was very oversold and quite ugly. But there have been several overbought conditions. Now, there was one in January of 2020 before the market actually topped in February. So it took some staying power to get through that one. Then we've had another few overbought conditions going forward. Right now, even though the market is at a new all-time high, it's not overbought by standard metrics. Now, another thing that we look at, this is the same chart, but I've just added some support lines over here on the upper right where the blue lines are. So there's support at last week's lows, which was also very close to the May highs. So when you break through what had been resistance there, bumped up against it once, then twice, then broke through, then it should be support, and in fact it was. So that area has been tested a few times, and that's pretty important right now in my way of thinking. So that's basically 42.30-ish in that neighborhood. Below that, we had a double bottom at 41.65 there in June. And then prior to that, we also had another double bottom in May at 40.60. So when an area looks like it's support and it gets tested a second time and we bounce off of there, that makes it even stronger support. So there's 3 good support areas on that chart. And so we're basically maintaining that this is a bullish chart as long as it holds that first support level at 42.30. Now, so that means its trend is upwards. As long as the trend of the S&P chart is upwards, we're maintaining a core bullish position of some sort. We will trade around that, but that's the current situation. So now there is resistance at the all-time highs, which were just set last week. And then we had a little sell-off yesterday and tried to fill a gap right down there around 43.70. Didn't quite fill it, but that's a little bit of a short-term support. But then these are the 3 that I just talked about. And the first one, to me, that's the crucial one, because if that gives away, then there's going to be a lot of other things going on that are probably going to be turning negative at the same time. Now, another thing that we look at on the S&P chart is what I call modified Bollinger Bands. Bollinger Bands, of course, are familiar to most traders. And when John Bollinger invented the bands, he used the standard deviation of daily percentage closing prices as his definition of volatility. And, that sounds pretty reasonable, but in the math world, that's not what they use. And Black-Scholes in particular, built into the Black-Scholes model, which is what we use to evaluate options and do all of our volatility calculations, they use the percentage, the standard deviation of daily percentage price changes, which is a slightly different number. So Black-Scholes is operating one way, and since most of our option-oriented data, we post a lot of data up on our website every day, and it's pretty low cost for all the data that's there. But everything has to agree. All of our volatility calculations, realized and unrealized, need to agree with Black-Scholes because that's the model we're using. So we draw these modified Bollinger Bands, and what we're looking at in terms of a market signal is if the market moves outside of the plus or minus 4 standard deviation band. If it does do that, then we get a signal when it moves back inside. I'll show you an example in a minute. We've had some major gains in this index, or this indicator, over the years. In fact, it's one of our best indicators, but we also had a lot of false signals. So we created what we call Macmillan volatility bands, which it's the same thing, but it just requires confirmation. So it's something on the order of a 2-day close, if you're familiar with that concept. And so here's the current S&P chart, just going back 1 year. And the top line on this chart is the, right here is the +4, where am I going? +4 standard deviation line is the top line right there. And the +3 standard deviation line is the one just inside it. So we get a signal when, for example, it moves outside the plus and then inside the 3. So that's your sell signal right there. We cover when it touches the -4 sigma band, if it does. Otherwise, we stop ourselves out if it goes to a new high. So that was a pretty good signal last September. This one is a little bit long and maturing, but eventually did produce a very small profit there. Then we had a signal that did not work in May. And by the way, on most of my charts, a red letter means the signal was successful, and a blue letter means it was not. And now we've just recently had another one, so that's in green because it's just open at this time. So we're operating on a sell signal from this indicator. This is sort of a longer term indicator. I wouldn't, buy a lot of short-term options based on this or anything. In fact, I might go out even a couple of months, and because it can take that kind of time to mature. But it normally does catch the tops and the bottoms quite well, just not exactly at the time they're occurring. So we have a service that's subscription for that, and we monitor Macmillan volatility bands on all stocks, ETFs, and futures, and the indices, I guess, too. And you get a daily email from us as if you're a subscriber to that service, showing you not only all the setups, but all the confirmed signals as well. So if you're interested in that, you can just go to our website and look it up. So let's move on to the next indicator that we use quite a bit, and that's put-call ratios. Put-call ratios were invented as an indicator by Marty Zweig back in the 1950s. And for our purposes, we use the equity-only put-call ratio. That means all stock options that trade. So we're ignoring, for the purposes of predicting S&P, let's say, we're ignoring futures options and index options. We're just looking at stock options, and I'll show more later why we do that. But the theory is this, and when Marty was first doing this, he was getting his data on option volume from the ads that ran in Barron's on Sunday. Each of the 6 or 8 put and call dealers at that time would run an ad and say, last week we traded 800 calls and 500 puts or whatever. So he'd add them up, and he started to notice that when there was a heavy put buying, the market went up after that. And when there was heavy call buying, the market went down. Now in those days, it was only equity options that traded, and they traded over the counter. It was a very clumsy market. But the theory is a contrary theory, and it did make some sense. So here's the standard ratio. We calculate this now. And of course, there's millions of options, stock options that trade every day. But let's say it's IBM. So at the end of the day with IBM, we sum up the volume of all the puts that traded. Separately, we sum up the volume of all the calls. We divide the two, and that's the put-call ratio. So since puts are in the numerator of the fraction, when when put buying is heavy, it makes the ratio go up. But when is put buying likely to be heavy? Well, that's when the stock is going down, right? So they move in opposite directions. Same thing with the calls. Calls are in the denominator. So as the denominator of a fraction increases, the fraction drops. So if there's heavy call buying, the ratio will go down. And when there most likely to be heavy call buying, well, that's when the stock is going up. So it's an inverse chart, and I'll show you a couple examples in a second. We keep a moving average. I use 21 days just in case there's something to Fibonacci, but you do need to use some moving average because the data is a little bit spiky. So here's, in theory, how it should look. The stock price on top and the put-call ratio on the bottom, and they're inverse to each other. So let's say the stock is falling here in theory, and as it's falling, people are buying puts and making money on the puts. You know, even in a contrary indicator, the public is right during the trend. It's they usually miss the end of the trend. So eventually the put call ratio will roll over. All the put buyers are satisfied or whatever, and we make a local maximum on the put call ratio chart. That's a buy signal for the stock. So when we make the local maximum on the put call ratio, that's a buy signal for the stock. Then the stock starts to go up. So now as the stock is going up, I'm moving over the left side here now. People are buying calls, are forcing the ratio lower. Eventually the ratio gets down to a low level. The call buyers kind of run out of gas, and we get a local minimum on the put call ratio chart. That is a sell signal for the stock. So that's the basic theory. If you're looking at a put call ratio chart and you don't see this inverse symmetry, then I would not use the indicator on that chart. We'll move on to the next chart, because sometimes arbitrage, takeover bids, secondaries, things like that can cause a distortion, at least in the short term. So you're looking for this inverse symmetry to exist. Now this chart is not current, but on top is the S&P 500 index, and on the bottom is all stock options that trade, the equity only put call ratio. So you can see the inverse symmetry that exists here most of the time, and that's why we use the equity only put call ratio to predict the S&P. So here's the current chart of what we call the standard ratio. What I just showed you there was standard. We're only concerned with the volume of the options that trade. And so like a local maximum is a buy signal, and of course the March of 2020 was back in here somewhere, but we had a very good buy signal, which really lasted all the way into September when we finally got a local minimum. Market sold off a bit there. Now we've had wiggling back and forth since then. We got very low on the put call ratio here in February of this year. It was the lowest in 21 years, which is a long time for the put call ratio. Usually that's not the case at all. Anyway, the most recent signal we had was a local minimum, which was a sell signal back here right around the 1st of July. Now the market did react a little bit, but now it's kind of recovered. But this is the first of what I'm going to be showing you, several internal indicators that are negative, somewhat bearish, even though the market is going up. And it is creating a negative divergence of sorts. That doesn't always have to end in disaster, but often it does. So this is the standard equity only put call ratio. It's formed a local minimum and it's rising. That means it's on a sell signal, and it will continue to be on this sell signal until eventually comes up here and makes a local maximum for a buy signal somewhere down the line. You might wonder, how do we decide on these little moves like that? Is it really going to be a local minimum or not? We have computer analysis programs that look at these as like a chess tree, and it can look at up to 10 days. And it's pretty accurate. So not only is that on a sell signal, but the computer is saying it's not any danger of reversing on the short term. Now, as we got more computer involvement, we were able to compute another put call ratio, the one we call the weighted put call ratio, or the dollar weighted put call ratio. And in this case, we're going to take into consideration not only the volume of the options that trade, but the price people are paying for those options. So what we do at the end of the day is we calculate what I call this dollar volume, we take the option's closing price and multiply it by the volume that it traded that day. Now, that's not exactly, you could do this on a tick-by-tick basis. That's an expensive data set. Ties up a lot of computing power, and we found that it didn't produce any better results than doing it this way, using closing price and closing volume. Anyway, so we do that calculation for every option, then we sum them up for all the puts, separately sum them up for all the calls. Again, let's say it's on IBM, divide the two, and that's the put call ratio. Now we're measuring the dollars being spent on bearish opinion versus the dollars being spent on bullish opinion. Interestingly enough, the timing of the signals is about the same, but the extreme of the ratio can be quite a bit different. So again, this ratio reached its highest back in March of 2020. It wasn't actually the highest; it was an extreme high, but it had actually been higher back in the financial crisis of 2008. Anyway, from that height in March of 2020 to by September of 2020, it had now fallen to the lowest that it had been since 2004. And you can see the signals back and forth. And this one too formed a kind of grudging local minimum here. Eventually did give a sell signal here on the first week of July. Now you can see that this one is not exactly roaring upwards like the standard ratio was, but I said we have these computer programs that analyze the charts, and they're still saying this is on a sell signal. The computer program, for example, knows what's coming off the 21-day moving average. It can make an estimate of what's coming on, and that helps it make that decision. So it just wiggled up there a little bit yesterday after going sideways for about a week, and I won't have an update on this until later tonight. But that is still on a sell signal as well. So historically, these have been very strong signals. They have a good track record, and these new sell signals registered at the end of June are not really making any money yet, but they're still in place. And as you'll see going forward here, there's a number of other internal indicators. Now, why do I say this is an internal indicator? Because this is measuring the stock option activity across thousands of stocks. There's about 6,000 stocks now that have listed options. Not just the S&P 500 or not just the FANG stocks or something like that, but across everything. So these indicators that are measuring the broad market are not nearly as positive as, let's say, the S&P chart is. So what do we buy when we get one of these signals? So when I'm in the business of trading here, I'm in the business of predicting where the underlying is going. So in these cases, we have sell signals or buy signals. So I want to buy an option that's going to reflect my opinion of the underlying. Now, let's say it's a buy signal, and so we're talking about buying a call option. The delta of a call option ranges between 0 and 1. 0 means that if the stock moves up, this option doesn't move up at all. So it's way out of the money, and it's probably going to expire worthless. On the other hand, 1 means that it behaves just like stock, so it's way in the money. So we're more or less going to buy something in between. But basically, the higher the delta of the call, the more that call option behaves like stock. And that's what we're really looking for here is, since we're predicting the underlying, we want the call to do the same. I don't want to buy a call and be right on the underlying and lose money on the call because I bought it too far out of the money. Now, if the call's delta is very low, then you have a deeply out of the money call, and you're really shooting for a lottery ticket, not a solid trading methodology. So what we do is, if we're talking about a short term, and to me short term is maybe an option that has a month or less to go, then I'll buy a slightly in the money option with a delta of 0.70 or higher. If I'm looking out farther than that, maybe 3 to 6 months, which I call intermediate term, some of our put call ratio buy signals, for example, fall into that category, then I'll buy an at the money option. It still has a pretty high delta, 0.55, but now with that delta, I'm balancing the risk of a longer holding period and therefore a more expensive option, but still trying to get some response out of it when it moves. Now, if you watch TV, you see just about every spread, every option trade these guys do is a spread. In reality, no one trades options like that. It's not only silly, but it's really wrong because you're cutting off your profit potential. So if you buy a bull spread, in other words, you buy a call at this lower strike, and then you sell a call up here at this higher strike. Well, it looks like you've taken in some money and you've lowered your risk and whatever, but that call you sold caps off the profits. And if the stock continues to go up, you're left with, just a limited gain. So I don't want to cut off the profit potential, except in certain situations, extreme situations, and that would be if implied volatility is very high. So even then, it's not necessarily the best thing to spread. I mean, implied volatility was very, very high in February and March of 2020 when the market was collapsing, and yet any bear spread you would have bought was suboptimal because the market fell so fast it just fell right through your short strike. So when you have these bear spreads or bull spreads on, you don't want the market going through your short strike because that means you're capping off your profits. So what they'll often say, well, you're risking less. Well, you're not. You're risking 100%, whether you buy a call or a bull spread. You're risking 100% of your capital investment. So that's silly to say you're risking less. Yes, dollars is less. Fine, if you can adjust the dollars just by doing different quantities. But to say the risk is lowered is not true at all. So things you can do, though, if you want to use a spread, first of all, the more volatile the situation, spread your strikes apart. So right now, if you're buying, let's say, SPY spreads, late August expiration or early September, then you probably want to have your calls strikes at least 11 to 13 points apart, maybe even 15. But your put strikes even farther because in S&P or SPY, there's a negative skew to the options. So that will help right away because if you put on the call spread today and then the SPY moves up 13 points, your spread is going to expand some. You are still going to cut off your upside. But then what you can do is if you get to the short strike, roll the position. So like say today, you started out in a 440, let's say 455 spread, you're buying this one, selling this one, and then S&P rises and gets up to 455, then sell that spread, take a profit, and if you still want to stay in spread, then do a new one, 455 to 470, say, or something like that. So you can roll when you hit the short strike. Those things will help mitigate the fact that you're cutting off your profit potential. But in reality, this whole thing of the spreading is only apropos if underlying volatility is high. If underlying volatility is low, do not spread. So I'm going to show you some individual put call ratio charts. These are ones I just opened up our data last night and took these out fresh. So these are not, except for maybe one or two ones that we've recommended in our newsletter yet. Now this one we do have a recommendation in our daily, the option strategist newsletter. So there's a slight difference that in our approach when we're talking about individual stocks or put call ratios, put call ratios on individual stocks, futures, or ETFs or what have you. You see, here's a local maximum. That would normally be a buy signal, but you can see that it's been higher many other times. It's higher there, it's higher there, it's higher there. So in reality, if we look back over the previous 600 days, I want to see that this is an extreme reading or I'm not taking the signal. So even though that would have been a buy signal, it wouldn't have been a bad one. I mean, the market went up after that. We don't take those. We only take these extreme ones where looking back over the previous 600 days, the put call ratio is in the 90th percentile for buy signals and then down here in the 10th percentile or lower for sell signals. So that would have been a decent buy signal. And then this one here was high enough. It wasn't higher than that ratio, but it was still in the 90th percentile. So that was a decent buy signal. And now we've just got another one at a higher level than that one, but not as high as during the crash, but still in the 90th percentile. And so what we did here, I look at the chart and I see all that resistance there at 130. The chart is not scaled here, but I'm just telling you that's 130. January apart. So we have the put call ratio buy signal, but we're not actually going to buy anything unless GPC can break out over 130. So it hasn't done that yet. In fact, it was down today. So if it doesn't break through 130, then fine, we won't buy anything. But if it does, we've got the buy signal and the breakout. This is another one, SPG, S&P Global. It's been just a monster stock. I'm not exactly 100% sure why, but you can see this had a couple of sell signals that didn't work out too well. The first one didn't work at all. The second one, I guess, you might consider that working out. However, these options are fairly expensive. So if you were trying to buy a put all along that way and hold it that long, you probably lost money anyways. Anyway, this buy signal was good. And now we've gotten all the way down here, formed a local minimum, and actually kind of just moved sideways. And it looks like we're actually forming maybe a second little minimum there. And so that's a sell signal. But I don't want to sell anything or buy puts until it breaks this support area right there at 409. So again, it hadn't done that yet. But today's down to 411, and it's a $400 stock. So could easily drop through 409 tomorrow. Here's another one, Dexcom has a series of 3 good buy signals there. Now it's given a sell signal. And from a really low level, the previous sell signals from this level, though, back here really didn't work out too well. I can't really tell where that one started, but wasn't a great one. But anyway, we're down at 35 here. That means $35 are being spent on puts for every $100 being spent on calls. This is a weighted ratio. So again, a sell signal, but if you look, there had been resistance at about 434, 435. It broke through, tested it once, and now it's sitting above it. So I don't want to short this stock or buy puts on it unless it breaks that resistance there at 434. Similar, Weyerhaeuser, it's been in a downtrend. This particular downtrend caused a lot of put buying. It actually got this all the way up here. This is the 100th percentile of previous 600 days put call rating. So that's an extreme amount of pessimism evident in the market. Now it rolled over, gave the buy signal. It's about to, looks like it's about to break through that downtrend line. But again, I'm not buying it until it does. So today, the stock was off just a little, so it still hasn't broken through that trend line. Another one, DH Horton, same sort of thing. The only thing that's a little bit interesting out of the ordinary here is this decline was fairly mild, but it caused the put call ratio to explode, again, to the point where this is the 100th percentile. It's way above what previously all of these had been in the 90th percentile or higher. Now it's in the 100th percentile, and it's actually moved up and gotten just above this little area right there. So this one is probably one of the better ones in this lot, but again, was down today. So we're not buying that, at least officially not yet. Now you can do the same thing with futures, and you calculate the put call ratio here with futures options, not stock options, but you can trade it with, ETFs. So this is gold, and I'm just showing you this buy signal actually came back there around the 1st of April. It worked out pretty well. Gold went up quite a bit after that. But you don't have to buy gold futures options to trade it with. You can buy GLD options, which is an ETF that tracks the price of gold. So a lot of times with the futures, there's an accompanying ETF that trades that measures the same sort of thing. Not every future, but most of them. All right, let's move on to the third area, and that is market breadth. So breadth is simply how many stocks advanced minus how many stocks declined on the day, and we keep a cumulative total. We can also keep an oscillator. The way we define an oscillator is this. Today's oscillator value is determined as 90% of yesterday's oscillator value plus 10% of the difference between today's advances and declines. Now, everybody knows that, you have New York Stock Exchange data, and they've got advances and declines, and It's published all over the place, and that's easy to get at. However, the New York Stock Exchange also trades a lot of things that aren't stocks, but they count them in their advanced decline data. So there's convertible preferreds, there's some ETFs, there's a lot of interest rate related things, and it's sort of a distorted number. So years ago, we were looking for a good stocks only advanced decline line data set. And the New York Stock Exchange does publish something called operating companies only data. But we figured, oh, wait a minute, we've got the best set of stocks here that's going, and that's all optionable stocks, because not only are they, pretty active stocks, but they've got options on them. So there's people interested in trading them. So this is an oscillator based on the stocks only data. And this goes back to, you can see here, 2013. So the oscillator is oversold by my definition if it falls below minus 400, and is overbought if it gets above plus 200. But remember, overbought does not mean sell, and oversold does not mean buy. So here's the two most oversold periods in history. They were almost identical. This was that December of 2018, the day before Christmas. And then, of course, this was last March of 2020. But we didn't really buy till here, till it stopped being oversold, or here. And you can see once it stopped being oversold, it got really overbought and stayed overbought for a long time. That time, more so than this one. This is a little wider. But, so we're not buying in until, say, maybe here. But there's plenty of uptrend left at that point. And we've gone back and forth, whatever number of signals. Anyways, because of this internal market problem that's going on, declines have been leading advances on many days, even days when the S&P has been making new all-time highs. It's a really pretty distorted thing. Now today, might have been the breaking of that trend a little bit because the market was down and advances actually outnumbered declines. But up until recently, that's certainly not been the case. And so we got a pretty solid oversold reading last week when the market dropped on Monday, and we had that big 100-point down day. Didn't finish down 100. And so came out of there, and last Wednesday, it stopped being oversold, and we got a buy signal. So this breadth oscillator went to a buy signal last Wednesday. Now, it only had moved up to here. And again, I said today, breadth is positive, so maybe it moves up to there. But typically, when the S&P is making new all-time highs, the breadth oscillators are overbought. They're in that red territory. The fact that this is not is really pretty eye-opening. And it shows that breadth has just not been keeping pace with the S&P. But in any case, we are on buy signals. Technically, I mean, as a technician, I've learned not to try to outguess my signals. They are what they are. So these are buy signals as of July 21st, and they're very short term. These can flip in a minute. And as a result, you can have some whipsaw losses, but it usually will get you on the right side of big moves too. Cumulative breadth, however, is a little bit different. So cumulative breadth means we take, again, the daily advances minus declines, and we just keep adding that total up going forward, just forever and forever. So cumulative breadth and cumulative volume breadth is where we take the volume of advancing issues minus the volume of declining issues, a similar thing. And these indicators made new all-time highs on 10 of 13 trading days from May 26th to June 11th. So right then, they were riding right along with S&P. Everything was good, but that is not predictive, and I'm not going to go into long explanation now. But what we do look for is a potential negative divergence, which is now in play, because this set of indicators, cumulative breadth, has not made a new all-time high since June 11th. However, S&P has had 13 days with new all-time high since then. So that is a definite negative divergence. And again, it's a warning sign. It's not a sell signal. What it is, it's a warning sign to not ignore sell signals. But sometimes these are going to last for a long time. I mean, I don't know how long you've been trading, But in 1994, almost the entire year, you had this negative divergence, and then S&P really never did correct all that much on the downside. Other times, it leads to bear markets. So all I can say is we're paying attention to our sell signals that might occur, but this in itself is not a sell signal. It's just an extreme alert to pay attention and not get complacent thinking, oh, well, my stocks just are going up, so I'm not going to worry about it. Now, this is just a kind of summary of a couple of statements. I'm going to show you some charts that that are going to go with us. So the oscillators are weak, but they're on buy signal. By weak, I mean they're not in overbought territory as we would expect. And there's an old saying that when the generals are out in front of the army, that's not good. That used to mean Dow Jones had General Motors, General Electric, General Dynamics, things like that. And yet now, you know, we really don't have those as the leaders of the market, but the old saying still persists. But here's three charts. So we know the S&P just made a new all-time high, and on the upper left there's QQQ, the NASDAQ 100, and it's making a new all-time high as well. Its chart is equally strong with S&P. On the upper right is the Dow, and while it's not as strong as those others, it too made a new all-time high. It's just, you can see these are roaring away. This one is kind of struggling to stay there. And then here's more your average stock, the Russell 2000, 2000 relatively small cap stocks. You can see this made its all-time high back here in March. And then it had an 8% decline from the end of June through that big down day last week on July 19th. 8% decline while S&P is making new all-time highs. That's a negative divergence. This is what's happening that's making breadth pools and making put-call ratios go up, that sort of thing. Now, we did get a McMillan volatility band buy signal. That's what this green B is. You can see we came below the -4 sigma right there and went inside the -3 sigma right there. So this went on a buy signal, but you can see it's still struggling. It's not even back to its declining 20-day moving average there yet. So this is visual evidence of the inner turmoil going on in the market. There's another place that's sort of happening as well, and that's with new highs versus new lows. In stocks only data and in NASDAQ data, new lows have been outnumbering new highs recently, but not with New York Stock Exchange data. If that one capitulates, that would be another sell signal as well. Anyway, moving on to the last market indicator category, it's volatility. And volatility is much more positive, much for the outlook on the stock market. So those internals are there, but they're not affecting VIX. And VIX is related to the implied volatility of the S&P 500 options and not the general broad stock market. In any case, the trend of VIX is important. It should be trending opposite to the market direction. And then secondly, any spike peaks on the VIX chart are buy signals for the stock market. So this hasn't been the case for quite a while, but if VIX gets low, and by low I mean let's say less than 14, 12, something like that, you get down to 10 in 2017. That's overbought, but again, overbought does not mean sell. If you get down to that level, you often hear people say, oh, VIX is too low, you got to start lightening up. Well, it's okay to stay long as VIX is low. It's when it starts to rise that you need to take action. In any case, here's the current VIX chart going back 1 year. And all those B's on there are these VIX spike peak buy signals that have occurred in the last year. Again, red means successful. Blue means unsuccessful, although you can see the last two blue ones were quickly followed by a successful signal. And then, well, actually 2 out of 3. And then we just had one last week on July, I think, 22nd, 21st. So we're on a buy signal right now. Now here's the 200-day moving average of VIX and the 20-day. It's a danger sign when the 20 crosses over the 200. You can see that has not happened on this entire chart. The last time the 20 went above the 200 was in February of 2020, right before the market broke. So it was a good sell signal. That would be a good sell signal again someday, but it's not anywhere close to happening right now. So this is generally bullish. We're on this buy signal from July 20th. And in fact, we've been on a spike peak buy signal every day since May 21st, except for 2 days. We were stopped out and then got right back in again the next day. So VIX has been very positive for the stock market, and its trend is downwards as long as that crossover doesn't happen. So, things are moving. VIX is itself kind of moving sideways right now, but the moving averages are moving down. And so, that's still a downward trend in VIX is bullish for stocks. So a reversal would take place and would cancel out that buy signal. The VIX rose above 2020 today. It did not close at 1831. So again, that buy signal is still intact. One thing that people have sometimes mentioned is, why has VIX stayed so high in this recovery? Because usually when VIX goes on and makes new all-time highs and keeps making them for like a year, like has been the case, VIX will start to fall, and then that's when it gets down to 14, 12, 10, whatever. So the fact that it's stubbornly holding at 16 or higher is a little bit surprising, but it hasn't really hurt anything so far in terms of the bull market. And the fact that it's doing that has kind of made a lot of opportunities for option traders that might not ordinarily exist if options were just completely cheap. In any case, there are derivative products that trade on VIX. You can't trade VIX itself. It's a very complicated thing. But there are futures and options on VIX. So we can look at what's called the futures construct, which is makes use of the futures market. So typically in a bull market, VIX will be trading at some price like this. Then the first month future will be trading at a higher price, and the second month at a higher price than that, and the third price. And so the term structure of these futures slopes upwards, and they're all trading at higher prices than VIX. That's bullish. So that happens to be the case right now, and that's the case most of the time in the history of the markets. However, it's bearish when the opposite occurs. So if the front month, which is now August, suddenly starts trading at a higher price than the second month, that's a major sell signal. But during the decline last year, you had VIX was high, then the front month futures were here, the second month here, third month here, and the term structure sloped downwards. That situation is bearish. We don't have that right now. So here's the current setup. This was actually last night's closing prices, and VIX closed at 1758. And that was as of and that was actually 2 nights ago. I'm sorry. And the front month futures were 2071, and so that's a premium of 313. 2071 minus 1758, 313. You can see that these futures prices keep going up as we go on in time. They're going to flatten out there a little bit, but the term structure therefore is rising as we go out through February, and these are all trading at fairly large premiums. Now, sometimes you'll hear somebody say something silly like, well, they're expecting the volatility to increase by January to be equal to the futures being at 24. And that's not what this means at all. It's strictly a function of where average long-term volatility is in relationship to each of these months. So the term structure slopes upwards, and they're all trading at a premium. That's a bullish setup for stocks. Now, if you don't have access to the VIX futures prices, and the CBOE futures exchange, which is where they trade, has made it a little more difficult to get those, you can look at these indices. The CBOE publishes 5 volatility indices, not just VIX. So VIX is a 30-day. There's also a 9-day, a 3-month, a 6-month, and a 1 year. If we look at their prices, you can see that they too slope upwards as we go on in time. Again, an upward sloping term structure is positive, and so that's bullish for the stock market as well. So just to conclude there, the the term structure and the premium levels are bullish for stocks. What we'd want to watch, though, and what we always are looking for, is for the front month vis-a-vis the second month. You can see right now the front month is trading below the second month, and so that's bullish and everything is fine. But if they invert, let's say by more than a couple of pennies or something, that can be a major sell signal. And the whole decline in the early part of 2018 was quickly signaled by that, actually previewed by that. And then last year in 2020, when the market dropped, that huge drop, this inverted in the first day of the decline. So if that inverts, it's really time to take defensive action, strong defensive action. So just to summarize all these indicators, if we can. So S&P, the chart is bullish, and it will be as long as it remains above support at 42.33. The put-call ratios are on sell signals. We saw they're rising as put buying continues in the broad number of stocks. The breadth oscillators are on buy signals, but they're weak because have not moved up into overbought territory. The VIX is spike peak buy signals in place, and the trend of VIX is bullish, so that's a bullish indicator. And the term structure of the construct, that's also bullish. So we put all this together, we're remaining bullish as long as S&P is above support. I will trade these other indicators around it. You know, we said we had an MVB sell signal here, and I'm actually going to show you another one right here. We call it a realized volatility sell signal. We calculate the 20-day historical volatility of the S&P 500. If it falls below 8%, that's an overbought condition. That happened in the middle of June this year. And then a sell signal takes place when it rises above 11%, which it just did last week. So this is the year before. This is 2019 and 2020. Here's your historical volatility up here. This is the 10 line. So you can see it fell below 8 and then went above the 11 there, and same thing there. Again, caught some of these trades here. Well, here's the big one. It actually gave that sell signal before the market really broke big in March of 2020. Then you had another one there. This is continuing on the next chart. So this is just in the last year. That's that continued one. Didn't do much. This one didn't do much either. Now we have a third one. So this has just occurred. And with the market hopping back and forth like it has, in others, we've had these big down days followed by quick recoveries. You can see the realized volatility has gained quite a bit in the S&P 500 in the last month or so. So that's a sell signal. Again, not one of those that has perfect timing, but one that you shouldn't ignore due to these market negative divergences. So you might say, well, is there a safe downside strategy? I mean, what can we do? I don't want to just keep wasting money on puts. So if you're looking for a big downside break, this is a strategy that you should probably have in your arsenal, because it makes good money on a large decline. It has basically no loss if the market rises, and it has a small loss on small declines. So let's look at it this way. It's what we call a back spread, and what we do is we buy it 2 months out. So right now we're coming towards the end of July, but we just so when we get, let's say, into August, you can start setting up this spread. You buy 2 months out. You buy in October 415 put, for example, and you sell in October 390 put. So you're buying 2, selling 1. These are puts, and you do the trade for even money. So if the market goes straight up, all the puts expire worthless. You don't lose anything. If the market collapses, you're long 2 puts and you're only short 1, so you can make a lot of money here on the downside. Where's your problem? The problem is, like right in here, if it drops before expiration into the neighborhood, let's say right around 390 or so, you're going to have a problem, a small loss. But we're going to roll the whole thing at September. We're not going to hold it all the way to October. If we held it all the way to October, we could have a big loss like that. But in September, we're just going to have a small loss if that happens. And we're going to, at September expiration, take this one off and put on a new one in November. And again, taking that off in, you know, 1 month out, et cetera, et cetera. So eventually, if the market breaks big, you'll make a lot of money. And you know, most of the time, if the market continues to go up, you're not really costing yourself anything at all. So this is a strategy that's it ties up a little capital because you have to put up the difference between the strikes as collateral, $2,500 there. But that's it. And so if you have equity in your account, you want to put some of these on, even as a hedge against your stock portfolio against a really nasty market break, you could do that. So I mentioned I was going to come back to our offer. We had recorded this 14 seminar set, and they're quite long. They're not just like 45 minutes. Some of them are a couple hours, and they cover I believe it's 5 intermediate subjects, 5 beginner subjects, and 4 advanced subjects. And so we're offering this for 50% off at optionstrategist.com/MetaStock. If you go there, it should put you right into the queue to get the discount. If somehow or other it asks you for a coupon code, that's the coupon code. And by the way, regardless, we will be sending you a PDF of this webinar. And I think Jeff is recording it as well. So I mentioned last year, in addition to that offer, if you go there, you can wander around our website, take a look at some of the other things. So the Option Strategist newsletter, we've been publishing for 30 years. We just had our best year ever last year. It made a ridiculous amount of money in theoretical positions, even if you didn't take them all. We had, during the crash, a number of volatility-based positions that made $10,000, $15,000 a piece for a very small investment. The daily strategist is the same thing, except it comes out every day and costs more. And then daily volume alerts is something I write where we look for unusual option volume. Remember, though, that past performance is no guarantee of future results. And so this year we're not having a year that's anywhere near that good, but who knows? The year's not over yet. We have a YouTube channel. I invite you to subscribe to that. That's free. I record a YouTube market comment every Monday morning. And we have 2 new newsletters. One is we call it Special Situation Alerts. It's somewhat based on earnings, but based on a number of factors. It's gotten off to a great start. And then for those of you who prefer just some high probability daily put selling, that sort of thing, we have a letter for that as well. Sorry. Oops. Jumped ahead there. Must have hit end. So again, just to solidify, this is the URL to go to get those offers. That's the coupon code. If you're interested in our money management, we have a slightly different website for that, McMillanAsset.com, and you're welcome to go there as well. Now we're going to post the PDF of this, and I'm going to just kind of jump through some of this quickly, but there's been a lot of short squeezes recently, and there've been throughout history always been short squeezes. And what happens is that the stock will go up, and then typically all the fundamental people say, well, it can't be there, it's just going to go right back down. Well, it might go back down, but it doesn't go back to where it started from, at least not for quite a while. So here's GME, for example. This is what happened in January, and it came out of this level. It did come back into the 50s. Each bar here you can see on the scale on the right is about 64 points. Then it got overbought again, came back, and even did it a 3rd time, and now it's come down off of that. You can see implied volatility has now finally come down to its lowest level since things started back in the beginning. So maybe this one is winding down. This is Riot Blockchain. Actually, Riot had a short squeeze on the day that it came public about 4 years ago, but it had another one this year, and you can see it's come back down, but not to where it started from. And even if you count this as where it started from, it still took 3 months to get back to that level. So opportunities open up when these things happen, and you can take advantage of. This is AMC, of course, the most recent one. There was a smaller short squeeze in AMC in the beginning of the year, and now the big one recently, which is still going on. So, that one blasted off from here. Everybody says, the theater chain is a joke. They don't have any real way of making money. Fine, whatever. Who cares? Stock is still trading here, and it's nowhere near where it blasted off from. And implied volatility here is still very high. So what can you do in these situations? Well, first of all, when it first happens, you can even buy the options. Try to ride along with the wave, as long as implied volatility is about equal to realized volatility. If implied volatility starts to rise well above realized volatility, then don't buy options anymore. Go for one of these other strategies. Now, we said it will come back down, but not all the way back down. So what you can do to set up a bear spread, these options are very expensive, so debit spreads would make sense. You buy a fairly high strike, not all the way at the highs, because those are really expensive. You buy a fairly high strike and then sell a strike, deeply below that out of the money. We just tried that with GME on the most recent rise, and I had the strike set at 180, which wasn't too bad, but my expiration date wasn't a great pick, so it kind of came down to that level, but a week too late. Then you could also do this when it goes up initially. Start selling puts down at near the original breakout price. So, AMC, was trading wherever, somewhere in the teens, and then it broke out, went crazy. You could sell puts down in the teens, or even sell put spreads, because that will allow. We don't expect the stock to drop all the way back down there in the short term. So these would be like 1 or 2, 3 week options. So they're very expensive. So we did do that, and we made some decent money on those. And then finally, you could even do put calendars at a very low strike, thinking that the sale on the put calendar will expire worthless, and then eventually it will come down. That's a less certain strategy. Anyways, Jeff, I'm done, and I'm going to turn it back to you.
Okay, thank you, Larry. One comment for you. We did have a lot of questions, but Raphael says, thank you 1 million times. So you're welcome.
Okay, you're welcome.
Thanks for coming on. Yeah. Let me go ahead and kind of get everything switched back over. We do appreciate all of the great speakers. I do think I agree with you. It's been a great day. So let me go ahead. I'm just going to change the presentation back to me real quick. Change presenter, me. Okay. I'm glad you're enjoying the day too, Raphael. Thanks for coming. In terms of, we'll talk about the Trader Summit Action Pack again. You can get Barry Burns' Top-Down Trader, Rick Sadler's Patterns for Profit, the OVI, the Fulgent Chart Pattern Engine, 3 months of Learn MetaStock, and Unleash the Power of MetaStock, and 2 years of Stocks and Commodities. Normally that would be $3,831. Here at the show, it's $1,999. So you can take advantage of that at 800-882-3040 or metastock.com/sales-chat. It's a great collection of a great number of add-ons. So I'm glad you guys are enjoying today. I think it's going well. So if you just want to get MetaStock, you can get MetaStock. We do offer a extended trial where you can pay for 1 month and get the second and third month for free. It's a great way to evaluate the software that's been rated #1 in its price category for 27 years in a row. And you can do that by giving us a call as well, 800-882-3040. Or metastock.com/sales-chat. So one last shout out to Stocks and Commodities for being great sponsors of the event. They've been sponsors for a number of years, and we appreciate all the work they've done with this. Thank you. All right. So moving on with that, our final speaker, our encore speaker, maybe not our keynote. Our final speaker of the day is Hema Reddy. Hema has been a presenter of MetaStock for a number of times now. She always does a really, really good job, and we're always happy to have her and I want to welcome her back to MetaStock and the Online Trader Summit. So, Hema, thank you for coming today.
Hey, Jeff. Good to see you. Can you hear me all right?
I can hear you. You sound great. I'm going to send the you have a really good audio setup and a very nice voice for it, I think.
Oh, thank you. So good. I'm glad to see that's still the case because yes, I have been here a few times now, and it's always a great event for me too. So let me go ahead and show my screens. I think I have to pick a certain screen. Am I showing my main slide deck?
Yep, we can see it.
You can see it. Okay. Great. Oh, yeah, I think because I lost the little preview window. So awesome. Well, let's see. Who do we have left at the end of the day here coming in with my anchor presentation? So if I'm going to be able to participate or kind of chat with folks in the room, Jeff, is it through the chat or the questions box?
So if customers ask questions, it will be
I see the questions box. Okay, awesome. So everyone's
also, we
here.
have some people coming in through YouTube. I don't know if you've got that loaded up, but
Okay.
if not, it's fine. I can pass them any questions.
Great.
They come.
Okay, well, I will take Q&A at the end because I like to kind of get through the main training. Any questions you have along the way are sometimes answered by what I'm presenting, and I will have time for Q&A, even the live market. So those of you who have stayed here all day or maybe coming in this afternoon, I will give you my take on the live markets, which during, summer earnings season, who wouldn't want to do that, right? So I just want to see if everybody who's here, if you could just type a Y for me in the chat that you are ready to dive into not your mama's momentum, how to profit in any market in any time frame. And that way I can see you guys. That's always fun for me. And if I can't, well, then I'll just take Jeff's word for it. All right. Let me see here if I'm getting any response back. Okay, looks like we're in good shape. So let's go ahead and dive in. Also, love to know where you guys are trading from. You can do it from anywhere in the country, anywhere around the world, right? It's always a fantastic thing. All right, awesome. So let's dive in with how to trade momentum, get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there, including MetaStock? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? How many of you want to get as much as possible out of our time together? I want that for you too. For most of you here with me today, this is going to be a long-term relationship once I show you how simple this is. Once I show you how easy it is to consistently extract money from the markets. Once I show you how fast your business and life can grow. You'll want to hang out with me for a lifetime. In a moment, you're about to discover how to make money with futures, stocks, and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? All right, awesome. I promise that by the end of our time today, you'll know everything you need to know to pick the best trade, when to enter and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? Great, because here's the problem. Many traders are making it way too complicated. Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. As you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you well know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results are up to you. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you. I don't know your trading plan, account size, or markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? If you haven't been following me for a while, here's a mercifully short introduction. So I'm Hema Reddy, and I'm originally from New York, the hotbed of the markets. And I started out at age 16 learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stocks right at the beginning. Then I became a certified CMT working as an analyst at Piper Jaffray before going on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders. And I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methods of W.D. Gann. So how did I get here? Well, that's quite a story. It's okay if I take a few minutes and tell you my story? It'll go by like that. Okay, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great. All right, I was in the center of the action as an analyst with Piper Jaffray and making them a ton of money, starting work at 5 a.m., working late, and burning out quickly. Anyone else a corporate cog making someone else rich? I know, right? I thought there must be more to life. You know, the money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. I'll never forget the moment the bottom dropped out of my world when my beloved dad and mentor died suddenly. And at first, it felt like my whole world was crashing in because I had to leave my job and tend to financial and legal family matters. But then I realized that this was my ray of light, my hope to get out of the corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets, I had started a futures report that I called my Skinny on the Mini. It started out as just another exercise, but soon my dad started making money with it and relying on my little report. And then I shared it with other traders too, and they were benefiting. But all that stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years, those traders were hounding me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny on the Mini and reclaim my life. So I sent out the call to my former subscribers and they said yes, they would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what, guys? Type it out for me. Freedom, right? Yes, and there's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. Clearly, that's what we all want, right? Freedom. Wouldn't that be awesome? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? They made it confusing and complicated because you don't have a simple proven system. Because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading future stocks and options. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. First, we're going to dive right in. So trading momentum can be easy, but first you need to understand how it works. And a Formula One car racing track will have you understanding momentum in no time. So let's put ourselves in the driver's seat, all right? We're in that hot little red car at the starting line. You guys see it? All right, cool. So you rev up your engine and you go. You pick up speed really quickly or accelerate on those straight runs. You see a turn coming up and you prepare accordingly. You ease off the gas to slow down or decelerate, even if it's just a little bit, so you can have more control as the car whips to the other side of the turn. Then after you make the turn and the road straightens out again, you hit the accelerator once more. Are you getting the idea of how you'd accelerate and decelerate on this track? Well, now you know exactly how price. Now, that helicopter up above, looking down on the racetrack, jump in there, all right? From the hot car to the hot helicopter. And now look down on the racetrack and get a bird's eye view of it, right? A little curve winding across the earth. So you see the racetrack becomes price as you see it on your stock charts. And momentum is generally plotted on the bottom as a subchart. Making sense? All right, so when price is trending higher, you've got upward momentum that's improving. That upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Now, during falling prices, there's falling momentum that's becoming a more and more powerful force. But when a price bottom is approaching, you usually see momentum bottom first. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. Making sense, guys? You getting this? All right, awesome. Now we're going to dive into the indicator, but first let me share with you results from our trading family. Hema, I value your insights. Your momentum indicator is an integral part of what I put together. I believe I'm ready to go from paper to live trading, said Jim. All right, now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. Or first, you guys want the Jedi secret? All right, great, because I'm going to let you peek behind the scenes of my trading and show you how momentum moves through the markets that you know using my special Jedi indicator. And that indicator is called RSI Power Zones. And you can use it on any market in any time frame. So take a look at this left-hand column here. Do you see a market that you trade? So indices can include the E-mini S&P, which is my baby, NASDAQ, Dow, and more. Stocks might include the FANG complex. Maybe you were paying attention to Facebook or earnings this afternoon or Apple yesterday. ETFs, I have a lot of coaching students that trade the SPY. Bonds, that could be your 30-year, 10-year, smaller. FX is currencies, right? And the commodities can include wheat and gold and so much more. So what market and time frame combination do you trade? Go ahead, type it in the chat, because it's important for you to see that this is addressed by the RSI Power Zones, so you know I'm speaking your language. For example, every day in the Skinny on the Mini, I cover E-mini S&P 500 futures, and I analyze them on intraday charts with my trading time frame as a 3 minutes. All right, how about you guys? All right, awesome. Now we're going to look at how the RSI Power Zones work on a variety of markets and time frames for you to get to know it and get comfortable with it. So we're going to go for 5 and 5. 5 types of markets, 5 different time frames, all right? So let's start by looking at how the RSI Power Zones work on a futures market that you ask me about all the time, oil. You guys ready? We're going to look at the big picture and drill down. It's a monthly chart of oil. So whether you trade oil or you just check it out at the gas tank, right? It's important to monitor. So we have these 4 zones on the RSI that I need you to be aware of. So what's the RSI? Maybe you're brand new to this. Well, it's that black squiggly line in the bottom. And the 4 zones are represented by the 4 pairs of colors. First, you have the bear support power zone represented by the 2 lower red lines. Then you have the bull support power zone with the 2 lower green lines. The bear resistance power zone with the 2 upper red lines. And the bull resistance power zone with the 2 upper green lines. Now we're going to look at all of these zones with the history of price action in oil, and we're going to look at what it's doing today, right now, July 28th, 2021. You guys ready? All right, awesome. So there was this run up in price that took us to these crazy new highs above $200 a barrel. Anybody remember that? It was crazy. And that strong advance higher was accompanied by the RSI power zones on oil rising from the bull support to the bull resistance. This was what was evident on the monthly time frame. From there, the market had a very sharp fall. Okay? It took out previous lows in price. And when it did this, the RSI power zones fell to the bear support power zone. Now, I was an analyst on Wall Street and watching and analyzing oil and many other markets. And I told folks, listen, I don't think this is going to be a one and done fall here. I think oil is going to be in trouble for some time. And it sure did end up that way. From there, the market had a very sharp fall. And it took out previous lows in price. And when it did this, the RSI power zones fell to the bear support power zone. Now, I was an analyst on Wall Street watching and analyzing oil and many other markets. And I said, look, I don't think this is a one and done fall. I think we're going to be in trouble for a while. And then it did end up that way. Oil went into this giant sideways range for years. And the thing is that every single high in price that formed after that peak in the consolidation was tied to the RSI power zones holding in the bear resistance power zone. So this was another clue as to the future direction of the breakout. Now, again, after falling to $100 a barrel, people thought there's no way it's going to fall lower. It's going to climb back up to 150, 180, right? It's not going to fall below this platform. Not so much. We had another drop, and it was still quite substantial, and both lows and price saw the RSI power zones push down into the bear support power zone and continue to pressure into there, making it easy to maintain the selling mentality instead of getting excited every time it gets to some random level called oversold. So from there, did we have a recovery? Absolutely. But even that recovery on its first leg higher, it capped at the bear resistance power zone. So where are we today? Here we are. Here's a snapshot of the latest oil action just captured today, Wednesday, July 28th, 2021. The gray vertical line marks where the last chart fell off. So do you see how oil futures traded lower back into the bear support power zone with the RSI going to those two lower red lines back at the start of 2020? Well, we've been recovering higher since, and oil is continuing to look promising. So this is the RSI power zones as applied to a commodity that we all watch on a monthly time frame because of the importance of its history. Can you see how looking at the RSI power zones on oil might have helped you better navigate trades in oil or markets related to it, guys? Type a Y if you see that. Okay, awesome. So I'm going to take this to another market you know, and then we're going to dive into the trade setups. Now let's look at this and another popular market and time frame, an ETF on a weekly chart. So here we got the 4 power zones again. And we have every candlestick now representing 1 week of price action. Now notice there was sideways action on the SPY for about 2 years. And then it broke higher above the dashed line and pulled back to where you see that yellow highlight. That pullback provided an opportunity to be ready to go long if and only if you're using the RSI power zone system. But not if you were just looking at the traditional approach to the RSI. You would have totally missed this. From there, we had a huge advance higher, and that whole advance saw the RSI continue to improve, ultimately reaching and extending beyond the bull resistance power zone. The movement from one green zone to the other helped you stay looking at the long side, looking at buying moves in the strong advance. Then there was this very sharp fall. And in 2 weeks, we took out the price action of the past 10 weeks. But all that happened on the RSI power zones is that it went from the bull resistance power zone down to the bull support power zone, basically relieving itself of overbought conditions, sort of a pause in the race. And when I was writing the skin in the mini at this time, and everyone was kind of freaked out by this price decline in the market, I said, hey guys, I think this is just a sign that we're going to go sideways for a few months before the uptrend resumes. And that is exactly what happened. There was a sideways range with tradable moves showing on a daily or intraday chart, all with the weekly chart of the SPY simply just unwinding overbought conditions. All right, guys, it's like a slinky, those toys that are coils that compress back before they expand again. From there, we had a break higher, and it coincided with the RSI power zones resuming higher once again. And these relationships between price and the RSI power zones are evident in a variety of markets and timeframes, which we're going to continue to see here today. So where is this all standing now with the SPY today? Here it is. Here's a chart I captured this morning, today, Wednesday, July 28th, of the SPY. So the gray vertical line here marks where the last chart left off. Lots has happened since then, right? Now, do you see how the SPY traded down into the bear support power zone? Follow my cursor here. Do you see that? And then how the price actions related to the zones from there? Okay, price was able to resume higher. We came and skimmed the bull resistance power zone. Price fell sharply with the COVID crash, came to the lower reaches of the bear support power zone, and has been trekking higher up towards the bull support power zone since. Okay, I'm going to talk to you about the setups that would highlight these moves for actual tradable opportunities in a moment. I want to know, can you see how looking at the RSI power zones on the SPY for the past few years might have helped you better navigate trades in the SPY or the markets related to it? Type a Y in the chat if you see that, guys. All right, awesome. And now we're going to dive into the trade setups. But first, let me share with you more results from our trading family. Susie shared, my first month using RSI power zones was also my best trading month so far. By now, you're getting it. So we're going to dive into my proprietary 3-step approach to using RSI power zones to find great trade setups. I'm going to show you actual setups that I use and share with my trading family. So here it is, using RSI power zones to identify trade setups. And you're going to want to write these down, all right? So step 1, review the chart and assess the price trend. Whoa, hold up, Hema. This whole time you've been talking about momentum, momentum, momentum. And now you're saying step 1 is price? Yes, because price is king. And price is the source of data from which the momentum indicator is even derived. And we'll benefit more from trading momentum if we're aware of the price trend. That's why this is step 1. So when you make this assessment, and I'll show you how in a moment, you'll have 3 choices you end up with: uptrend, downtrend, or sideways. And yes, sideways is a type of trend, because you can be prepared for the next directional move if you know how to monitor the momentum of the sideways action. All right, step 2, evaluate the RSI power zones reading. This is specifically looking at the RSI value relative to the 4 power zones. So each zone has a distinctive upper and lower border, and there are 4 total zones. This means there's some white space, some gaps in the RSI power zones, and it's important to know if the RSI is currently in a zone or moving in and out of a particular one, or if it's just hanging out in that dead space in between that I call no man's land. And we'll see that in our examples coming up. Step 3, determine the presence of an entry signal between price and momentum. And usually the best signal comes from when momentum and price are not connecting, they're not jiving together. That's usually an advantage, an opportunity that we can take advantage of for profit. All right, guys, so you've got your 3 steps using RSI power zones to identifying trade setups. And I'm going to repeat these steps so you're going to have them down pat by the end of our training. Now, the best way for you to learn is by using actual examples. And you know, something I really pride myself on is that I practice what I preach in the analysis that I share with you. Traders in the Hema Ready tribe get updates from me, and my members get even more detailed updates. And every single example we're going to look at here, I called it out to my members as it was happening. Okay, I didn't just have it tucked away in my back pocket and pull it out as a beautiful textbook example. Anybody can do that. I'm showing you actual calls I made at the time I made them. So I want you to type a Y in the chat so I know you see the value of what you're implementing here. All right, awesome. So now let's look at stocks on a daily chart. Here we've got a chart of Netflix. I get a lot of questions from my tribe about the FANG complex, including Netflix. So first step, review the chart and assess the price trend, right? So I'm looking about 6 months of price action on a daily chart. That's what I recommend to get your true long-term trend. And here you can see there was a high in price, okay, a peak in the price trend by lower action until we fell to this low, traded up to this high, yes, including the gap, corrected down to this low, traded up to this high, and this chart at this time was sitting at this potential low. So this was an uptrend with a corrective pullback in motion, right? Knowing that you're in the corrective part of a trend actually allows you to find lower risk opportunities to take advantage of the next potential move. Step 2, evaluate the RSI power zones reading. Well, this is where we're looking at where the RSI power zones is relative to the zones, right? Well, look at the black squiggly line. Where is it? Right, it's in the bull support power zone. So this was a helpful indication that this market had underlying positive momentum and wanted to continue higher. The key is in determining the presence of an entry signal between price and momentum, guys. And what was going on here was a really awesome disconnect between price and momentum. They weren't jiving together. That provided an opportunity that actually was measurable even. This is the price action that unfolded off of that bullish positive opportunity from the Netflix charts. And I'm going to show you the money here, okay? We had a low at 271.22 that went up to 423.21, producing a $151.99 advance, a 56% move higher. And I have a whole training that dives into RSI power zones for true mastery, and I'll show you the signal in module number 2, because I can't teach you everything you need to know within an hour. It would do you a disservice. It would shoot you in the retirement. Yeah, I said shoot you in the retirement, right? Money isn't just money. It's the blood, sweat, and tears that it took you to make it. And you can't afford to lose any of it. So I'm here to help you maximize it. And of course, I can't teach you everything that I've learned in 21 years in an hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you exactly what you've been missing, and then we can look at how I can teach you more in depth. Making sense? Are you guys getting this? All right, awesome. Because we're going to dive into another one of your favorites, but first I have to know that you're still with me here. Great. Now here's another stock on a daily chart, and this was Twitter. And this was really cool because I made this call live in front of students in monthly group coaching live, where I meet with my members every month and look at the markets together. So rinse and repeat. Step 1, review the chart and assess the price trend. Well, what do we have to check for? The highs and lows, right? Looking back about 6 months, we had this high in price, this low, higher high, higher low, higher high, and potentially higher low. So just think on it for a second. What would you say is the uptrend? Whoop, I gave it away. What would you say is the trend? Uptrend, downtrend, or sideways? Ah, so eager there. So yes, it's an uptrend. And a lot like that Netflix chart, this is with a corrective pullback in motion, right? It's a resting pause before the uptrend might resume. Evaluate the RSI power zones reading. Yes, very similar to the Netflix chart. This was holding in bull support. Now, again, I saw this set up live when I was with students in a review session and said, hey, you know what? We've got a setup here where we can calculate a target based off price and momentum. So on April 10th was the earliest that you'd be able to calculate the target of 39.13 to the upside, with price currently around $30, right? Well, here's what unfolded. This was the move that unfolded. Do you guys see how we rallied up into that target and actually extended beyond it? Off the 2660 low on April 4th, the target was met on June 5th, but price kept going higher from there. This calculation on RSI with price provides a minimum upside target, which is really cool because you are then positioned to stay in the trade even longer if it keeps going and squeeze out the most profit. So I have a whole training that dives into all 4 of the power zones, and I'll give you that signal in the system. I'm just showing you here what you didn't know that you didn't know. The trading can be simple when you follow the expert. Making sense? Are you guys getting this? Okay, awesome. Let's switch gears a little, and let's go to an FX chart. Still in a daily time frame, because I know a lot of my traders use that. So here we have a daily chart, and we do the same thing. Step 1, review the chart and assess the price trend. Here we have a high, a low, lower high, lower low, lower high, lower low, lower high, lower low. What is the trend? That's right. This is a series of lower highs and lower lows, so this is a downtrend in price and has no corrective bounce or rebound in motion. Great, awesome. Step 2, evaluate the RSI power zones reading. Where's the RSI power zones? This is a little bit of a different question in this scenario because it's not in one of the zones right now, right? It's in between. But what is it doing overall? Overall, it moved from the bear resistance power zone to the bear support power zone. So with repeated observation of the RSI power zones, you're going to start to learn when the zones are being respected and a price trend like downtrend is having a corresponding dominance of the bear resistance and bear support power zones, okay? Now from here, we determine the presence of an entry signal between price and momentum. And in this case, it was a setup suggesting that the downtrend would be over, which was an excellent warning sign because here's the move that unfolded. Ready? My setup with the RSI power zones based on the location within the zones warned you not to continue selling and to, in fact, to protect any profits on any short positions. And then here's what happened. So that was a hugely helpful guide. And I made this call to the tribe as it was happening. Now, if you're not used to trading currencies, you may not know the value of a move like this on the daily charts. Let me show you. This went from the 0.9186 low up to 1.0050. And when you do your FX math, guys, it's insane. Just trading one contract, that's an 8,600 plus move in size. Now, let me ask you, we're not here to pick the exact low and pick the exact top, right? That would be fun, but that's not what makes you money. How would you have liked to capture 50% of that move, $4,300? 60%? 80%. The great thing is, guys, that all of the techniques I teach layer in to show you how to not only capture the immediate RSI power zone setup, but the move that unfolds along the way. Because I'm a big proponent of trading with the trend, with the big wave, like a surfer, okay? Getting the most out of that move. So I'm very excited to be sharing this with you today because I'm really passionate about the work I do to provide traders with the best analysis and education to trade the markets, so you can take control of your financial freedom and live the life you and your family deserve. By now, you know that power zones on the RSI can really boost your trading, because whether you're new to studying momentum or you've been doing it for years, this approach can really help you extract more profits from the markets and be more consistent. And consistent profits is what it's all about, right? Making sense, guys? You want consistent profits? Yeah, that's what I thought. That's the results our trading family loves seeing too, like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you learn? Are you ready for more? All right, awesome. We are going to take this to the live markets, and I'm going to take your tickers that you would like to look out during the latter part of our time here. Before that, we want to make sure that you master RSI power zones. So far, you've heard about how I've come to really benefit from using the RSI power zones. Here's what more of my students have to say. I was very impressed with the education Hema provided that came with my indicator. Hema's RSI power zones indicator has become the standard on all of my charts, said Rob. Norman shared, a day after learning one of Hema's RSI power zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning on the market open, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So, will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. This system that can give you all this is a 4 zones RSI coverage system. Before I give you this opportunity, let me show you the features and benefits using this system will give you. Rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more, you can trade this. You pinpoint your trades faster, so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts because the 4 zones RSI coverage system gives you all this. But first, who's this not for? This is not for those who are trying to get rich quick. Like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this isn't for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. Since you're still sitting here with me, you're taking the time to learn to boost your trading. You're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. In my 4 zones RSI coverage system, I give you my 20 years experience on a silver platter, and it's 100% focused on step-by-step systems, instantly accessible starting with video tutorials, where I take you by the hand and I move you through the 8 phases of a trade. So you have a complete system to your approach so that you minimize mistakes. I give you my top RSI Power Zones trading setups from years of study and observation with various real-world examples across multiple markets and timeframes. I walk you through the best entries, exits, and protective stop strategies so you can extract the most profit from the market using RSI Power Zones, and much, much more. To make it even easier, you'll also have cheat sheets that you can download and print out and keep right by your trading desk. You know, this is like when I was back in middle school and high school. I remember sometimes in math or science, you'd learn something on Monday, have a pop quiz on Wednesday, and the teachers who were really on your side are the ones who say, hey, bring in a half-page cheat sheet, right? With formulas or definitions to help you ace the test. Because I want to help you ace your learning faster so you can take it to your trading faster. So these are easy to read grids and sheets like this, along with step-by-step trading strategies, all filled out, moving you faster on your path to boosting your trading account. Now, you're going to love this, all right? This is the very thing everyone's always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones indicator on a variety of platforms, including MetaStock. You can download the indicator for as many platforms as you like, to as many machines as you like, as many times as you like, forever. I've had many traders email in and offer me hundreds of dollars just for these indicators alone, and I'm giving them to you here as part of the complete system. Now, I've included everything to set you up for success. The only thing you could still possibly need is for me to take you by the hand personally and help you. Actually, would you like that? Would that help you if I hopped in the computer with you and showed you live how it's done and answered your questions right then and there on the spot? Really? Are you sure? All right then. I'm giving you everything, including me. Monthly group coaching for life. Once a month, I'll get together with you and me online personally, and we'll spend an hour together, and I'll personally walk you through the markets, doing analysis with open Q&A to help you become the better trader that you want to be. Now, you can see that I built in everything you need to boost your trading with the RSI Power Zones. But let's be real, guys, all right? It's 2021, and we all know the world has changed a lot just in the past year. And while the 4 Zones RSI coverage system is designed to teach you how to fish for RSI setups, when I give you the fish, it does aid your learning. So you're going to love this brand new bonus that I'm revealing for the first time today. Are you guys ready? So as a bonus, I'm giving you my new quick case studies. These are hot, timely, actionable updates on RSI Power Zones activity, highlighting trade setups I'm seeing instantly in multiple markets, hot off the press. These will be added to your portal, and you'll get an email notification with every update. So the 4 Zones RSI coverage system with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI Power Zones is valued at $1,997. The cheat sheets that you can use as a daily trading guide to learn the system faster and more easily is valued at $197. Monthly group coaching live, right? This is priceless, but if I had to put a price on it, this is easily $797 for just the first couple months, because I easily charge $500 an hour for my one-on-one coaching. But you get me for life. The RSI Power Zones indicator, available for the most popular trading platforms with free updates for life, guys, is valued at $497. Plus, you have the bonus of the quick case studies giving you hot, timely, actionable updates on RSI Power Zones activity across multiple markets. This brings the total value to $3,488 and is worth every penny. Now, let me ask you, if all the system did for you is help you trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of this system is $3,488 because I want to make an investment in your future. Because I want you to see a return on your investment fast. For a limited time, I'm making this system available for one low, easy investment of $297. And you can get started now by heading to hemaready.com/MetaStock. And I'll make it even easier for you. When you visit hemaready.com/MetaStock and invest in this system today, I'm going to give you all this because I really want to see you finally succeed in your trading. So I'm giving you our personal 100% buy it back guarantee. Take action now, use the complete package for 90 days and wear the tires off the system. If you aren't 100% satisfied with your investment, then I'll give you your money back as my gift to you. I want you to be 150% satisfied with the 4 Zones RSI coverage system. After all, my clients tend to stick around a long time and become my friends too. So follow the whole system, right? I want you to get out there and treat it like a rental car. Put it through its paces, drive all over the country, wear the tires off of it. And if you don't feel you've gotten far more than your investment, then I'll hop on the phone with you personally, work with you. And what I really want is for you to be totally satisfied. And that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488, and I'm bonusing in the quick case studies to boost your trading faster. And for a limited time, I'm giving it all to you for the simple, easy investment of $297. So go ahead and take action now. As you get set up, I will continue on here with any Q&A you might have, and even show you the live markets for those of you who have stuck here and stayed here all day and dialed into your momentum learning. And let me show you exactly what will happen when you join us. So you'll immediately get a login access email with details to enter the RSI Power Zone system at my educational portal. Okay, that's this guy right here. Now, once you log in, all the training you need is right here, where you can easily get to it and get started. Literally says right here. And you'll get the Zoom link invite to our next monthly group coaching live coming up soon. In fact, it's next week on Wednesday. And you're going to get those every month for life. So what's all this other cool stuff? A lot of it is undisclosed bonuses just for you. Okay, you're going to love it. We'd love to over deliver. So take action now, because this offer is only available for limited time and only for this MetaStock Online Trader Summit. So go ahead and visit hemaready.com/MetaStock to take advantage of this limited time offer and get my entire system for just $297. And I'm going to go ahead and, like I said, do a special treat. I am still getting up to speed on my use of MetaStock, so I'm going to bring over my charts that I currently use, but I'm happy to take ticker requests or go through live charts, and I'll come back to Jeff here to let me know what questions we have or any chart requests.
Hey, Hema, we do have quite a few questions coming through.
Okay, great.
Oh, I need to plug in my, I can't hear you. Give me just a sec. Gotta plug in my headphones. Okay, so Frank wanted to know what country you're located in. But you're here in the US. You want to get specific about what area you're in?
I happen to be living in Milwaukee, but yeah, that's where I'm right now.
Okay. Let's see. Han, this might be a secret, and it's okay to say it's a secret, but Hans wanted to know out of YouTube how the RSI zones were calculated.
So how they're calculated and the actual specific zones, Hans, I think is their name, I have in the system, because from experience, I have seen that with any other indicator in my own, like I was in your seats, right? I would go to trade shows and webinars and things with my dad and learn techniques. When we tried to do it ourselves, like backtrack and figure out what they were talking about on stage, we would lose money because we would not know the proper follow-up if we ever had a misinterpretation or we wanted to really know the nuances of a setup. So all of that is discussed in the system, and the RSI calculations are sort of like a publicly known thing. I mean, you can search the internet for how to calculate RSI. It's complicated. You don't want to do it by hand, but the settings that I use are best worked on with the guidance, and that's why most people don't include lifetime coaching for a one-time investment that still has a money-back guarantee. And I do that because I want you guys to have the confidence to get your questions answered once you start using it.
Okay. Let's see. S. Rockland wants to look at the Euro US dollar, please.
Take a look at the Euro US dollar. Okay, what was the first name again?
This was, oh, yeah, I don't have the first name. It's just S.
S. All right. So I'll bring that on my screen here in a second. So you should see that momentarily. Okay, so I am re-showing my screen. So you should still see the sign up link, easy to refer to. And let's take a look. All right. So I actually do every quarter, I do long-term reports on 20 top markets, including 6 currency pairs. I just published those a couple weeks ago. So my really long-term in-depth analysis for the euro, including forecasting, is in that report. But let's just talk about the short term here, and let's talk about the RSI power zones. So when you look at this chart right now, you can see that the euro has been consolidating since the beginning of the year, meaning we had a higher low, but then we had a lower high, and now it looks like it wants to make a higher low again than what it had in March. And notice, do you see how it's been dominated by the bear zones? That in itself can really help you with your trade setups. Now, one thing I see happening now is a disconnect between price and momentum, suggesting that this downside move is likely over. And I'm going to throw a line up on here that is easy for me to identify as a support level that has been very powerful. And I teach you my favorite method to find support and resistance in the system that works really well with these RSI power zone setups. So yeah, looking at this, I think that there's room for further shorter term upside, But I think if that occurs, we'd still need to get above the high from July 9th to suggest any stronger recovery in this pair back towards this 1.215 area.
Okay. Paul would like to look at POAI.
POAI. I don't even know what that is. Great. Predictive oncology. Interesting. All right. So let's take a look. So this looks like something that's had a lot of maybe thinner kind of trading volume, but that's okay. So in situations like this, what I like to do when it's a ticker I'm not particularly accustomed to, or I don't really know the action, I like to go to a longer time frame. So I'm still using the RSI power zones. And you can see this is what it looks like on a weekly chart. This is what it looks like on a monthly chart. And the monthly is telling me, okay, we're back at historical low levels, which are, very close to being close to these bottoms from back in 2016, back in 2013. So lots of buyers live down here. That's the way I would say it if I was kind of like showing this chart to my mom, okay? Lots of buyers live down here. So there's room to run up, but let's go from monthly to weekly, and then get more specific to the recent action. Because if you just look at it all squished up, you don't get the short-term story. All right, so one thing I'm seeing here is with the RSI power zones, I want you to look at this. See how they shifted up when price came and poked above the June high, and then the price is correcting back, but the RSI is not getting super weak. This is a huge disconnect between the two, where price looks way weak, but the RSI is not as weak. This suggests to me a decent likelihood of this breaking to the upside. But there's a lot of resistance in these weeks that we recently came by. You can see this lower high here, and I always use blue. If it will change for me, come on. Oh my God, color just won't change. All right, there we go. Blue for resistance and pinks for support. All right, so based on the weekly chart, which is a little bit easier for me to read right here, I see a likelihood for a move to the upside. Let's glance at the daily to see if there's any conflicting information to that. Well, the daily says that we are coiling around some key moving averages. And those are 3 moving averages that I teach in the system that are my sort of backup trend filters. All right. I like looking at price the way Gann did, using the highs and lows to determine the trend. But for those of you newer to trading or who kind of just want a moving average filter to help you determine trend, that's what this is here. And as you can see, it's pretty clear they're all going sideways, no matter what their settings are. But based on the information of the weekly and the daily, more than likely to break out upside than to the downside. Got to watch price to confirm.
Let's see. Ricky would like to look at NET, N-E-T.
N-E-T, okay. Oops. All right, so Cloudflare, right. Okay, so here we had long-term sideways range, consolidation, whatever you want to call it, and then a nice burst higher. And look at this right here. I mean, if this alone doesn't show you the value of RSI power zones, I don't know what will, because look at how this got overbought. And in more than one instance, okay, back here, over here, here again, it would literally touch or skim the bull resistance power zone, and that's when it was truly overbought. Do you guys see the value in that? Instead of just having one random level as overbought and one is oversold and kind of applying it across the board, by looking at bull markets as essentially living between the 2 green zones in momentum, or a bear market living between the 2 red zones, it really helps you out. So with what's going on here, we have a continuation of upward momentum and pulling away from moving averages. They're all kind of expanding. So it looks like there's good upside here. Now I'm going to do a little something for you. Okay, I'm going to pause the screen for a second because I'm going to do some quick analysis that is part of my trifecta, right? So this is taught outside the 4 zones RSI coverage system, but it is taught. And I'm going to give you a forecast for this market. And I'm going to do it in basically 15 seconds. So here we are. I'm about ready for you in 3, 2, 1. So I'm going to show this back to you and you will see it. All right. Do you guys see how now I have, and I'll just change the color. I have this blue date line, September 15th, and this price of 147. That is how quickly I can forecast using reliable methods. And those are, again, taught in a different system, but your understanding of RSI power zones can even boost that when you're ready for it. So everybody see here the sort of like intersection, the crosshairs between price and momentum. And that is where I think this market's going. So reaching that price by that date is this target. And the cool thing is the way I teach forecasting, even if it misses, you can still make money off of it.
All right. Stefan wants to look at Amazon.
Okay. So I think they're reporting earnings tomorrow, or was it today? I always get a little jumbled this time of year, but let's see where we're at. So here we are in the daily chart. This has broken higher. And again, barring any after hours activity, because that's not showing in my charts, Amazon broke out of a very long-term range. I mean, nearly a year here of going sideways. And the latest price action, actually right here between these 3 bars I'm about to mark for you, okay, there is a RSI power zones setup. And it's the type that allows you to be able to calculate an upside target. So if you look at that in the module number 2 and 4 zones RSI, you will learn how to do the calculation. You will learn how to recognize the setup. So based on that, Amazon has room to go higher so long as it continues to keep intact this low that it just made a few days ago. And that's what I see ahead for it.
Perfect. That's the end of the requests.
Okay, great. Well, like I said, I'm excited to have anyone who wants to dive deeper into momentum join me in the 4 zones RSI. And it's always great to be here with MetaStock and Jeff as the host, and hope you guys found a lot of value here.
Great job. Great job. Thank you, Hema. Appreciate every time you come in.
Sure thing.
Okay, awesome. So let's go ahead and kind of do this. I'm going to go ahead and kind of change over a little bit, and we will say thank you for coming. Before we do kind of close for the day, I want to say today is a very good day to take advantage of our summer special for all of these add-ons. We've got the Barry Burns Top Dog Trader, Rick Sadler's Patterns for Profit, OVI Trader with Cohen, the Fulgent Chart Pattern Engine, the subscription to Learn MetaStock, 3 months. All of this, the Unleash the Power of MetaStock, the 2 years of Stocks and Commodities magazine. All of these individually will be $3,831. Here today at the summit, it's going to be $1,999. So to take advantage of that, give us a call, 800-882-3040. You can also go to metastock.com/saleschat and take advantage of that as well. Yeah. And if you just want to try out MetaStock, we are offering that on our extended buy 1, get 2 months free extended trial. You can do that at the same numbers, 800-882-3040 and metastock.com/saleschat. Want to say thank you for all of our great presenters today. What a good session. I hope you enjoyed it. I thought it went really well. I hope you agree. Thank you for coming. And we'll see you at the next one. Thank you.